Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya, and let's take a look at how the markets are set up for opening today. Incredibly flat on the index right now. 23649 is what we're looking at as we speak. Remember, we are watching out for range-bound trade, particularly as the world digests all the moving factors, particularly relevant to oil and what's happening on that front. Price hikes also in the offing when it comes to fuel, and we're already seeing that kicking in across several states as well. What are the levels looking like? What should we be prepared for as we head into trade? Let me get Shell in as always. Shell, how's the setup looking this morning?
Good morning, Abha. It's Tuesday. Mangalwar hai, to Mangal hi hoga. I want to ask you, do you want good news first or very good news?
Very good news.
Okay. So Trump has changed his mind. He's not going to hit Iran. So oil is down. Yes. Therefore, equities are up. That's very good news.
Okay.
With your permission.
I'm only seeing a 6-point uptick on Nifty and today's expiry.
Yeah. So we'll put it in context.
Yeah.
So I'll request the PCI to kindly show us the 5-day chart or the long-term chart of the Nifty in the last 5 sessions, of which we will get the report card today, the weekly expiry.
Okay.
You've seen the Nifty fall about 0.7%.
Right.
And that was because oil shot up. Mr. Trump decided to again change his mind, and therefore there was this news that you might have hostilities resume in West Asia. And then auto index fell 4%. Small caps fell 5.5%. I'm talking about on the index itself.
Right.
So the small cap 100 and the small cap 250 index lost 4.5% and 5% respectively. So you will get a swing trade back.
Sure.
Now there is more good news coming. You wanted to say something?
No, I'm waiting for it to continue.
Okay. So the breadth on the Nifty and the Bank Nifty has turned better for the positive. I'll request the PCR to kindly show us the charts of the pharma stocks in the Nifty, which is Cipla, Sun Pharma, Dr. Reddy's and Divi's. Very strong gains coming in because weak rupee, dollar earnings, and therefore very strong moves coming in over the last 1 week or so.
Right.
That's held the Nifty on its way up. And of course, Bharti.
Bharti is doing really well right now, and yeah, we'll focus more on that. In fact, should we pull up a little bit about Bharti numbers and what they've been doing of late? I'm just going to try and pull up the most recent numbers as well, and in fact, even their subscriber numbers are going up.
Yes.
Their consolidation or their holding in the company is also strengthening.
I think that's the key that you hit upon. The holding in the company in Bharti Airtel of Bharti Enterprises of Mr. Mittal's family is now slated to be, that's the potential target of 51%. I'll get you the right number just now, but the stock is at 200-day DMA. And we've seen a high of 2171. This was in November of 2025. My view is that you would see that coming eventually. So Bharti is a stock to watch out.
Absolutely. And remember, it actually showed about a 10.5% rise in consolidated net profit.
Yes.
Which was a little below estimate, but revenues continue to see a jump. Consolidation is happening at this point of time. So these are the factors that are stacking up for Bharti at this stage. So that's on the telecom major.
Yes.
EBITDA was more or less flat. Mobile revenue growth also was just about steady at this point. Board recommended a final dividend of 24 rupees per share. But the revenue has crossed the 2 lakh crore mark. So if you're reading into signals, I think that's where the signal was at. Both India, Africa, India operations, key driver really going forward. So I think that's what the market's reading into in terms of the kind of ARPU and the kind of revenue potential that continues to be there when it comes to the telecom space.
Not only Bharti, Vodafone is benefiting by that shifting of the AGR dues and reducing them dramatically. Abha, Vodafone has doubled. Not that, going from 6 to 12 is really good. It's still in pain. But the promoter company is now back on the saddle.
Okay.
And that's a big plus. And of course, there is strength in the underlying space. And therefore, Indus Stars is also doing well. Our very dear friend Chandan Tapadia is with us. You want to say hello to him first?
Okay. Chandan, good morning. Let's get the setup from you as well. We were tracking telecom, but first let's get from you how you're viewing the session today ahead of expiry, key stocks or themes on your radar.
Good morning, Selji and Abha. Thank you so much for having me, and it's great to be with Market Veteran. And I'm sure I would add some value to the viewers. So yes, talking about market first because that is very important nowadays. Market is just tuning to the vibe of the global and geopolitical concerns. We need to focus on the intermarket studies, what the crude is doing, and we need to closely watch the USD INR. But if I look at the Nifty price setup, it has multiple support near 23,333. That's also a key important gain fin number, and it's very important to hold that level. And the good part is, yesterday it exactly formed the bottom near to the same level and formed a hammer sort of price pattern on the daily chart. So if it manages to hold 23,333, then bounce could be seen in the index towards 23,950 to 24,200, which is the volume weighted average for the week. So looking for some recovery, but we need to keep in mind that index is trading below key moving averages, so some hiccup will be there at the time of recovery. If I look at the data setup, FIs are continuously buying for second consecutive day, and that's the good part. On the last trading day, they bought to the tune of around 2,800 crore in the equity market. Put call ratio witnessed some surge, but again VIX is at 19.5. So because of that, dips could be bought, but volatile swings cannot be ruled out in the market. Talking about telecom name, if we look at the Bharti Airtel, the counter is bottomed out. We have seen a decent recovery from the lower levels of 1740 to 1940 marks. It has given a consolidation breakout on the weekly chart. So I believe some recovery could be there with support of 1885. Bharti has potential to extend the move towards 1980 to 2000. Looking at Indus Tower and all, these are also forming the positive price pattern. So I believe the entire telecom basket has been finding some support, and this some more swing could be there from current level as well.
Right. Good morning, Chandanji, and we are getting in touch after a very, very long time. A very warm welcome to you. We've been in touch for decades now, and it's always such a pleasure to welcome you. Pharma, of course, is the top performing index, as also many stocks have shown very, very sharp upticks, mainly because of how the rupee has moved. In your own setups, what would be the two strongest pharma picks?
Yeah, so very interesting question. And Nifty Pharma Index has been making high tops, high bottom on the weekly chart. In fact, if I look at this entire price movement of the month, it rallied by more than 6.5%, and given a consolidation breakout of last almost 22 months. And such kind of breakout at the time of market volatility gives some stability here that money will be parked in this sector as well. If you ask me the sector wise, I would go for counter like Sun Pharma, which has bottomed out given a consolidation breakout. However, it has the lower beta, so slow and steady movement will be there. But given the price behavior with consolidation breakout of more than 80-85 weeks, looks quite promising from current level. So with support of 1850, Sun Pharma can be bought for an upside target towards 1970 to 1990. Apart from that, we like Biocon, but counter has already seen a strong up move. In last couple of months, it was finding hurdle near 400, 410, but this time it has surpassed and holding the gain. So any decline could be bought with support at 410 for upside target towards 440 marks. So Sun Pharma and the Biocon could be two preferred name in the pharma.
Okay, a whole host of earnings due today as well. We've got Bharat Electronics, BPCL, Mankind, and Zydus. So even from the broader markets, we've got Mankind Pharma and Zydus Life Sciences again from that pharma and healthcare pocket that will be delivering today. We've also been seeing huge surges in like the likes of Aloris Labs and for example, Asai Life Sciences. So some of these names are also really jumping around. In fact, Zydus up 6.5% in a week. From some of the broader market names also, Chandan, let me get a perspective from you.
Yeah, so if you look at the broader market point of view, you mentioned about the Zydus Life. Yeah, it witnessed recovery, but the concern is the momentum is missing. 2 days back, it witnessed the up move with volume, but again, the follow-up is missing. So need to look at the key support zone. If you ask me, couple of picks which I'm closely watching, one maybe Arvind Mill. It has given a fantastic breakout on the monthly chart. So if you look at the monthly, it has seen a consolidation breakout of last 22 long months, and typically it formed a breakout from bullish pole and flag pattern, which has bullish implication. In fact, on the daily chart also, it gave a consolidation breakout of last 6-7 days. So with support of 455, it can head towards 500 plus. Any dip could be bought. We have seen positive momentum in the shipping counter as well. So
Yes.
shipping counter like SCI, G shipping also could be in focus for viewer as well.
Absolutely. My next question was on GE Shipping. Abha, this is one of the top outperformers in the mid-cap space in the past month. Of course, a record high. Chandanji, where is GE Shipping headed? 1700 for us, and the last 3 or 4 sessions have been immensely beneficial for long-term shareholders. What is the technical view on GE Shipping?
Yeah, it gave a major breakout just couple of weeks back and has been making a high top, higher bottom on monthly basis as well. In last 9 months, the counter has really rallied well from 1000 to almost 1700 marks, forming a rounding pattern on the weekly and the monthly scale. Chart setup looks quite promising. Momentum could continue. Only concern, it already rallied by 15-20% in just 2-3 days. So use dip or accumulate 2-3 times. Major support is near 1610. With that support, I believe it can extend the move towards 1770 to 1820 kind of level. And the good part is the entire shipping basket is doing well. So counter like G shipping, SCI could be in focus. And we have seen a massive surge in the delivery volume. In fact, G shipping yesterday rallied with trading volume of around 1.8 crore, and there is the massive for the counter, which is almost 20 to 30 times than average trading volume for the stock, which clearly indicates that accumulation and the serious buying is happening in the counter.
All right. Well, let's talk about earnings. You got JSW also in focus at this point. I'm just pulling that up, although that's on other factors. Then we've got Puravankara, Afcons, JK Paper, Triveni Turbine, iShares reporting today as well, Vascon Engineers. We've seen some very sharp reactions to earning. Chandan, any of these that pop out to you as numbers that you'll be tracking today as they report quarterly earnings?
Yeah, so to comment on JK Paper first, it has been making lower top, lower bottom on the weekly chart. It had seen a correction from 400 to almost 365. Good part is it is holding well above 50 DEMA, but the concern is momentum is missing. So I think some dip could be bought. It can decline to 350, 355 to again get some buying interest, or conditional trade may happen only about 382. So we need to closely watch on these levels as of now. Looking at Eicher Motor, Nifty Auto Index has taken a break or pause, and Eicher Motor has been making lower top, lower bottom on the weekly chart with a corrective move from 74.70 to 68.13. The good part is multiple supports are there near 6500 to 6600 zone. So if further correction happens, one can accumulate the counter near to those zone. One need to keep in mind that immediate trend is negative, but we are looking for buy on decline view with the setup that again bargain buying could happen at lower zone.
Chandanji, what is the generic view on gold and silver at this point of time? This week has seen very sharp increase in customs duty and other factors which the government of India has said in terms of trying to prevent serious gold purchases to help the current account deficit. What are the charts telling you for gold and silver as assets?
Yeah, thank you for the fantastic question. In fact, from last couple of months, I'm closely tracking gold and silver. Just last week, I came out with the positive setup when a consolidation breakout happened, and just after that, there was the announcement of the import duty. So if I look at the gold price movement, it formed the bottom near 1,48,000. If I'm looking at the MCX price, and then 3 days back, it headed towards 1,64,500. And after that, we have seen a correction, but this correction could be bought. So slight positive to range bound bias or declines could be bought. Major trend is positive. I'll closely watch the key support near 1,54,000. With the support on immediate basis, gold can head towards 1,65,000. Those who are looking for positional point of view can head towards 1,69,500. If I look at the silver, again, the news of import duty and all can give the volatile move. But just couple of days back, it gave a major consolidation breakout on the daily and the weekly chart. Now higher base is clearly being formed near support of 2,55,000, and with that support, it can again go towards 2,88,000 to 3 lakh. So decline could be bought. Overall positive to range bound bias in gold and silver. One can accumulate on any small decline. However, after the appeal from the PM, we need to focus on how to trade gold compared to jewelry, we can either take the trading bets or can go with ETF or SGB bond whenever we get the opportunity.
All right. Just looking at IOC's earnings as well, and we're
Yes.
watching out for BPCL today. IOC, we've got a potential risk. By the way, we could see a sharp fall according to Goldman if earnings risks persist. Even though right now the quarterly numbers have been pretty solid, and revenue from ops rose about 6.9%, net profit of 36,800 crore, that's up about 23,840 crores. So solid set of numbers, but huge risk right now in the counter. Chandan?
Yeah, so slight negative view, and in fact, as per the recent data, due to the crude prices, the daily losses are significant. However, there was just jump of around 3 rupees prices. So ultimately the hit is there in the margin. And if I look at the price behavior, it has been making lower top, lower bottom, now all set to break the immediate support zone. If I look at the IOC, the earlier support was near 130, and if holds below the same, downside could open to us 115 to 112. So setup is negative. In fact, on the weekly chart, it is now all set to give the breakdown from an inverted pole and flake kind of level. Looking at the BPCL also, the structure is weak. The bounces are being sold. Counter failed to surpass its 50-day exponential moving average. Same kind of story is there in HPCL, but that is comparatively finding lesser selling pressure. So BPCL and IOC are comparatively more weak structure than the HPCL, but trend of the entire whole marketing companies is negative as of now.
Actually, it's not really clear to what extent will the government pass on this pain of higher oil purchases to the consumer. I mean, we've had a 3 rupee rise in both diesel and petrol. That's, just a drop in a very vast ocean. So further price rises may help stem the fall in IOC and BPCL and HPCL. Signs of recovery, well, we don't know when that happens. Let's also look at some other structures in the market. Chandanji, ONGC, one of the top gainers in the last 1 week, 5.8% higher, and already firm oil prices are helping this counter. Record high is what we saw last week. What are the medium-term charts of ONGC telling you?
Yeah, so the medium-term chart for ONGC and the oil exploring companies are positive given the prices of the surge in crude oil. But only concern is counter is having some hiccup or hurdle near 300. Just 10, 11 days back, it headed towards 307. But sustained call writing is clearly visible at 300 strike in the derivatives data. So there is not allowing the counter to take the next leg of rally or momentum in the counter. But the good part is that any meaningful decline is being bought. In last almost 40 days, we have seen that 2 times or 3 times it took support near 275 to 278, headed towards 300 plus. So dips could be bought or buy on a decisive breakout about 300. But yes, the medium-term outlook is positive as of now. Major support is 275. On upside, a decisive hold about 300, 305 can take it towards 330 and all-time high of 345. When you talk about ONGC, we can also discuss about Oil India. Same kind of structure. Any decline towards 490, 495 can be bought for upside move towards 520.
Okay, that's on some of those names in the oil and gas space. Let's take a look at some of the other buzzers in the market. From the broader markets, what are your picks, Chandan? What are the ones that you are looking at? We've talked about some of those pharma, hospital, healthcare names, but it's been an interesting couple of weeks with a lot of stocks seeing good action, particularly on the back of news or earnings trigger. So where have you observed some breakouts or momentum building up?
Yeah, so in our initial discussion, I spoke about 2 names, Arvind and SCI, but apart from that, I'm closely watching the policy bazaar. One of the strongest price setup, if I look at the daily chart, holding well above 50-day ma. In fact, the 50-day exponential moving average is working well for the counter. Just a couple of weeks back, it surpassed, and 3-4 days back, it exactly took the support near 1600, which is the confluence of the 50-day ma or the multiple moving averages. In fact, on the daily chart, it has given a consolidation breakout with the formation of a strong bullish candle. So with support of 1705, look for an upside target towards 1800 to 1825. So policy bazaar, one can look at current juncture. And apart from that, I discuss about Arvind with the support of almost, I can say 455. One can look for an upside target towards 495, 500. So these are the couple of pick one can focus where we are expecting the relative strength and the strong price pattern.
Arvind, ladies and gentlemen, is already at a record high. We've seen almost 4 successive weeks of a very strong rally from 380 all the way up to 472. Chandanji, a view that you might want to discuss on stocks like Apollo Hospitals, Aster DM. The entire hospital space is also abuzz with gains, mainly defensive counters. What are your views on this sector? Any favorites?
Yeah, so I think let me first talk about Aster DM. I believe a small follow-up can see the rally of 5 to 10% in the counter. A fantastic narrow range price pattern is visible on the weekly chart along with formation of higher top, higher bottom. It is holding well above rising support trend line. Couple of days back, we have noticed a measure consolidation and accumulation. So here one should focus with support of 735. It can head towards 777 to 790. Looking at Apollo Hospital, yes, we are quite positive, but only concern is it has been consolidating from last 2 days. On 2 days back, it formed a bearish belt hold pattern, which indicates some pause in momentum. But the tailwind of the positive sector will take the declines as a buying opportunity. So overall bullish stance even after the range bound bias of last 5-6 days. I believe any small dip could be bought with support of 7800 for upside target was 8200 to 8350.
Chandanji, I just wanted to understand what is your gut feel about the broader market. We have discussed almost many sectors and many stocks which are showing breakout. Yet we seem to be unable to go beyond a certain level on the Nifty 24,500, 24,000, 23,800. What is your view on how the two main indices may perform in 2026, Nifty and Bank Nifty?
Yeah, so very interesting and a fantastic question, and thanks for putting me on a spotlight to pass the real conviction to the viewers. So, Selji, we are positive on the capital market theme as a whole, and in fact, BSE and MCX are my top favorite name from last couple of years, couple of months and quarters. So this sector is really doing well comparatively, and apart from that, capital goods is one of the strongest sector. Mainly when we talk about counter like Cummins, where trend is positive, or every small decline is being bought. L&T also witnessing some accumulation at lower levels. We cannot forget about the power and energy name. Selective shipping name could be in focus. But yes, when we talk about the major headline index, Nifty and Bank Nifty, I believe the higher base is being formed. However, VIX is not cooling down. Because of that, we may be in a broader range because market is finding bottom or support near 23,333. But at the same time, the India VIX, which earlier used to be below 12, 13 marks long back before budget, is now holding and hovering near 18.5, 19, 20, which clearly indicates that still we are worried from the intermarket studies and geopolitical concern. So because of that, hiccup will be there. But if you ask me, the view for next 3 months point of view, any decline towards 23,333 to 22,800 could be bought, and I have target towards 24,444 to 24,650 in the Nifty. When we talk about Bank Nifty index, here some underperformance is clearly visible, but just couple of weeks back, the major bottom were formed near 50,000. Now higher base will be near 52,500. With that base, it can head towards 54,500 to 55,555. So look for some buy on decline in a broader range, while selective like capital goods, capital market, selective auto ends, power energy, shipping could be on radar and can generate the alpha in this market scenario.
All right, let's take a very quick break on that note. We'll be back with more on the other side. live Dalal Street moves. We decode what matters for your money today, from stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Abha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action
Watch me as I bring to you the Business Today show
Monday to Fridays, 9:05 a.m.
every weekday at 3 p.m.
Only
only
on
on
India
India Today. A very good morning to all our viewers. You're watching The Burning Question on India Today with me, Anjali Pandey. And at the top of this hour, we're getting some breaking news from Pakistan. Pakistan has restored pre-partition names of Lahore streets. Lahore gets back Hindu and Sikh names of the streets. So Pakistan's Islampura is now Christian Nagar. Babri Chowk has reverted to Jain Mandir Chowk. In fact, Pakistan's Mustafabad is now Dharampura once again. So amid brazen human rights violation reports, rising Hindu persecutions in Pakistan, Pakistan has now restored the pre-partition era names of the Lahore streets. If we take a look at the names, Pakistan's Islampura is now Christian Nagar. Babri Chowk has been now renamed and reverted to Jain Mandir Chowk. Mustafabad is now Dharampura once again. India Today Global's Pranay Upadhyay is now joining us with more details on this. Pranay, how and what led to this change of attitude in Pakistan in restoring these pre-partition era historic minority names of the streets?
You can say, Anjali, that a good sense prevails because the renaming is part of Pakistan Punjab government's effort to bring back Lahore's pre-partition names, pre-partition heritage, and that many beliefs were slowly erased over the decades. And the Punjab cabinet meeting chaired by Chief Minister Maryam Nawaz a few days ago had approved a plan. However, this comes with a cost because it is believed to be this entire project for the restoration of names could cost around 50 billion Pakistani rupees to Pakistan government, Punjab government. And this is a very costly affair, so many people are also raising questions. But having said that, these are all cosmetic efforts by the Pakistan government or the Punjab provincial government, because the state of Hindu minorities remain a matter of concern in Pakistan, and many places of Hindu heritage and in Hindu temples are in a very dilapidated situation in Pakistan, and that remains a larger question about the state of affairs in Pakistan. However, these cosmetic affairs are also seen as effort to the polish or to clear the image of Pakistan in the international arena, that they are taking effort, they are trying to become inclusive, but however the reality remains quite different.
Absolutely, Pranay. That brings me to the next question. That is this a cosmetic step by communal Pakistan, and can history restoration matter if, on the other hand, the minorities still face violence and discrimination?
If you talk to people in Lahore or Karachi or many other big cities of Pakistan, people say that government might have changed the name of Jain Mandir Chowk to Zakir Nagar Chowk or any other name for that matter. But for common people or the common residents, the name still remain the pre-partition name. The old names were still in conversation and in their practices. So I think the good sense prevailed that the government of Pakistan and provincial government of Punjab, province of Pakistan decided to restore the old names. And in fact, many people, still take those names. They refer to those places with the older names only. And Lahore is a very historic city, which has very strong, historical roots of Hindu and Sikh heritage there. In fact, Maharaja Ranjit Singh, used to rule from Lahore. So it has, strong Hindu and Sikh tradition, though Hindus and Sikhs are now in a very, minuscule minority there in Lahore. But it's only 50 kilometers away from Amritsar city. So this remains a fact that, Pakistan in building a new Islamic identity, or many of the cities and many of these places were renamed after the Babri Masjid incident in India. And as a matter of revenge, or as a matter of a reaction, they change many places. But now if they have decided to rename those places, you can very well say that it's Dera Durust hai.
All right, Pranay, thank you for those details and for that context. So it still remains to be seen if this is just a cosmetic step that has been taken by Pakistan by renaming and restoring heritage. But on the other side, the attacks and the violence on minorities still continue. In fact, we'll show you the figures also, that how many minorities are persecuted in Pakistan. So 20% minorities were there at the time of partition. But now, if we take a look at the figures, the figure now stands at just 3.5% minorities are left in Pakistan. So from 20% at the time of partition to just 3.5% now. That shows the state of affairs of the minorities in Pakistan. Hindus now around only 2.2% of the population. So the Hindus are just 2.2% of the entire Pakistani population. Christians form only about 1.3% of the population, and blasphemy laws have been misused against the minorities, and that is what has led to the reduction and the drop in the percentage of the minorities in Pakistan. Also forced conversion of Hindu and Christian girls, and that is why the drop from 20% to just 3.5% now. So that is the state of affairs in Pakistan. Of course, the renaming, the restoration steps have been taken, but real action is still awaited as far as the minorities are concerned. And some more breaking news coming in. As per sources, Senthil Balaji might be in trouble. ED writes to Chief Secretary, accuses former DMK government of delaying prosecution. Cash for job scam. ED writes to Chief Secretary seeking sanction to prosecute Senthil Balaji. So trouble mounts for Senthil Balaji. As per sources, Senthil ED has written to Chief Secretary and has accused former DMK government of delaying the prosecution. This is regarding the cash for job scam, and ED has now written to the Chief Secretary seeking sanction to prosecute Senthil Balaji. My colleague Manish Pandey is now joining us with more details on this. Manish, trouble seems to be mounting for Senthil Balaji as ED has now written to Chief Secretary seeking sanction to prosecute him. Give us more details.
Well, Anjali, this is a case which the Enforcement Directorate is probing from last many years, and in 2023, Senthil Balaji was even arrested by the Enforcement Directorate. During the DMK regime, the Enforcement Directorate wrote multiple letters to the DMK government seeking prosecution sanction against Senthil Balaji, but it was never granted. Now, when the new government, Vijay's government, has come into power, the Enforcement Directorate has once again written a letter to the government asking them to sanction them for prosecution. Now, Anjali, why this is important? Because according to the Supreme Court guidelines, the new guidelines, even Enforcement Directorate needs prosecution sanction to prosecute a person. And as far as Senthil Balaji is concerned, remember, he is a former minister in the DMK government. According to Enforcement Directorate, there are several concrete evidence against Senthil Balaji, and once the prosecution sanction is granted, then only trial in this matter can begin. So it is going to be challenged for even Vijay government also, whether they should grant prosecution sanction to the Enforcement Directorate or not. But ED sources are claiming that they are hopeful that they will be given prosecution sanction to prosecute Senthil Balaji.
All right, Munish, thank you so much for getting us all those details. We'll keep coming back to you for more updates on the story. So trouble clearly mounting for Senthil Balaji in the Cash for Jobs scam. And let me now go across to Abha Bakaya of Business Today TV with all the updates of the markets in this business show. Abha, over to you.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-presented by Canara Bank. Together we can.
Good morning, you're with us here in Business Today. I'm Abha Bakaya. Let's take a look at what's making news at this hour. Global crude oil prices drop after Donald Trump says he has paused a planned attack on Iran, cautious optimism in Asian markets, gold and silver cool off. Oil marketing companies in focus after a second fuel price hike in less than a week. There is also more relief after the US extends its waiver for the purchase of sanctioned Russian oil for 30 more days. Adani Group shares in spotlight today after Adani Enterprises agrees to settle case around purchase of sanctioned Iranian LPG from a Dubai-based trader. The group to pay $275 million to the US Treasury. Rare setback for the world's richest man. Elon Musk loses case against Sam Altman. Jury in California rejects his claims that Altman betrayed OpenAI's mission by turning it into a for-profit business and clears the way for its IPO. IOC Q4 shines with a 78% jump in net profit, revenue up 7%. Strong refining drives earnings even amid global crude volatility. Stock remains resilient as attention now shifts to BPCL, which will announce its March quarter today. Rupee continues to trend weaker. It's 2 paise lower at 96.37 to the dollar versus 96.35. Still trending around that 96 mark, so we are continuing to see heavy pressure on the currency. No major move in precious metals this morning. MCX silver down about 500 rupees and gold up just about 300 rupees to pretty much steady for the moment. We're joined by Ajay Baga this morning, senior market veteran, as well as Shailendra Bhatnagar from Business Today, counting down to market opening at this point. Let's first get a look at the setup. Shail, it's expiry, so first let me come to you on the levels, and then I'm going to go across to Ajay for a detailed look at all the factors at play.
Well, Abha, I'll just make it short and quick. Mr. Bagga doesn't need to wait for what the weekly expiry will be. So flat trade so far. And what we are basically looking at is strength in pharma, healthcare, capital markets, and a whole host of new sectors such as consumption, FMCG, autos in particular. IT is going strong, so that is something to be looked forward to. But a bit of a recovery in the small cap and the mid cap space is what I'm looking forward to, and some kind of profit booking in pharma. Abha.
All right, Ajay, a very good morning to you. So many moving parts right now. We're seeing a pause in West Asia, and despite jitters over the weekend, it seems like we're continuing to be in pause mode on that front. Oil is still keeping us on its toes, even though it's just somewhat cooling off this morning. How are you viewing the markets right now?
Yeah, very, very difficult to read the geopolitics, Abha, and delighted to be on your show and with Shailji as well. So overall, if you see the way things move, Trump yesterday said that he's postponing the attack on Iran. Nobody knew that there was a bombing of Iran that was calibrated for Tuesday. And then in the White House press meet, on the sidelines of some Medicare, announcements, he said that 2 to 3 days the three major countries are going to negotiate a deal with Iran. So earlier he was pausing because of Pakistan on April 21st. Now he's pausing because of the Saudis, UAE and Qatar. So let's see how that goes. Then he hastened to add that we are still on a 1 second trigger. So my army is standing by for my command if they don't negotiate. So very difficult to gauge what is the end game. Our best hope is that Trump just calls a victory and says now the regional powers will figure it out and we are exiting after a fabulous victory. We are happy to give him that victory and I hope the Iranians get some sense and open the strait. So the world is really suffering. Yesterday we had an analysis that nearly 76 countries have come out with emergency measures to conserve oil products. So the world is suffering, inflation is going up, and it will lead to second order effects down the line. So the sooner this meaningless conflict comes to an end, better for us. That is the big issue. That is the overhang over the market, Sabah.
Sure. Ajay, since you touched upon it, and given the way we're seeing pressure across world economies, and with a new Fed chair, pretty much right now consensus seems to be ruling out any kind of cuts, which Trump would of course like. Do you see FI money continuing to exit? Because right now there doesn't seem to be a case for them to be coming back. They're also preferring other markets in Asia.
Yeah, absolutely. Spot on. It's a combination of 2 or 3 factors. One, with the US yields rising, and you have seen money market funds in the US cross all-time highs. So when you are getting 4.5% risk-free with an appreciating dollar to boot, there is very little that will excite these funds to move into emerging markets. So normally, higher US yields lead to emerging market outflows. Good news is we were anyways 2.5 years of outflows. So how much more will really go out? Hopefully, we won't see too much of outflows, but inflows will need a combination of better earnings, more steady earnings, some kind of AI plays coming through, at least on the application side. Our IT companies recovering and showing use cases which justify money coming back into India, and then some taxation concession. I think that's become a hot topic, especially after Samir spoke about it quite vocally, and it has come a center of plate, but it's been in the FI mind for a long time, the depreciating rupee, and on top of that you get taxed. But the good news is we have given an exit. So huge amounts have gone out and no doors have been shut, no gating has happened in India. We have been able to provide an exit. That should help us in the medium and long term, that people will see us as a liquid market where you can take out substantial liquidity on a sustainable basis. So it is a stronger market that way. Stronger hands have come in, retail hands have come in, which are long term. And most of the hot money hopefully has gone out. There is a lot of analysis showing that as well.
All right.
Yes.
Quick look at the opening then first. Just about 70 points up on the Nifty. 23723 is what we're looking at right now. Let's pull up some of the indices and see where we're at. Nifty Bank just marginally up right now. Let's pull up the Adani Group counters. Of course, news-based reaction anticipated there on the settlement of that case. IT is looking very strong, 2.5% higher. Remember, OpenAI winning that case versus Musk and IT. Otherwise, also just been seeing a little bit of a pullback of late. Currency is also hovering at about 96 right now. All these factors feeding into what we're seeing there. Adani Group companies, all of them seeing substantial moves today, particularly enterprises and green that we're seeing on your screen. OMCs on the price hikes as well as IOC numbers. BPCL set to report numbers. Let's pull up some of the OMCs and see how they're trading as well in today's session so far. India also to keep buying Russian oil irrespective of the US waiver. That's the latest news coming in. Losses are starting to taper. So BPCL up ahead of numbers, and IOC, let's pull that one up for you as well. HPCL also trending higher, 1.5% up. OMC is definitely in the green this morning. All right, Shell, what are you picking up?
Abha, the advance decline is strong, so probably we'll see a fairly decent uptick on the weekly expiry day. I'm looking at the pharma space, fresh record high on Laurus Labs, 1327, but the Bombay Stock Exchange, Solar Industries and Sai Life. These are the other stocks that have hit record peaks. And in terms of strong volume, well, it's the Adani stocks across the board. Adani Enterprises 1.8% higher, Adani Green 1% higher, Adani Power 0.26% higher. So it's a nice green tick that's there on the market, at least in the first 10 odd minutes of trade. Let's see how it goes. Maybe Mr. Bagga can comment on the rallies that we are seeing in the IT space. Is the worst behind us, Ajayji, as far as the tech space is concerned domestically? And of course, your view on pharma as well. Record highs there, both a play on the rupee.
Yeah, absolutely. I think we had the Cognizant CFO make a very interesting observation that probably the AI cut for IT is halfway through, and markets will, being forward discounting mechanisms, will start discounting that. We are really waiting for a pickup in the AI revenues, the AI use case revenues, the application revenues for our IT service companies. So what you see abroad is cloud services revenues really soaring very fast to decadal billions. And we need to see our companies then. There is a reset of the model. It won't be how many people you're able to throw at a problem at the lowest cost. It will rather be how you go up the value chain to use the AI tools to generate more use cases for the company. So that is the crux, and our companies have not provided really great growth on that front yet. There is a lot of talk. There's a lot of talk of re-engineering of talent, retraining of talent on that. And definitely there are use cases out there. The companies are very hungry to see how AI can be established within their portals. So our IT companies have a chance there. But what has happened is most of the FI money has exited out of IT. It is more domestic contrarian plays who are coming in. Are you going to be early? I think still, Shalji, you would be early in getting into IT right now, but the valuations have come down. Valuations have come down to decadal lows. The kind of value these companies have lost. They are well-run companies, good cash flows. Only thing is how much of that cash flow is going to stay. And in terms of pharma, I think it's an evergreen story. The rupee helps. And despite outperforming, I would not short pharma. Maybe in the short term, you can take some money off shorting them. But overall, I think it's an evergreen sector. And we have multiple drivers, 5-6 drivers on the pharma story.
All right, so pharma, IT, some of the themes to cover there. Ajay, if you had to look at one theme, I mean, you've already marked some that the market's focusing on, whether it be IT, whether it be pharma. Where else do you feel we're perhaps going to see momentum emerging, whether it be as a dark horse or whether we're just continuing to come back and ride on the consumption wave? Where do you feel we're going to continue to see strength build up post this nervousness?
Yeah, I think consumption will be constrained this year, not expecting too strong a monsoon also. We are an agrarian economy in terms of consumption, even though production-wise we have 15% agriculture. But a lot of the agrarian economy is monsoon-linked. So some amount of consumption will get hurt with a poor monsoon. I would rather say that we are expecting One, the defense to continue to do well. Valuations aren't cheap, but that's a mega trend globally, and we are importing substantial numbers. So defense. Second is renewables. So energy security has become national security. Look at the PLI scheme for coal gasification, for example, 37,000 crores coming in. That will lead to nearly 100 million tons a year of coal gasification coming on stream. Again, most of the companies are unlisted or they are within conglomerates. They are part of a bigger company. So very difficult to play it as a theme right now, but we will get the opportunities. And then the providers into this renewables, energy security, coal gasification, all these industrial companies who are the providers, who give the engines, who give all the grids, who set up the grids, who set up the connectivity, who set up these gasifier plants. I think those companies will do well. So consumption, Abha, not very convinced right now, given the rural demand should taper off, given poor monsoon. We'll have to wait and watch. The government's hands are tied in terms of bringing in a counter-cyclical stimulus. So if monsoon was going to be subnormal, you would have expected some more fiscal weightage into the economy. But the oil price is tying the government's hands, and government is already down about 3 lakh odd crores on higher fertilizer subsidy expected, 20,000 crores on cooking gas higher subsidy. So that will go to 55,000 crores, and loss of revenue on the oil side of 1.5 lakh crores. So about 3 lakh crores fiscal is already impacted. Hands are tied to that extent for counter-cyclical measures. So let's see how that comes. I would play these energy security, renewables, power, these kind of themes might do much better.
All right, that's a whole host of pockets to choose from. Ajay, so if you had to calibrate your portfolio at this time, would you be changing it? Would you be tweaking it? Would you be waiting perhaps for us to bottom out some more? Is this the right time to buy or nibble at pockets like an IT or a pharma? How would you be recalibrating the portfolio right now?
Yeah, see, I have been out for the last 2 months, not investing more, and that has been my call. I think oil is going higher from here. Iranians don't seem to be in a mood to play ball. I'll be very happy if I'm wrong. But if this continues, oil could go to $130, and that creates a lot of issues for an oil importer like India. So I would be on the sidelines still till we get some idea of something coming through. The problem is earlier you could take politicians on their word globally. Now you have diametrically opposite views that are spewed out within ours. So it's very difficult to make a call of what is actually the ground reality. Is Iran near to collapse, or can Iran hold out for months on end? Is the US done with and they want to get out, or US will also make it an issue of national pride? What do the Gulf countries want? Very difficult to make out in all this opacity. So I would say better to stay on the sidelines. You might not get the next 5% move, but at least if we get geopolitical clarity, then you know what you have to look at: higher rates, higher inflation, constricted oil prices, instead of easing, a rising interest rate scenario, higher yields globally, and the AI concentration risk, which will come home to roost, hopefully not for the next 1.5, 2 years. At least you can focus on the economics then. But right now we are just on the geopolitics, which is overlaying and very difficult to make a call. So I would still stay on the sidelines, Sabha.
All right, so still stay on the sidelines. Sound commentary coming in there from Ajay. Shell, anything else you want to point out in the market, or last question to Ajay before we wind up?
I'll take the opportunity to have the last shot at Mr. Baga. Ajayji, are you comfortable with the way the rupee has depreciated, both in terms of pace and value? And do we still have the worst ahead of us as far as our currency is concerned?
Yeah, I think we are headed to 100. There is no driver as such to have a stronger rupee. RBI has done its bit, but if you look at our 690 odd billion FX reserves, out of that 100 is a short lying in the NDF market. Then you add on the NRI and the FPI. Most of the reserve is covered in that. So that is the real risk. If the FPI selling continues, NRIs will stay put. NRIs, we have seen, I have sold NRI bonds at every crisis over the last 40 years. So I would say the government should bring in a war bond or something. The pricing is sweet always. Last time we did it, Shalji, in 2013, you will recall. In one day, my bank had gotten offers of about 5 billion euros, and we could only fill 1 billion out of that because that was the capacity RBI gave us. So there is a lot of money wanting to invest in India. You give them a sweet deal, we can turn this around. This time around, RBI has done all the work, heavy lifting behind the scenes, but we need to instill some more confidence. And that, the myth of the very huge FX reserve is actually not there. If you look at the NRI and the FPI, accumulations that we are holding, that is what spooks the market, apart from our very poor balance of trade. But on that, we have invisibles and we have remittances. Now, how much of those remittances get hurt in the Gulf, we will get to know in another couple of months as the data from RBI starts coming out. But overall, rupee is looking weaker, and it's become a traditional or a very favored market game to go short the rupee. So we'll have to do some tax heavy lifting, give some tax concessions. I would say bring in an NRI bond and look at some more confidence instilling measures for the foreign investors.
Mr. Baka, one point I wanted to ask from you was, why doesn't the government ban gold and silver ETFs and maybe force mutual funds to sell the underlying holdings with them? That will cool at least the gold and the silver market.
See, better than this, very interesting point you raised. And I was with Mr. Gurumurthy last week. And if you recall, in 2008, he had nearly convinced Pranab Mukherjee for at least the gold and the gold's coins and bars lying with the Indians, if we give a way out for them. So what do we need, Shalji? If I have inherited gold coins and bars, I need that I don't have to pay tax on it, because otherwise it's lying in my locker. I will bring it to a bank, give it to a bank, they will value it, they will credit my account. Don't tax me. And don't ask me the source, because it might be multi-generational or it might be unaccounted, one of the two. There is about 10,000 tons lying with Indians out of the 40,000 tons gold that we hold. 10,000 is in bars and coins. Of that, even if we can get 2,000 tons, you are set for the next 3 years. You don't need to get any gold from outside India. You are really set. So a scheme like that, and Mr. Gurumurthy is presenting to the government again. But after the Supreme Court last time strictures on unaccounted money and all, there doesn't seem to be the will there. But that's a fabulous scheme, if you ask me, because you will pay in rupees, FX is conserved, plus global prices will crash. Moment it comes out, India ain't going to be importing 800 tons a year. Global prices will soften like anything. And then RBI can go ahead and buy more from the global markets. But you can get 4,000 tons very easily. If we
Ajay, I'm going to have to leave it there. Clearly, we could continue this conversation for hours, but thank you so much for joining us this morning. And I'm going to hand over back to our colleagues at India Today for all the political news and updates. We'll be back with you at 3 p.m. for market closing.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good morning, ladies and gentlemen. It's a fairly decent start to a Tuesday. There is the weekly expiry to look forward to. Positive developments coming in from overseas markets, which is in the form of profit booking on Wall Street, as also Asian markets. Oil is calm because Mr. Trump has now decided not to hit Iran for the moment. When his mind will change, only time will tell. But for the moment, it's looking good as far as Indian equities are concerned. The Nifty 93 points higher, 23,700 is back with the bulls. Bank Nifty is in the green. Strength in the mid-cap index. Look at the mid-cap 100 index, 480 points higher. The small-cap index is 132 points higher. This is a swing trade in the making. Remember, in the last 5 trading sessions, the small cap 100 and the small cap 250 indices have lost anywhere between 5.2 to 4.7%, and that's the change that is coming back into the market. Now, across the board, advanced declines are very strong. 2,200 shares are in the green, 720 are in the red, so it's an easy 3:1. The IT index, ladies and gentlemen, is on a tear, 3.7% higher, led by TCS and Infosys. Both of them are also the top traded counters on the National Stock Exchange. TCS up 3%, Infosys up 4.3%. Apart from that, you have strength in the capital market space. Bombay Stock Exchange fresh record high, 2% higher. The Adani Group stocks are doing pretty well. Adani Green, Adani Enterprises and Adani Power are amongst the top traded counters, both in terms of gains as well as value. Tejas Networks 5.5% higher. Schneider Electric 4.5% higher. And of course, within the IT space, HCL Tech, Coforge, Birlasoft, Emphasis, Persistent, Tech Mahindra. These are companies that are showing strong gains. We are shortly going to be joined by Mr. Arpit Beriwal. He's the person looking after technical and derivatives research at Motilal Oswal Financial Services. Good morning to you, Arpit ji. A very warm welcome. Finally, some green on Dalal Street today. How are you reading sentiment?
Very good morning to all. If you talk about the headline indices, so Nifty yesterday you see in a very sharp gap down opening, but the good part is good recovery was seen from the low levels from 23,333 levels to almost 23,650 levels. Today, after a positive opening, we have seen the index higher towards 23,750. But looking at the overall weekly setup, index is forming lower rise structure from last 3 weeks. That clearly indicates that some pause is seen at the higher levels. However, at the same time, multiple supports are seen near 23,350, 23,400 levels. So our sense is on the daily scale, index has filled the gap up area that made on 8th of April 2026, and good recovery was seen from lower levels. But looking at the level wise, index is likely to trade between a broader range between 23,400 to 23,850 zones. A closing above either these levels will set the next tone of momentum for going forward for the indices. In the meantime, index is likely to consolidate between 23,400 to 23,850 levels. From expiry date point of view, 23,500 would be the immediate support, whereas on the upside, 23,850 would be the hurdles.
Okay. Arpitji, 2 stocks which find mention in terms of strength on your radar. What are the technical as well as, F&O statistics telling you as far as strength is concerned on Dalal Street?
So definitely, if we see from the pharma space, pharma index is very strong, and we have been quite outperforming in last couple of weeks. So if we see pharma index is given a monthly breakout on the monthly time frame after almost 2 years, and good momentum is seen across the pharma space. So within that, Sun Pharma would be a first pick. And look at the overall setup wise, Sun Pharma is a very strong setup on the monthly time frame. On the weekly time frame, it has given a range breakout above 1850 levels. Today, some cool off is seen from the higher levels, but looking at the positional setup, a very strong setup can be seen, a move can be seen towards 2000, 2050 plus levels with major support around 1820 levels. Along with that, second counter would be from the large cap space itself, that is Bharti Airtel. So Bharti Airtel, we have seen a very good recovery from the lower levels. It has retouched its monthly breakout and a good bounce is seen from the lower levels. On the weekly setup, it has given a range breakout above 1880, 1890 levels. So looking at the risk reward setup, it's a reversal play. So definitely risk reward is quite favorable. With major support around 1890, the stock can head towards 2000, 2020 plus in next couple of sessions.
Yes, Bharti Airtel, of course, the tailwind of a strong quarterly performance, plus this view that the promoter entity will raise its stake to beyond 51% is driving the stock up. So strength there. And of course, Sun Pharma. Pharmaceuticals generally are export-oriented companies, and with the rupee weaker, it essentially means better margins, higher revenues for the same set of business that they do. And as Mr. Beriwal points out, Sun Pharma is doing immensely well. In fact, stocks like Gland Pharma, look at Glenmark, Divi's Lab, and many other stocks, Cipla in particular, have been the cornerstones of last week's very sharp rally that we've seen in the pharma space. Mr. Beriwal, a view that you might have on maybe IOC and BPCL?
If I see overall the OMC companies, so definitely if you see the impact of the crude, definitely the stocks has been under pressure. And particularly if you look at the chart structure of BPCL, so if I see the weekly setup, the stock is still forming lower structures from last 3 to 4 weeks. That clearly indicates the upside is capped. But the good part is that on the daily scale, it is kind of forming a double bottom pattern in range between 280 to almost 300 levels. So look at the setup wise, BPCL is likely to trade in a range between 280 to 300 levels, as upside is also capped. So if I have to play within this range between 280 to 305 and 307 levels with immediate support around 280 levels. If I look at the chart structure of IOC, so relatively IOC is still in negative, and look at the setup on the weekly and the monthly setup, there is no major reversal. So it's better to wait for any major reversal for IOC for any change in stance, and we will be looking at the level that is around 137 levels on closing basis for any change in reversal. Till then, it's better to trade within BPCL as the structure is still sideways to range bound movement for next couple of sessions.
Any strong mid caps that you see outperforming on technical charts?
So definitely, if we look at the sector along with the pharma, the second sector is the exchange sector. And if we look at the sectors or stocks such as BSE, MCX, so we have been quite positive on this counters from last couple of weeks. And look at the setup wise as the mid cap index is heading. So definitely we can see fresh momentum in this counters. So within the capital market, MCX and BSE would be a preferred picks where we can see good 4 to 5% move in next couple of sessions. So BSE major support is around 4100 for an upside move towards 4400. MCX also a very strong setup, immediate support around 30 to 50 for an upside move towards 3600 plus levels. Within that, one more counter that we like to focus is on the power space, and that is Adani Power. So definitely Adani Power also has seen a very sharp up move. In last couple of sessions, we have seen some cooler from the higher levels, but the bigger trend is still positive. So looking at the sense, major support would be around 210 levels. The stock can head towards 230, 235 in next couple of weeks time frame.
Okay. What we'll do is we'll take a detour into the market. As of now, the Nifty now hovering around 23,750, 705. Intraday high was 23,768 and the low is 675. The Bank Nifty is back in the red and nothing to be worried about. The first 20 odd minutes of trade have seen a bit of profit booking at higher levels. Let's analyze the F&O space in terms of gainers. Of course, I have marked the entire set of IT companies which are dominating headlines at this moment. Apart from that, you have from the defense space, Solar Industries, fresh record high, 2.5% higher 18,435. Policy Bazaar 2% higher, 1785. You have Dixon Technologies, Angel One. I am purposely not marking IT because of the top 20 in terms of gainers, I would imagine that 13 odd would be IT stocks. Look at Coforge, 4% higher. Look at Tech Mahindra, 4% higher. You have strength coming into HCL Technologies, 3.6% higher. Across the board, the rallies very, very sharp. The rupee, ladies and gentlemen, is pausing for today. Gains, yes, it's up, barely up, 96.36, 3 paisa gains and nothing much to talk about. I'll also mark the record highs in the market today. I'm sure there is BSE and MCX already there, but Gland Pharma 2217, this is a 52-week high. GE Shipping, fresh record high 1753. Mr. Beriwala, view on GE Shipping at current prices?
See, all the shipping space has been quite strong, and if you look at the chart structure of particularly GE Shipping, so definitely good momentum was seen in last couple of weeks. In last few days, some cool off was seen, but look at the monthly setup and the weekly setup, very strong setup on the monthly time frame, and a classical cup and handle pattern breakout on the weekly time frame. So looking at the setup wise, the stock can definitely head positionally towards 1900, 2000 plus levels in next 2 to 3 months time frame. Immediate basis 1650 would be the major support. The stock can head towards 1850, 1900 levels with overall positive bias and a very strong setup momentum across the sector.
Okay. What we'll do now is again dip into the broader markets. Ladies and gentlemen, I'd like to point out the earnings that we have today, something that our research team will be tracking. So from the railway space, RITES. This is a company that has going to declare its earnings today. Let's see the price of RITES on the screen, 210 for you. And the previous earnings came on 4th of February. We've seen an all-time high of 412, now at 210, 1.5% higher. We'll also look at the hospital space. HCG is going to declare its earnings. This is a multi-bagger stock and done phenomenally well, 641. All-time high is almost 800, so it's pretty much there. Earnings for the third quarter going to come in. From the government space, 3 companies, BEL, which is the top defense contractor for the country, is going to report earnings. All-time high 473, you're almost there, 430. Keep an eye out there. From the fertilizer space, you have Gujarat State Fertilizer Company, GSFC, which is going to report its third quarter today. 175 for you, 3.35% higher. All-time high is 322. Stock has halved. Mr. Beriwal, we'll take your view on BEL. This is a very high beta counter and has done immensely well on the charts.
But definitely, if we see the bigger time frame structure on the monthly and the weekly time frame, the stock is consolidating in a broader range between 400 to 444, 450 levels from last couple of weeks. So in last couple of days, we have seen a corrective move from 445, 450 levels towards 410 levels. And looking at the daily setup, the stock is trading near its 200 DEMA. So yesterday, we have seen a good recovery from the lower levels. So looking at the overall setup wise, the stock, the nature is the stock tends to turn from the support zone and where it's fine hurdle at the high levels. So looking at the setup wise, the stock is available a good risk reward setup with major support around 410 levels. The stock can slowly head towards 435, 444 levels. And as the result season is also going on, so we'll be waiting for that. But overall, look at the setup wise, bias will be positive with major support around 410 levels for an upside move towards 444.
Okay. We'll also look at the situation in the market when it comes to volume buzzers. Let's see what we can get in terms of how stocks are moving. There is First Cry Solutions, 8.8% higher, very heavy volumes, 34 lakh shares traded, 2.5 times the average. I won't mark IT because it's there across the board. Gland Pharma again making fresh moves. RPG, Gland Pharma for you, yesterday the counter was up 15%, another 3.5% rally. Not many people know 98% of Gland Pharma's revenue is not in rupees, it's in overseas denominated currency, and 50% of 98% is in dollars. It's a no-brainer. Arpit ji.
So as we already discussed at the start of the session, pharma index is in flavor, and if you look at the stock, definitely the stock is turning from its major support zone. So if I look at the monthly setup, the stock is almost giving a range breakout on the monthly setup after 15 to 20 months above 2150 levels, and you've seen a sharp up move on the weekly time frame. So looking at the setup wise, a closing above 2200 can definitely propel the stock towards 2400, 2500 levels. So overall, to play the reversal play, the setup looks quite strong with major support around 2050. The stock can head towards 2400, 2500 professionally. Having said that, it's a high beta counter, so you have to maintain the stop losses strictly for a trading perspective with major support around 2050 for an upside to move towards 2500 plus levels.
Okay, it's IT all the way, ladies and gentlemen. We'll look at how the Nifty is moving on IT companies. Infosys 4.5% higher. When was the last time you saw it? 51 rupees up. Contributing 40 points to Nifty's total of 100. TCS 3.5% higher, contributing 17 points to Nifty's total. HCL Tech and Tech Mahindra are the other two gainers, respectively 4% and 3.5% higher, adding to Nifty's gains. Reliance and SBI also in the green. What's pulling the Nifty down? Not much. ICICI Bank, Bharti Airtel, Hindalco, Kotak Bank, ONGC and Ultratech Cement. That's the state of play. I'll again go back to the broader markets when it comes to the advanced decline ratios. 2167 shares in the green, 675 in the red. Out of 19 indices, 18 are in the green. The metals index is the only one in the shade of mild red, but you won't be worried about that one. IT, next 50, Nifty 100, 200, 500 indices, all in gains. Mr. Beriwal, what are you observing?
So definitely if we see a classical sector specific action is going on, and if I see IT index, if you particularly, this sector has been a huge underperforming last almost 1.5 to 2 years. So definitely the pullback, the move that we are seeing is definitely supporting Nifty, and because of which Nifty is relatively outperforming and holding above its support of 23,600 levels. On the contrary, if you see the bank Nifty structure, so bank Nifty is relatively underperforming from last couple of weeks as the selective private banks are not seen much more momentum. So I think going forward, stock specific, sector specific action is likely to continue. One more thing we'd like to add is India VIX, that is at elevated levels around 18, 19 levels, because of which we are seeing good swings within the range. So our sense is that India VIX needs to cool off between 15 levels, below 15 levels for any much more stability in the market. But till then, the broader market is likely to outperform its selective mid cap, and sector specific approach is likely to continue.
I'm also going to point out, ladies and gentlemen, stocks that are their previous month high, which essentially means that you are going to see a channel breakout. These are very, very important changes in the market and need to be looked at. From the pharma space, there are many. Let me just take their names. Markson's Pharma, 221. This is a small cap pharma company. The previous month's high value was 196. We are now at 221. This is what looks good today. I'll request the PCR now to show longer term charts. Let's see weekly charts so our viewers can make out the changes that have happened in the stock price. I'll request the chart of Ipca Labs, now at 1645, and the previous monthly high was 1620. GE Shipping we've discussed, Gland Pharma we've discussed. I'll also point out Apollo Microsystems, 334 is what the current price is, and the previous month high was 312. So these are stocks which are showing very, very strong momentum. And let me also look at some breakouts that are happening in terms of technicals. Navin Fluorine, this is a stock that Arpit ji should be very, very comfortable with. Fresh record high, 7,119. Arpit ji, how are you watching the chemical space and a view on Navin Fluorine?
So if we see overall, the chemical space has been in a mixed bag. But if we talk about Navin Fluor in the looking at the setup wise, it has been a huge outperformer. So if I look at the monthly setup, the stock is clearly in uptrend, forming higher rise, high low structure on the monthly time frame. On the weekly time frame, a good consolidation was seen, and slowly steady the stock is heading higher. In spite of in last couple of days fall, the stock is holding well above its short-term moving averages, and major support is seen around 6,800 levels. So looking at the setup wise, the stock can definitely head towards 7,500, 8,000 levels, positionally next 2 to 3 months time frame. Image basis 6850 would be a major support level. The stock can head towards 7350, 7400 levels.
Okay. I'm also looking at longer term breakouts on charts. Let's look at how strength is coming into, let me just, this is just one stock that I was able to get into. Okay, Deepak Fertilizers, 1280, very, very strong on the daily charts. Nykaa, let's look at Nykaa. This is a high beta counter, 271 for you, Arpit. What are the charts of Nykaa telling you?
So if we see the overall the e-commerce space and the new age space, Nykaa, if you look at the technical from the monthly time frame, it is trading in a very tight range from our last almost 6 months between 240 to 275 levels. And look at the setup wise on the weekly time frame, the stock is trying to break its previous hurdle zone around 275 levels. So our sense that once it closes above 280 levels, the stock can definitely see a good spurt of 15 to 20% towards 320, 380 levels. But immediate basis 280 is a major support hurdle zone. Once it closes above, fresh momentum can be seen towards 320 plus levels.
Nykaa, let's look at the longer term chart. The stock has actually appreciated about 37% in the last 1 year. So that's a big plus that is in the market. Yes, fairly strong volumes coming in on this one. Let's also quiz Arpit on many other stocks which are showing this kind of strength. BHEL, Arpit, what are the charts telling you? There is a retracement of about 5% from its most recent high, 395, and an all-time high was hit last week. Any chances of a reversal towards strength?
So definitely, as you were discussing about the very strong breakout you have seen on the monthly time frame in this counter after almost 15 to 20 years, and the very sharp move was seen. Suppose that generally the stock tends to consolidate at a higher level, so the base of the stock has definitely shifted higher, and now the immediate base is around 360, 365 levels. The stock can definitely head towards 420, 450 levels positionally. So the bigger trend of the stock is positive. On the immediate basis, if you look at the setup wise, immediate support will be around 382 levels. The stock can definitely move towards 405, 410 levels immediate on next couple of days time frame.
Okay. Arpit, thank you so much for your time. We'll call it time here on the first 30-35 minutes of trade. Have a nice day, and thanks for all the wonderful views that you've presented.
Thank you.
So, ladies and gentlemen, we've had a fairly mixed first half an hour of trade. Nifty's in the green, weekly expiry plus positive cues coming in from overseas markets. So that's a positive. And there is very, very strong advance decline ratio at the moment. 2100 shares are in the green, 675 are in the red. You have a very strong move which is coming into the entire tech space led by Infosys and Tech Mahindra. That's where lot of volume is coming in, and let's hope for the best as far as the rest of the day is concerned. It's the weekly expiry.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
The much-awaited India-UK Free Trade Agreement has hit a sudden roadblock, and the reason is steel. The landmark trade pact known as the India-UK Comprehensive Economic and Trade Agreement, or CETA, was expected to come into force this month after years of negotiations. But now, new steel import restrictions introduced by Britain have delayed the rollout. The UK government recently announced tougher safeguards to protect its domestic steel industry. Starting July 2026, Britain will slash tariff-free steel import quotas by nearly 60%. And once those limits are crossed, exporters will face a massive 50% tariff, double the earlier rate. That move has triggered concern in New Delhi. Indian officials say these measures were never part of the original negotiations and could weaken the benefits Indian exporters were expecting under the trade deal. India exported nearly $900 million worth of iron and steel products to the UK last year, making the issue economically significant. Commerce Secretary Rajesh Agarwal says India and the UK are now working on a creative solution to resolve the steel dispute and operationalize the deal quickly. The India-UK FTA has been described as one of Britain's biggest trade agreements since Brexit. The deal aims to more than double bilateral trade to $120 billion by 2030 and promises major opportunities across textiles, automobiles, technology, services, whiskey, and manufacturing. Negotiations began back in 2022. Now, with the finish line finally in sight, one sector, steel, has become the final hurdle in a deal both countries say remains strategically critical. The big question now, can London and New Delhi break the deadlock before economic momentum slows down? With Shorik Shah, Bureau Report, India Today Global.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Abha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show
Monday to Fridays, 9:05 a.m.
every weekday at 3 p.m. only on India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. Well, we are on the expiry day as far as the Nifty is concerned and the markets are inching higher. We're back above the 23,700 mark and there are several sectors that are supporting the kind of move that we are seeing. Remember, it was yesterday the IT stocks that managed an up move and that continues to be a focus in today's trading session. We are also looking at several other pockets that are supporting the move in today's pocket. You can see 23,715 onto the Nifty at this point in time, about 65 points higher in trade. And you're also looking at the Nifty Bank at this point in time. Let's pull up that one as well to see how the markets are trading in the banking space as well. That's a bit flat, about 0.09% lower in the session today. But when we look at the sectoral action, clearly it's the IT pocket that continues to drive up 3.6% higher. That's where the move is. Last couple of sessions, this has been the pocket that has truly driven the kind of recovery we have seen into the markets. The broader markets are also doing well today. Mid and small caps both in the green, about 1% higher in the session. Pharma, FMCG, oil and gas, PSU banks, media stocks, all of them are up. It's barring the Nifty Bank as a whole and the metal index. Rest all of the pockets seems to be higher in the session. On the Nifty, you have Infosys, Tech Mahindra, you have HCL Technologies, TCS, Wipro, all of these stocks, at least 5 of the top 7 names are from the IT names as far as the Nifty gainers are concerned. But where is the loss coming in from? The pocket where it is still declining is Hindalco, ICICI Bank, ONGC, Ultratech Cement, Bharti Airtel. These are the stocks that are still dragging in the session. But let's welcome Gaurav Sharma, our guest on the show, to help us understand what's now going to be in focus as far as the markets are concerned. Hi Gaurav, good morning to you. Good to have you with us. Give me an understanding of what exactly are you looking at into the markets. This recovery was initially being seen as a trap, a bull trap for the markets, because the kind of volatility we've been seeing into the markets globally and locally as well constantly was an overhang into the investors' minds as to whether my money will get stuck here. But it's the recovery in the IT stocks that is now driving in from the front. What are you watching out for in this market setup?
Thanks, Sakshi. Very good morning to you and to all the viewers of Business Today Television. Thank you very much for having me on the show today. Broad-based buying clearly witnessed in today's trading session. So far as we speak, mid-cap index is trailing about over 1% higher. Small cap is 0.8% higher. Resultant market breadth is also fairly positive. 2,000 plus advances as we speak against 750 declines. So this is a very healthy market breadth. As far as the Nifty 50 stocks are concerned, they are also doing good. But the overall market sentiment is still not very optimistic. Crude is still highest, trading at $110 a barrel. Nifty index is still trading below the important resistance mark of 23,800. That has to be taken out. Then only 24,200 levels can be seen. Otherwise, we would again see Nifty index inches lower. Indian rupee is continuously depreciating and hitting lower lows yesterday too, and today also. We are witnessing somewhat around a 0.04 points of a depreciation in the rupee. So overall, the sentiments are not at all good. Things need to settle down first. There needs to be an agreement between US and Iran on the developments, and that needs to be clearly. The gas and oil supply is still not up to the mark, and there are concerns all over the globe as to what future energy supplies will be. Prices of petrol and diesel hiked in India today, but that is not clearly up to the mark. Even I am expecting a further increase from these levels because under recoveries for the OMCs are too huge and they are way too short of what exactly was warranted to provide them the needed support. At least a 6 to 8 rupee price hike is what was expected. Where we are is close to somewhat around 4 to 5 rupee up. Still there is a shortfall of 2 to 3. So we can expect another price hike, and that will eventually lead to a further increase in inflation. We saw WPI figures staging at a 3-year peak, and if those levels stay elevated, this will surpass RBI's comfort zone, and we can expect a price hike in interest rates also. So that will actually be negative for equity. So that is ruling the roost for the markets. Yes, when you said that this can be a bull trap, yes, this particularly can be a bull trap. We are keeping a close eye on the index. 23,800 is the important level that needs to be crossed. Until then, a cautious approach as far as index positions are concerned. There is ample of stock specific action. IT is ruling, clearly setting the stage today, specifically those IT firms that are engaged in the business of BFSI segment, like Coforge, Mphasis, OFSS, they are among the best of the lots.
Okay. Let's also focus on some of the pockets that are buzzing. Of course, we'll come to the IT space, but the Adani Group stocks are also in focus today, especially after we've seen the US Justice Department having cleared Adani Group of any kind of charges. They've closed the case also forever, and that's really pulling up some of the stocks up to 3 to 4% in the session today. We're seeing, of course, Indian billionaire Gautam Adani and his nephew Sagar Adani both conclude this 19-month legal case, and the development alongside a $275 million settlement with the US Treasury for sanctions violations, which has lifted the uncertainty over Adani Group's now expansion plans. Give me an understanding, Gaurav, how are you looking at the group as a whole? Now that all the overhang seems to be a thing of the past. It was Hindenburg earlier. That case was closed by the Indian regulator last year. And now we have the US Justice Department clearing Adani Group of any kind of charges and have closed the case forever as well. Does this mean that the Adani Group can now step the gas on as far as their own expansion plans are concerned, and therefore one should look at this entire space, do you think?
Actually, it was a clear red flag for the company. Whenever there is a proceeding going on, it actually dents the image and restricts a movement across the globe. Now, when this thing is clear, the US Justice Department has clearly mentioned that they have settled it once and for all, and it will actually help the company boost their global expansions, and that is the reason why we are seeing a clear uptick in those stocks. Adani Power, Adani Ports remain our favorites from the pack. Adani Green has also done well from a future 3 to 4 years kind of a perspective. This stock is also really good, and it has done well since listing. So yes, this is a good positive move for the company.
Okay, got that. Let me also ask you, when it comes to the other pockets that are buzzing, and that's the oil and gas space. That's the second story that we are tracking very closely today. And this is with regards to the petrol and diesel prices inching up higher in just a few days after the first hike was done. And again, we are seeing about 87%, 87 paisa to 90 paisa kind of an uptick on petrol and diesel prices. That is bringing back the attention on the oil and gas space. 0.6% higher for the index as a whole. The OMCs are also in focus because of some of the earnings that are coming in as well. Let's try and understand what's happening here. So finally, the government has given, a free hand to the oil marketing companies to start raising the prices to somehow cut the kind of losses that they have been facing. Of course, remains to be seen how much will they be able to raise from here and how much will their losses be curtailed at this point in time. Plus, there is the overhang of crude oil prices. It's cooled off from yesterday's highs of 111 to somewhere around $102, $103 a barrel. Your sense of how should you be viewing the OMCs at large?
Actually, I'll still maintain a cautious view on the OMCs. They are still a long way. Crude is still at elevated prices. Under recoveries are too huge. The price hike, I don't see. This is an apt rise to meet up those deficiencies that have been there for I think a month and a half time frame. Nearly 2 months now. So I am expecting to actually provide them a reasonable relief. Another 2 to 3 rupees upward revision in petrol and diesel prices is pretty much warranted to provide them the real support that they are actually needing and to support the under recoveries.
Absolutely. But what about the upstream companies? Are you looking at that at all at this point in time with the crude oil prices still volatile?
Refineries are a clear beneficiary in that. OIL is one stock that we have I have recommended in our last week's conversation. I still stand by that. Chennai Petro and OIL were the two stocks that we have discussed about. I still consider them to be really in a good spot and a clear beneficiary of the elevated oil prices.
Okay. I also wanted to ask you on particularly these companies that are reporting the numbers from the oil and gas space. IOC came out with the numbers, 56.6% surge year on year on the net profitability figure, which is coming at 11,377 crores. Now, give me an understanding of how are you looking at the healthy marketing and refining margins that have been reported here. Does it improve the case for investors looking at long-term purchase levels, or do you think the impact of the West Asia war on the losses may actually be seen in Q1 and Q2, and therefore the next couple of quarters could continue to remain volatile? What would you really understand here?
I have a clear view on all the three OMCs here that at least 2 quarters will be required to actually get out of it, and most importantly, the crudes needs to settle down. Otherwise, it may even take a much longer time for these companies. Therefore, I'm not at all interested in investing in these OMCs as of now. Neither we are recommending them to our clients. It is at best to just stay away from them, look at other areas which are not that adversely impacted with the crude oil prices.
Okay. And what about natural gas? We also have had IGL come out with the numbers, and of course the largest city gas distributor, it's reported 277 odd crore rupees of profits for the fourth quarter. What do you think is the case here? The stock is also pulled up about 3.5% higher in trade. How should one be viewing this? Again, CNG prices have also been inching higher twice in the last couple of days is what we have seen the prices even inch up for CNG. How would you look at IGL at this point? In the last 6 months, there's been a drop of about 20 odd percent, but today after the earnings, the stock is up in the session as well. This is despite the fact that consolidated profit has fallen about 25% year on year to 341 crore rupees, but the revenue has inched up about 6 odd percent.
So actually, just under twice to its book value. Price to earning is at 14. So valuations are reasonable, not at all expensive. But the business growth is something that the stock markets really values the most. That is somewhere missing. And a twice price hike by IGL as well. Gas supplies disrupted. So somewhat, I think that this is also not a place to actually be in. When we look at the bottom line, it has it is actually depleting. The profit numbers are depleting. The margins are shrinking. Again, not a place to be in. I'll still advise investors to look at other opportunities. Not a great fan of IGL at the moment.
Not a great fan of IGL at the moment. Okay, let's shift focus to some of the other key numbers that have actually come in. Let's talk about, specific space like EMS. Space that's in focus, and I wanted to talk about Amber Enterprises, and in the same breath I'll pull up Dixon Tech and Kaynes Technologies as well. These companies have been in focus in the last year. Of course, we've seen a lot of investors doubling down their bets on these companies, and the companies had also shown promise in the stock market performance. But after a long haul of consolidation, there is some pain point emerging in the earnings. What's happened with Amber Enterprises that yesterday the stock had plunged by 16%, the sharpest drop that we had seen in 4 years on an intraday basis for the company. This is right after the brokerage houses are now cutting the target price onto the company. JP Morgan Chase has cut the price by about 10 odd percent. CLSA has trimmed the target price by 6.5% as well. Most of them have now dropped their own target prices to somewhere around 7,500, 7,600 odd levels, although up from the current market price, but there seems to be some concern emerging. We saw a similar pattern in Kaynes Technologies post the earnings as well. There was a sharp drop in the stock prices. What really is happening in an otherwise, pocket which was truly watched out for by the investors as the next or the new sunrise theme that everybody wanted to bet big on for the long term?
So actually, let's first talk about Amber Enterprises. The stock tumbled not after posting its numbers. It went down after the management commentary, which wherein the management itself has raised some concerns over future growth. So that has actually let down the investors and the brokerages to reduce their price targets, and that led to a steep sell-off in the stock prices. As far as we are concerned, we are looking at a price of close to somewhere around 62, 6,300 level. That is a very comfortable zone for this particular stock. And if the stock comes down to that level, this is the price point one should start accumulating it from a medium to long term perspective. Stock has already fallen from levels close to 9,000. That brings up to be closer to a 50% correction, which is pretty much reasonable for this stock, because otherwise, when we look at the March quarter numbers, they were reasonably well. So it is the future growth that has actually impacted it. Now, as far as other EMS counters are concerned, Dixon and Kaynes are still reeling under pressure. Syrma is one stock that catches our eyes too much, and it is one of our favorites at the moment. Results were pretty much upbeat. The stock has performed well, actually outperformed the entire EMS space. So if I were to pick something from the EMS space, as of now, it will certainly be Syrma. Reasonable growth in the top line. The bottom line also increased reasonably well. The company is performing well, and we are expecting this kind of a performance to continue in the coming 2 to 3 quarters as well. It has reduced debt. The valuations are just about okay, not too expensive, not on very much on the lower side, but these are good value to actually start accumulating the stock.
Okay, let's also focus on some of the other companies that have reported their numbers. GE Vernova T&D is something that I wanted to point out to you. The company has reported a firm set of numbers for Q4. The profitability has risen by 89% on a year-on-year basis. There is also a robust revenue growth and a sharp margin expansion that the company has posted. But despite that, the stock is down by about 1%. Have you been tracking this stock at all? And would you help us understand, is the reason that, the stock had been running before the earnings, or was there some pain point in the earnings that investors have to know?
Actually, I'm afraid won't be able to comment as we have not started tracking this stock.
Okay, fair. Let's also talk about Afcons Infra, another company that's reported its numbers. It's an infrastructure engineering company. Now, this company reported its numbers. It's from the Shapoorji Pallonji Group. There was a net loss of about 88 odd crores for the fourth quarter for the company. This is, in comparison with the profitability that the company had posted in the last year, same quarter, of about 110 odd crore rupees. The company says that there has been an impact of the macroeconomic uncertainties and certain one-time factors as well. What would you really understand here on Afcon's infra? The stock has been underperforming for the last one entire year, down by about 35 odd %. And today also the stock has dropped after the earnings by about 4 odd %.
Yes, pretty much so. This is an underperforming stock reeling under pressure from a very long time, more than a year now. A long haul consolidation was also seen thereafter. The stock managed to inch higher, but still couldn't hold higher levels just because the results were not up to the mark. And this is something which has been just ongoing for this company. Lackluster numbers, the declining sales, declining revenue. This time around, the company even reported a 89 crore loss. So that has actually resulted in an annual figure which is just about 251 crores in profits against a 487 reported in March 25. That is a very lesser number, as the revenues also were down, the margins too stringed. This company is not performing. Our sense is it is better to take the your money off from this particular stock.
Okay. Let's also focus on some of the pockets that are buzzing then in trades today. Let's talk about the IT stocks. What do you think is the key reason why there has been a sudden recovery or a rebound of sort in the last couple of sessions in the IT space? Have things changed substantially in terms of the key uncertainties that the sector was facing? Or is it just the fall in the rupee that is aiding this kind of a momentum in the IT stocks? Or is it a lot of buying that's happening after the valuations may have turned pretty attractive after the recent drop? What exactly is the key reason why the IT stocks are once again in flavor?
In the past, say, 15, 20 days especially, pharma and IT are the two segments that have performed somewhat fine. Pharma has done really well. IT has inched higher from their recent lows. The reason is certainly they both are export-oriented segments, and the depreciating rupee is a value advantage for these companies. Apart from this, money keeps shifting. This is we can say, the institutional habit of actually keep on shuffling their money from one segment to another. Nowadays, the trend has changed. Even the institutions are not sticking around for a longer time. They are also booking profits due to the ongoing uncertainties. And I think this is a good way to look about it. IT has turned really attractive as far as valuations are concerned, and the headwinds have not changed yet. So I think this is a short-term move that we are witnessing. This may last for few more days, but a complete reversal is there. I think that's still a question mark. I'll still stick with my old favorites, OFSS, top of the tally, Coforge, emphasis to follow.
Okay, got that. So that's where the focus is. Let's also focus on what's happening in the other pockets, broader markets. What's your sense here? Again, it keeps coming under the pressure whenever the markets crash. But are things finally shaping up for the better for the broader markets? Are you taking a lot of bets here, or is this still a very cautious zone to be in?
We are very cautious, no doubt about it. Things are nowhere clear. Uncertainty is there. We are maintaining a very, very, very precise sector and stock specific approach. PSU banks were our hot favorites, but the current condition is not at all favorable for them. My favorites of SBI and Canara Bank are being, witnessing good amount of hammering here. Bond yields are going up, so the scenario is little changing, and we need to adjust our strategy with the ongoing situation. Otherwise, we'll be caught on the wrong foot. So yes, some bit of pharma, a bit of at the lower level. Certainly, we will be looking at PSUs again. Uh, Defensive plays like REC, PFC, Power Grid, NTPC should be on the radar. They will provide the needed cushion to the portfolio. Autos are not at all in the flare. Rising petrol, diesel prices, higher expectation of a further rate hike. These are all negative and headwinds for the auto segment. I think they may take some more time to actually start performing. So this is the time to actually clearly look at your portfolio and do the needed reshuffling.
Okay, got that. So those are the pockets that we focused on. Let's also talk about, Gaurav, what fresh is coming onto your radar. You talked about pharma. I wanted to ask you what is really changing here that is bringing the attention to the pharma space as a whole? Is it cumulative improvement in the earnings, or is it a lot of export-oriented opportunities that you're finding with a lot of companies? A shift that's probably happening in the pharma industry as a whole. We've also seen how, the semaglutide opportunity is being taken in by both hands by a lot of companies there. Is that the fresh trigger that you're looking at, or what are the key triggers that are forcing you to look at the pharma space as a whole, and how are you going about selecting stocks?
I think I'll address this in a very simple way, Sakshi, that by the basic common sense, if we look at it, pharma is one space that at a stressed time, when in a state of a confusion or less on clarity, dilemma is always there. Pharma is one space we can clearly look at. This is demand inelastic. Even the price hikes do not impact the revenue figures. Whatever the situation be on the global front, pharma will continue. With a depreciating rupee, they are in an advantageous position because most of the Indian companies are exporting as well. Therefore, this brings to a very value proposition and a natural advantage to Indian pharma players, and that is actually benefiting them. And on the top of it, they have been able to come up with reasonable numbers as well. So why not invest in this space? Because the safety is somewhat there, and at the moment, keeping your capital safe is the most important thing.
Keeping the capital safe is the most important thing then. On the markets per se, Gaurav, what exactly is your expectation? We're back above 23,750 at the moment, about 100 points higher. So again, we are inching up. But are the markets still very, very vulnerable to any kind of comment that we see across between the US, Iran tensions, and how they progress going forward? What do you think is the big overhang for the markets right now? And what do you expect? Do you still believe it could be constantly in a range?
I think, Sashi, the biggest question mark here is the $100 a barrel the new normal for crude? Because it is, I think, more than a week or 10 days now, the crude is sustaining at higher levels. And if it sustains at those levels for the entire world, this is a very expensive place. And these are not at all good numbers for Indian economy. We will certainly miss the GDP figures if crude stayed at these elevated levels. Plus, the government is also continuously suggesting the public to keep a check on their oil and gas consumption. So this clearly indicates that the situation is not at all normal, and utmost caution must be maintained in the portfolio and elsewhere as well.
Okay, got that. All right, Gaurav, we'll thank you then on that note for being with us on the show and for helping all our viewers understand where the momentum is building up into the markets and where it needs to be continued on the cautious way as far as the markets are concerned, and what are going to be the driving factors of the markets going forward from here. We are about 100 points higher. If you see in the first 1 hour of trade, we have seen a lot of choppiness build up. But at the same time, we're up by about 0.4% odd in the session. We have seen some pockets definitely drive that show for us. But will those pockets continue to move up forward is the key question. And that's something that we're going to be looking at. 3.68% higher for IT index. Let's pull up the first 1 week chart for the IT names, and you'll be able to see how some of these stocks have truly performed. So the index itself is up by about 4.2 odd %. Large part of this gain has actually come in the last 3 odd trading sessions for the IT stocks today. But looks like the breadth is also improving. IT, real estate, broader markets, FMCG, pharma, PSU banks, oil and gas, infra, auto, banks, metals. These are all the pockets that are now driving up in the session now. And now we get into the second segment, viewers, of our What's Hot segment, where every day we bring to you a specific investment focus that we will be talking about. Today, our focus is on NPS, and joining in to discuss all the aspects of NPS as an investment tool is our special guest, Kshitij Mahajan, CEO of Complete Circle, who's now joining in on the program with us. Hi, Kshitij. Thank you so much for taking the time out for this conversation. Let's start off by understanding NPS. It's a long existing tool that investors have time and again come back to find out whether it is an apt and probably the most important retirement tool that you should be looking at. At some point in time, investors have also focused on NPS as a tax saving tool, because this investment tool was the only one that continued to remain constant in old regime and the new tax regime as well. The only one that was available to both taxpayers to continue to be seen as a tax saving tool as well. And of late, there have been so many changes time and again that the pension fund regulator has been talking about, that it brings us back to understanding whether NPS is now improving in its own fundamental way, to promise better returns and to promise to be a constant, timely, innovative product that investors can constantly look at as well. So that's something that we'll try and understand. First up, your own sense of how have you looked at NPS, the National Pension System, as an investment tool, as a tax saving tool for all these years, and what's happening now?
Thanks for having me here. And I think it's been 22 years of journey of NPS. It started in 2004 for government employees, and then they opened up for everyone from 2009 onwards. But it's a very innovative system which government has adopted, which keeps on innovating itself and which keeps on adding the right features, which are much more friendlier, much more beneficial for the people who are investing into. As rightly said, it has is still maintaining the tax benefit which you are having. But I think tax benefit is one part, but the much bigger part is that we are not in the pensionable jobs in times in what we are running. We have to build our corpus ourselves. Obviously, there are ways and means, wealth management, scope of work is there where you can buy mutual fund and other things. But there is many people who still prefer to go with the government side, and that's where NPS comes in. And I've seen those times where it used to be only on a higher side 50% equity participation. Now, with the new avatar, you can have 100% equity participation also. And, you can leave it to the fund manager also that depending on your age, he will keep on juggling between equity and debt. But I think in a way, it's a very good beneficial tool. And with the new, changes which government is bringing in the NPS, where they have made flexibility about the withdrawals, they have made flexibility about choosing more than one fund manager. Earlier there used to be only one, now you can go up to 3 fund managers. So a lot of changes they have done, and I think this can be one part which clients should look at while looking at investing for their retirement planning.
Absolutely. The pension regulator has now also very recently, a couple of days ago, made a big change to the national pension system that could probably completely change the way how retirees earn from this tool. The regulator has now introduced a new retirement income scheme. 2 new withdrawal methods also have been introduced, and an easier annuity surrender rules during medical emergencies have also been introduced. So simply put, NPS is actually moving away from a rigid fixed income system to a more flexible retirement income program as well. And remember earlier, all the retirees would feel that they had to lock a large part of their retirement savings into the annuity plans that offered only fixed monthly pensions. And now retirees, with these kind of changes that are being brought in, can keep more money invest it and withdraw it gradually over time as per their convenience, and almost creating like a monthly salary kind of a structure as well. So it's a massive overhaul that we are looking at as to how NPS is being looked at. So give me an understanding, Kshitij, if you could explain to us what's the difference between earlier and now. What's happened?
So the biggest change one is, as average life has been going up, the maximum you can have an NPS account till the age of 75 in earlier avatar. In new avatar, you can go up to 85. So there is an increment of 10 years step up from what you can do. So, so you can keep on having your funds for next 10 years. Second, the biggest change which they have done is about the withdrawal, as rightly said by you. Somebody having more than 12 lakh can, in previous avatar, can withdraw up to 60%. Now they can withdraw up to 80% and they can keep only 20% for the annuity benefits. Obviously, the remaining 20%, which is the incremental part, will come with a tax, burden. 60% will be tax-free, but the increment which they have given will come with a tax burden. But yes, there is a flexibility that if you need funds, you can withdraw from here. Somebody with less than 6 lakh can withdraw the entire funds. Somebody between 6 to 12 lakh can withdraw up to 6 lakh, and then, as you said, which in mutual fund we call systematic withdrawal plan. You can have still a withdrawal plan where you go on a monthly basis, then you can withdraw the remaining 6 over next 6 months time. So second is this. Third, the most important point is, as I mentioned earlier, you were supposed to choose only one fund manager. It's like you can only buy one mutual fund if you have a wealth management. Now you can choose up to, you can choose up to 3 fund managers, 3 different scheme managers when participating into NPS. Another which is very important is you can go up to 100% equity, allocation. Earlier the maximum was 75-80%. So I'm saying broad base they have done. They made it like actually, as rightly said by you, they made it so flexible and so usable that it looks like more like an extended version of mutual fund. It's not a mutual fund, but yes, they made it very, very lucrative for people to come and join and have a diversified portfolio here in NPS also.
So, Kshitij, in a way, is NPS now moving towards like a mutual fund kind of an investment opportunity that investors are looking at, and also continue to enjoy the tax benefits there, even if you are in a new tax regime?
So, I think it's a LSS of mutual fund now.
Yeah.
In terms of with the new tax regime also you have a benefit. And moreover, with government focus, I think this category will become very big, because the name in itself, is very lucrative. People come toward this side. Now, earlier the fixed rate part was like, I don't have a flexibility like a mutual fund. I can't choose more funds. My withdrawal is limited. Only 60% is I can withdraw. So all these flexibilities have been given, where you can withdraw, where you can choose different fund managers. At the same time, where you can extend your time frame also. Otherwise, at 75, the fund has to mature in previous avatar. But now it can go to 85. And many people who are working long till let's say higher side of their life cycle, and people who are staying healthy and they want to have the benefit of what return NPS is generating. Because once you withdraw, everything is not tax free. We all know. So some part will have a tax component coming to it. But in the scheme, if it's growing and you are taking some systematic withdrawal, it comes like a FIFO. So you pay the tax on the appreciation part only. So I'm saying it is really very beneficial when you extend that type of time frame. And 10 years it's a big time frame.
Absolutely. So when we say NPS is moving towards a salary-like retirement model, practically what does it mean for retirees? And, is it similar to SWP in mutual fund systematic withdrawal plan? How does one really make the difference there?
Yes, it's similar to it, or maybe you can say it's SWP in NPS only. So, not. Let's say you decide, okay, fine, now I want to enjoy the benefit of money which I have invested over a period of time in NPS, and I want to take out some monthly my expenses there, and that's how it's been called as a national pension scheme. Okay, so I want to take the benefit out of it. As I said, 60% of withdrawal there is no tax. Over and above there is a tax component. But whenever you withdraw your units, because in NPS also, like in mutual fund, you get units. Whenever you withdraw your units, there's a principal component goes, there is a appreciation amount goes, capital appreciation goes. So the DEX will be on the part of capital appreciation. And depending on what tax slab you are in at that point in time, I'm sure, because if you are not having a pension which is running, so that tax component also gets decreased. First, the tax will be on the appreciation amount. Second, depending on what tax slab, you have the tax implication coming on that. It's like a SWP only, and it works really well. Here they call it a systematic payout rate, SPR. That's what they call. So I'm saying overall, if you see, it gives a flexibility to someone who has invested over a period of time in a pension scheme, and then enjoy on a monthly basis whatever amount they want to spend, or they have expense coming on their way.
Right. Let me also understand from you, Kshitij, when it comes to this new structure, and how retirees can keep money invested even after retirement. But what happens in cases when the stock market suddenly crash right after their retirement? Is that a major risk? How should one be really looking at that risk?
But yes, so as I said, you can choose 3 schemes. And in these 3 schemes, you can actually divide depending on your risk appetite, how much equity and debt you can have. So, one scheme you can leave it to the discretion of a fund, where they can decide as and when you're growing old, they will keep on decreasing your equity part and fixed income part will keep on increasing. Okay. Second scheme you can choose wherein you make, it's like if you're starting young, you can make a little hybrid, you can make 60-40, where 60 is equity and 40 is fixed income. Third, my request to everyone is that, there are only 2 asset classes which can beat inflation over a long period of time. Now gold, because of the recent rally, but otherwise real estate and equity only. You can choose a 100% equity scheme. Okay. Then that scheme, as and when, let's say, if you cross 50, 55 years of age, you can decrease your equity portion. Because let's say in 5 years' time, if you're approaching retirement, and then you can decrease your equity portion, and you can step up your fixed income portion. That's what you can do. So that flexibility is with you, that you can decide between your allocation. Second is you give it to the fund manager, he decides for you. Third is you go conservative. It's like a balanced fund, as we all know. You can have a balanced fund in NPS. Then allow this portfolio to grow. And let's say if for some reason you are little high on one scheme when you are retiring and market is falling, then don't have withdrawal from that scheme. Maybe start the withdrawal from the other 2 schemes. Once the market will settle and things are looking up, then you start the withdrawal from that scheme.
Understood. A lot of people in their 30s and 40s, who are still planning their retirement, because of the kind of growth in equities that they have seen and this growing culture of mutual funds and how more and more people are now getting aware of investments here. They were already thinking that, probably, places like or tools like NPS do not make sense for them if they can have an SWP, if they can have, mutual funds continue to fulfill their dreams after retirement. What changes for them? Do you think now, with the kind of changes that NPS has brought in, does it come back again as a valid tool to really look at, even for millennials and youngsters who are still planning their retirement?
So I think I'll take reference from what you said, the first thing, about the tax part 5 minutes back. First, straight away 15,000 rupees tax on a yearly basis. You compound it for next 20 years. So, it's a huge amount. You put 50 and straight away 15,000, 30%. If you're in higher tax slab, the tax gets it. Second, the flexibility which now it's offering, my sense is more and more people will come toward this. So this can be really a big movement for NPS as a corpus also, and you'll see a lot of portfolios will have NPS as one of the additional allocation which you might see happening. For youngsters also who have seen 21, 22, 23, and I'm sure last two years have been a tough year for capital markets. So please understand, I think this is not a OTC product when investing, when you're investing your hard-earned money. It looks easy, and there's a lot of information available on web. But if you have time only, then only you do it yourself. Otherwise, I think there's a portfolio manager, and there are direct plans in mutual fund as well as in NPS. You go directly with the government only. You put for you can opt between various fund manager which are offered. There are 10 different offered, including HDFC, LICs of the world. I'm not recommending anything, but I'm saying you can choose depending on what product you like. As I said, you can diversify and give it to the portfolio manager to build your future corpus rather than just doing it yourself, because it looks good. You get a kick also, but believe me, it is very difficult when it comes to buying stocks. And again, I'm saying if you are working somewhere else, this is not a full-time job. Then give a second thought and choose a portfolio manager.
So who benefits this most now, this new system? Is it the salaried employees? Is it the business owners? Is it the self-employed people? Or maybe even the high net worth individuals? Who is it going to be benefiting the most?
I think the biggest beneficiary, if you take the age clause, is a self-employed person, because salaried employed will get retired by 60, 65 and has planned things because there is a monthly salary input which is coming. For a business guy, let's say somebody is running a SME or small scale shop or business, it becomes very, very important, because now he doesn't have to worry about that in 75 my maturity will come and then what I'm going to do with money. Then you can go up to 85. Firstly, he's going to benefit from this. People who are entrepreneur are going to benefit from this. Salaried people, again, people with high tax slab will benefit from this, because there's the additional window. As I said, 15,000, somebody's at 12-13 lakh of salary, which is above the threshold of your income tax slab. You keep on getting a benefit on that 50,000 every year for a long period of time. As in new tax regime also, the benefit is there. Third, the withdrawal part, will help everyone, because there is no pension available. So somebody who's retiring at 60 or 65 or 55, once you start withdrawing, you can withdraw like SWP and you can choose a scheme on which you want to withdraw. As I said, if markets are not favorable, you can hold on your equity portion, you can choose the fixed income or the scheme which portfolio manager is withdrawing, and then you can enjoy the benefit of compounding which this portfolio has created for you.
Right. One of the biggest fears that retirees had was that this fixed pension income, probably inflation could eat into the earnings that they are making here. Does that aspect also get addressed now with these new changes?
Oh, I think this is the best question of our conversation. You have a deposit, and my request to all my elderly citizen, people who are listening to us, if the deposit is giving you 6.5-7% also, and if you are in 25% tax slab also, eventually you're getting 5% only. Inflation is on an average over a period of time, like before 2013-14, it was 8%, but right now let's say 6% inflation. We are not even big inflation. Problem is not that you have, you have enough corpus and you're gonna sustain with this corpus. Let's say the value of money is depleting year on year. So there's a common formula for compounding and inflation. It's 72 bleakar. R is the rate of inflation, and if you divide 72 by rate of inflation, you'll get in how much years your value will become half. So 72 to 6 means in 12 years, your money value become half. So let's say something you're buying for 100 rupees, you'll buy for 200 rupees after 12 years. But your deposit, which is growing at post-tax 5%, will, or let's say for 5.5-6%, it is just maintaining that inflation part. So there's no tax on inflation, but there's a tax on your deposit.
Correct.
20%, 30%. So in the long term, there's no guarantee that the inflation will not step up. So interestingly, for elderly, as you asked, so average inflation is 6%, but your medical inflation and education inflation, people who are having kids also, is around 12-13%. So you are competing with 11-12% of your half of your money, which is going to be spent on, which is kids' education or maybe your medical expenses. So you have to check this fact properly, that whatever money which you're investing into, it should go into asset class which is going to beat inflation. I'm not saying put everything in equity. Give it to a fund manager, like in balance funds are there. Let him decide how much equity or fixed income is right for you. Take one conservative plan and then take one little aggressive plan, so that at portfolio level you can generate maybe 9-10% of return, which is like handsomely beating inflation post tax. So that's what normally one should look at. Not that you should put everything in equity, as I'm saying, because but diversified. Take that first step. Start allocating some portion.
True. So is there a balance that you as an expert recommend between annuity income and systematic withdrawals? What do you really recommend here?
So, I'm saying whatever amount, let's say somebody is having a 1 crore rupee as maturity amount, which is lying, and it's on a portfolio level of NPS is growing at 9%, or So your withdrawal can't be more than 5%. And let's say on 1 crore, you can start withdrawing maybe 50,000, 5,000, 4,000 on a monthly basis. That's what I'm sorry. On 1 crore, you can start withdrawing 40,000 on a monthly basis. That's what you can start. So that your withdrawal doesn't cross 5% of overall your asset class. So let's say if you say my expenses around 2 lakh, then you target on your mutual fund or whatever asset class portfolio and NPS portfolio, you should be around 5 CR. So, as and when you progress, numbers which are looking, very high. But if you progress and do a systematic investment through mutual funds or NPS, these numbers are very much achievable. Then, irrespective of your spending your annuity income, still your corpus will keep on going. But if your spend is more than your return of annuity income, it's very basic. Your corpus will deplete one day, soon or one day it will deplete. And then you'll be left with nothing much. So I'm saying, please take into account whenever you're spending, preparing your sheets, that you have to take inflation into account, because today you're spending 100, after 12 years you have to spend 100.
Absolutely. Any last word there, Kshitij, for all our viewers who still don't have an investment into NPS? What would you say?
One should have an account. One should have a proper, allocation toward NPS. I'm saying you can start small. And it complements your mutual fund holdings. It complements that. At the same time, investing. Sometime like last 2 years been painful time frame. People have not made money, and there are a lot of questions about capital markets. But market gives return. As on an average, our nominal GDP is around 11-12%. You can expect 10-11% from a broader index, because index is nothing but a reflection of economy. But compounding actually, come and act into play if you give more than 10 years. So it will not happen over 1 year, 2 year, 4 year, 5 years time. Start early. Start investing. Stop looking at your portfolios. Keep reviewing. But yes, give your portfolio time, and suddenly you see in 10 years time, you'll see that money is getting multiplied by multi-folds. And then 15 years further, 20 years further. So focus on accumulation of units of NPS or mutual fund. If you are good at stock picking, maybe number of stocks. But yes, the clear-cut focus is on accumulation phase right now, and then enjoying the benefit of what you have done when you're retiring.
All right. Okay, Kshitij. Thank you so much for these wonderful insights for all our viewers. I hope this has given a lot of clarity to our investors and viewers who would watch us on the show, and now will be able to take an informed decision when it comes to their investments there. Thank you so much. Appreciate your time with us. And viewers, before we wind up, there is breaking news coming in on your screens, and this is with respect to the fuel price hike that we've been tracking for you this morning. And IOC has come out with an information. IOC official has talked to Informist and has said that fuel price hike will be gradual. And they're also talking about how the aim is to limit the inflationary hit. They're also trying to protect the consumers at large. And the global factors are the ones that are definitely behind the prices going up, going forward from here. They've also said that there is no final target as to what they want to aim for the final price hike, or where do they want to see the final price of petrol and diesel to occur. But they do not see an impact on the demand at this point in time. The summer fuel demand they expect to remain strong despite the hike in the prices of petrol and diesel. They're also talking about how fuel consumption will remain robust, and the price hike is clearly driven by the global crisis. There is no sharp fall in the fuel demand as of now, is what they are seeing at this point in time. So a gradual raising of fuel prices to limit the surge in inflation is something that they will continue to do at this point in time. IOC shares continue to drive up higher by about 2.5%. We'll wrap it up on that note on What's Hot. Stay tuned. There's much more action coming up on your screens right up next. Stay tuned.
how is this petrol and diesel price hike, that is the second price hike in 5 days, how is it impacting the Aam Aadmi, the daily commuters in the national capital?
Actually, the daily commuters, more so those working with the private sector, saying that we were pretty much prepared for this situation, the increase in the fuel prices. But what they hoped was that people will be, their offices would be transitioning into the hybrid mode, at least if not work from home mode. That has not happened, and that is why they are more concerned. So if you look at the prices as well right now, as to how it is feeling in the national capital right now. So you will see the price of petrol and diesel. For petrol, we'll have to spend 98 rupees 64 paisa if you are buying it at a Bharat Petroleum petrol pump for petrol, 91 rupees 58 paisa for diesel, again at a BP petrol pump. So the heat is being felt by the common man right now, and more so those indulged with the unorganized sector as well. There are commuters who have to do daily deliveries, who have to pick packets, drop it to other locations. So all of that metric goes for a complete toss. And that is why the common people
we'll also take a look at what's happening in Mumbai. Vidya is with us from Mumbai. Vidya, how is the situation in Mumbai? Because if you take a look at the prices in Mumbai, they're approximately 9 more than what the petrol price is in the national capital.
Well, it certainly is, has been higher, but then the 4 rupees increase is something that's eating into the budget of many people. I spoke to quite a few of the people, and let me try going across and speaking to some of the people here again. But then most of the people that I spoke to, some of them actually said that, the prices should be reduced for, say, bikers who really need it, and not for the SUVs. Let me try speaking to the people here and ask them, ये जो price rise हुआ है, उससे आपके budget बढ़ेगा पर असर पड़ेगा?
क्यों नहीं पड़ेगा, जरूर पड़ेगा।
बिल्कुल। तो अभी कैसे मैनेज कर रहे हैं
अभी क्या करेगा, अभी करना पड़ेगा मैडम।
अब आप लोग भी बहुत जरूरी है तभी भर रहे हैं पेट्रोल?
जरूरी तो है, काम के लिए पेट्रोल जरूरी है। पेट्रोल नहीं भरेंगे तो गाड़ी कहाँ चलेगी?
कितना भरवा रहे हैं अभी?
अभी तो फिलहाल 150 रुपए का।
150 रुपए का। फिर अभी जैसे और बढ़ेगा तो कैसे करेंगे मैनेज?
मैनेज कैसा भी करना ही पड़ेगा।
करना ही पड़ेगा। So, budget is something that will be hurt of most people. Let me try cross. Sir, petrol prices have gone up. Is it hurting your budget?
Yeah, surely it's hurting.
How is it? How bad is it?
It's bad. Earlier you used to get at 100. Now it's at more than 100. So
per liter, you reduced on the consumption?
Consumption, yeah.
Have you also thought of alternate ways in which you will be,
now,
in case
a multi-city reality check? We're getting you voices of the consumers right from the ground, how this price hike is impacting the Aam Aadmi. My colleague Chetan Bhutani is also with us. Chetan, what are the key factors that are driving this price hike, and can we expect more price hikes in the coming days?
Well, Anjali, what's really happening is that the 3 rupees hike, the oil marketing companies have been able to cut their losses by about 250 odd crores. Remember, Hardeep Singh Puri in fact mentioned that oil marketing companies are seeing a loss of about 1,000 crores every day. With 3 rupees hike, they have actually cut down to 750 crores, a 250 crore rupee breather. Now with the 90 paisa hike, oil marketing companies are expected to further reduce their losses. But yes, since the war has been going on for over 10 weeks now, we'll be expecting a further price hike in a calibrated manner is what the feelers are. In fact, many economists, many top consumers and other experts are saying that they will have to be increasing by the 2 or 3 or more rupees for another long time if the war continues to persist, because the direct impact of increase of petrol and diesel comes on the consumer price index, eventually hurting the inflation numbers, and actually at the back end increasing the cost of logistics for various stuff, including FMCG products, including household equipment. And of course, we'll have to wait and watch as to what the government stand is on the approach towards petrol and diesel price hike. We are expecting the prices to be remaining stable for some time. But yes, if the war persists, the oil marketing companies would be compelled to increase prices at the fuel pump rate as well.
All right, Chetan, do stay with us. So that's a very important point that needs to be noted, that more fuel price hikes are expected in the coming days amid the West Asia crisis. So we can expect the prices to go even more up in the coming days.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
on India Today.
Good morning, ladies and gentlemen. It's turning out to be a terrific Tuesday as far as Dalal Street is concerned. A nice shade of deep green, at least on the mid-cap and the small-cap indices. The mid-cap 100 index is 1.5% higher. There is strength that is coming into the small-cap space, 1.3% higher. And the star of the day, ladies and gentlemen, is the Nifty IT index, now 4 percentage points higher. It's a rally of more than 1,000 points on the Nifty IT index, 29,507. This is the depreciation of the rupee, which is impacting very, very well as far as the IT index is concerned. I'll request the PCR to kindly show us the long-term chart of the Nifty IT index. We've seen it beaten down from a high of February in 39,966, which is almost 40,000 points, all the way down for a 33% correction at 4 days ago when it was at 27,568. The last 3 days have been dramatic for the IT index. I'm also requesting the PCR to kindly show us the longer term chart of the rupee. The rupee has depreciated 8% since the start of this year. In the last 6 trading sessions, the rupee has fallen about 2.5 basis point, 200 basis points versus the dollar, and that has actually kicked this very sharp rally. Look at how strength is coming into mid-cap counters such as Coforge and Emphasis, 5% higher. Tech Mahindra and Oracle Financial Services are 4.5% higher. This is the rupee that you are seeing. This is actually the dollar view of the rupee. Consistent selling pressure on the rupee from 2nd of April 2026 till 18th of May. The rupee has fallen to 96 versus 94. So that fall is now getting captured in the way IT stocks are reacting. And look at Infosys. I'll request again the PCR to kindly show us the long-term chart of Infosys. In the year to date so far, Infosys is down 26%. Yes, that's more or less the correct chart. TCS is down 25%. HCL Tech 27% and Wipro 25%. So these counters are beaten down. These counters are in pain, and it's the dead cat bounce that you see mainly on account of the depreciation of the rupee that is coming in. Will it hold or not? Only time will tell, but let's hope for the best. We will shortly be joined by Mr. Pankaj Murarka, founder and CEO of Renaissance Investment Managers. Good morning, Pankaj ji, and a very warm welcome. The smile tells me that the IT bounce is reflecting very well on your Nifty screen, as also on the radar for beaten down counters. How are you looking at market sentiment today?
Good morning, Shailendra ji. The view on the market remains fairly positive or constructive, I would say, because we're coming out of now we see for the last 2 years, markets have consolidated in a range. So last 2 years, Nifty index returns are now down to low single digit. And we had significant headwinds over the last 12 or 15 months, but I think most of them are now through, in terms of earlier we had, tariffs and other things. Probably now, and probably I'm still of the opinion that it's a matter of weeks before we see a reopening of the Hormuz and oil prices climbing back to probably somewhere around closer to $90. So in that, and more importantly, what we're seeing is the underlying demand in India or the underlying economy is fairly resilient. So while the oil shock has to be absorbed, and the government has already initiated the process by making the first hike in fuel prices, probably there are few more down the road. But I think the economy is fairly resilient and can absorb this. So, and more importantly, now valuations have become very attractive in markets. So I think the overall outlook for markets remains fairly positive, I would say. And more importantly, for investors having a meaning for long-term investors, this is actually a good time to be investing into the markets because markets have corrected quite significantly.
Absolutely. And Mr. Murarka, you've forever been in the business of funds management, first with Rare Enterprises, then with Merrill Lynch, and now you've started on your own after, a 7-year stint with Axis Asset Management. At this point of time, for the funds that you have on behalf of your clients, where are they going in? Are you looking at value? Are you looking at growth? Are you chasing momentum? Are you buying pain?
So as investors, our approach to investing is very simple. We are at all points of time growth investors. We are always looking to invest into growth and high growth companies because we think eventually these companies over a medium term to long term tend to create much higher shareholder wealth, as compared to value companies or so on and so forth. We tend to avoid momentum because while momentum can give a lot of high returns in the short term, but then momentum stocks do tend to correct also very sharply. And as investors, we are low risk investors. So our approach to investing is probably focus on good quality growth companies. That is what we keep doing all the time, where we find, and in India, the universe of growth companies just keeps expanding because the fact is at a $4 trillion economy and at about 11-12% nominal GDP growth, we're adding about, $450, $500 billion of economic output every year, which effectively means the opportunity size is very large for companies to grow. And then our endeavor is to find outlier growth companies within that universe.
Okay. Mr. Murarka, if you could just give us a peek into how many stocks are there in the PMS scheme of Renaissance. What is the sectoral weightage and what is the kind of sectoral outlook that you have if there is a preference for a particular sector or industry?
Sure. So our portfolios are what we call somewhat focused portfolios because we manage money for HNI, ultra HNI clients, family offices, and large institutions. So we run our portfolio on an average has about 30 odd names, between 25 and 30 names, positions. And it's a fairly diversified portfolio generally that we run currently it's a fairly diversified portfolio across 10 sectors. Obviously, our largest allocation. Yeah, some of these banks have not done well in the last 1 year. And also they've corrected pretty sharply in the last few months. But we think financial services, while the banking sector has been at the receiving end because of the macro concerns, the thing is we're seeing we're seeing healthy signs of cyclical recovery in credit growth. So we're coming out of 2 years of credit slowdown. From March, credit growth was upwards of 16%, and that momentum is holding on. So one, we believe that credit growth will accelerate from here on, and which will supplement banks' growth in terms of balance sheet size, loans, and their earnings. So banks are coming out of a low earning growth phase, and probably their growth will accelerate. And secondly, the asset quality on Indian banks are extremely pristine or in a very good shape. We don't see any concerns there. And valuations become very attractive. I must say that I'm seeing one of the probably banks valuation, one of the cheapest valuation that I've seen in the last 20 years. So we like banks quite a lot, and that's a meaningful part of our portfolio. Apart from that, we've been turning somewhat, we've been positive on IT for a while the sector did get beaten down, and we're seeing early signs of recovery. So we like IT as a service. We think that whole, the fear of AI disrupting these companies is extremely high, and we think it's somewhat misplaced because enterprises globally would need a service integrator for implementation and adoption of AI, and these companies will be a big beneficiary of that. And again, once again, as I said, in IT also, valuations have been beaten down very sharply. Meaning IT companies are now trading at valuations which they were at in 2008 in the midst of global financial crisis. So that's the magnitude of pessimism that has creeped into the sector, and also the sector is extremely underowned. So we like IT as a sector in that sense, and we find deep value in there. And more importantly, we still think that the sector continues to remain a growth sector from a medium-term to long-term perspective. So we like that quite a bit. And then we also have exposure to a lot of internet companies because India's internet sector is pretty in a high growth phase. So given our bias towards growth and high growth companies, we like internet as a sector because we believe that that sector can keep growing at 20% plus over the next at least 6 to 7 years, and probably it will be one of the fastest growing sectors in India, in the Indian economy. So we like that as a sector.
Mr. Murarka, if I may interrupt, at this point of time, what is the AUM that you manage at Renaissance? And as a percentage of total AUM, what would be the allocation to IT alone and IT plus internet put together?
So we manage about close to 5,000 crores of assets that we have under management and advisory, including our international advisory, that we do for some large institutions. IT is a meaningful exposure, is close to almost about 10% of our portfolio, and internet is a similar exposure. So our exposure to IT and internet as a sector is around high teens, because it just fits into a framework of companies delivering healthy growth in case of internet, pretty high growth in case of internet. And in IT, while the sector has been in the midst of a earnings slowdown or growth slowdown, but we think growth will pick up going forward in the second half of this year and into the next year. And more importantly, these are very high quality companies, with probably no leverage on the balance sheet, a lot of cash on balance sheet. And these are classical cash machines which are generating cash year after year. We find, within IT valuations are very attractive. Within internet, we find valuations are pretty reasonable in the context of the growth that these companies are expected to deliver over the next 7 to 10 years. So yeah,
right.
Collectively.
I completely agree with you, Mr. Murarka. We'll just draw the long-term chart of Infosys for the benefit of our viewers. What the price that you see was available in December of 2020, and that's a 6-year low that we are seeing. It's a debt-free company which has announced many cash buybacks because cash on the books is phenomenal. And of course, it's beaten Black and Blue, which was once a market darling 10, 12 years ago, is now available at a PE of 15, which is below the Nifty PE. And of course, at this point of time, it has a very strong dividend yield of 4.2%. So about high teens of the portfolio at Renaissance is in IT and internet companies. In terms of the next sectoral weightage, Mr. Murarka, where is the bulk of the money placed? Are you a mid-cap player or do you prefer large caps?
Well, as I said, financials is the largest exposure at about 30-odd%, and that's also because they have a very high, the sector has a very high weightage in the indices also. If you look at Nifty 50 index, about 37% of the index is within financials across banks, financial services, and insurance companies. So given the construct of the index and the construct of the Indian market, for us also financials is around 30% of portfolio, and that's the largest weight within the portfolio. Apart from that, we do own, we like autos as a sector because post the GST cut last year, demand momentum has been pretty healthy in autos. While there will be some headwinds in terms because of the rising fuel prices, but we still think medium-term demand will sustain for autos. So we like auto and auto hanks as a sector. And we own some select names in consumer discretionary as well. So those are some of the other things that we own in our portfolio.
Mr. Murarka, since time is short, would you be comfortable with the rupee value now, 96.35? It's really depreciated very fast. Or is more pain in the pipeline as far as our currency is concerned. What would be a year target for the rupee at Renaissance Investments?
Well, we are not currency specialists, so we don't have meaning we don't track it that closely to have a view on the currency. But my understanding, because we track macros closely and India's macroeconomic fundamentals and global macroeconomic fundamentals, while some part of the adjustment that has happened in the rupee in the last 15 months is probably warranted, given the fact that we are in the midst of an oil shock and India does get adversely impacted because of rising oil prices, and we are a country which runs twin deficits. So it will have an impact on both our fiscal deficit and current account deficit. And I think to an extent, there will be fiscal slippage this year because the government will have to fill in have to step in to fill in the gap. And I think both the currency and the bond markets are reflecting that, where we've seen a sharp adjustment in the currency. And we've seen spike in bond yields as well in the last 6 months. But having said that, I think this sell-off of late in the last few weeks is slightly overdone. Probably there is some bit of speculative element to this sell-off as well. So I would be of the opinion that rupee should probably stabilize around somewhere between 95.5 and 96, which is where we see rupee should be stabilizing in the current in the near term. Also, one should bear in mind that on a RER basis, rupee has been expensive has always been expensive. So probably given the twin deficit that we're carrying and given the headwinds in terms of higher oil prices, probably the central bank was also comfortable letting the rupee depreciate probably in a more gradual manner, and which is what is allowed. But I think probably the worst of rupee depreciation for the timing is behind us.
Wonderful. That's a bit of a relief. Every single day you see a 50 paisa, 60 paisa, 30 paisa drop in the currency on a weekly basis. A rupee generally gets knocked off. It's a bit troublesome, and of course the maximum negative impact of this currency depreciation is felt in our markets. Mr. Murarka, my final question is on bond yields. You've briefly touched upon them. Indian 10-year paper is at 7.1. Japanese and US 30-year paper has hit multi-year highs. Are these signs of a global dislocation that we are looking at, and probably the mega return of inflation?
No, I don't think so. As far as global bond yields are concerned, I don't see any meaningful or significant dislocation in global bond markets. I don't think so. That's the case. Probably, the fact is that what we've seen is meaning we need to understand the context. See, we post the global financial crisis in 2008. The world went through very low yields for a period of almost 14 years. And what we've seen in this cycle post-COVID is probably, I would call, more like normalization of yields. As far as Japan is concerned, we need to understand that Japan is coming out of 30 years of deflation. Now, Japan is finally out of deflation. They had negative growth for 30 years. So bond yields are probably normalizing there, and which is where the Bank of Japan is significantly behind the curve, because they don't want to be, they're happy for yields to harden, and because they want growth to come back and be deeply entrenched before they act on rates and currencies. And which is why yen is probably one of the cheapest currencies in the world as well at this point of time. As far as Indian bond yields are concerned, probably I think we've seen bond yields move up from about 705, 710. I think bond yields should stabilize at these levels.
Right. Mr. Murarka, unfortunately, time is short at this instance. I would have loved to carry on. We will be getting together back again for a more detailed discussion on your stock picking. But for the moment, my deepest thanks for this wonderful 10-15 minute conversation that we had. Thank you and have a nice day.
Thank you. It was a pleasure talking to you.
Yes. Ladies and gentlemen, we continue with our focus on top earnings that are on Dalal Street, and for the moment we'll focus on a PSU energy giant, something that touches your and my life very, very closely. I'm talking about Indraprastha Gas, the energy giant which is the top CNG player in North India as well as the rest of the world. The company Okay. What we'll do, ladies and gentlemen, is we'll pause for a while and then get back to you shortly. Meanwhile, the markets are in top shape as far as the Nifty, the mid-cap index and the small-cap index are concerned. Thank you for watching. Morning, ladies and gentlemen. We continue with our ongoing series of Market Masters and get you to speak and understand the finest brains that are there on Dalal Street. It gives me great pleasure to welcome one of the most well-known, most profitable fund managers in the market today, Mr. Rajiv Thakkar, Chief Investment Officer and Director at Parag Parikh Mutual Fund. Mr. Thakkar is perhaps the most popular fund manager in the market today and runs the largest flexi-cap scheme that we have, which is Parag Parikh Flexi-Cap Fund. This is also the fund which is the largest in terms of assets within the flexi-cap space, 1,40,000, almost 1,41,000 crore rupees. Good morning to you, Mr. Thakkar. And firstly, congratulations. Now you are a teenager. The fund is 13 years old.
Thank you so much. Thank you for the kind words.
Right. Let's begin this conversation, Mr. Thakkar. These are trying times not only for the entire market, but for investors as well. The rupee at a record low, oil back on the boil, and anything and everything that is appreciating, the government has put in a word saying that please don't buy, gold in particular. For fund managers such as yours, how are you navigating this space?
So firstly, while in the immediate context, things look very gloomy, and as you mentioned, various things, depreciating currency, rising oil prices, outflows from foreign investors. If we zoom out a bit, if we look at the longer context, and partly India is a young country, a lot of people would be investors in their mid-20s or 30s. They may not have the long context. In the early 90s, when there was a oil crisis of something similar, where Iraq had invaded Kuwait and there was this Gulf War, at that time we had to actually pledge our gold. We had to put our gold on to a plane, fly it to Western countries, pledge it to raise some small amount of money to keep our imports going. Rupee had very steep declines at that point in time, and we had similar situations. So today, while we are seeing prices increase, so we have seen a roughly 3 rupee increase in fuel prices at the pump level. This would be anywhere between 3 to 4-5%, depending on whether one is looking at petrol or diesel. Even assuming that another 10 rupees increase were to come, this will be a 10% kind of increase, which is steep, and I'm not trying to minimize the impact on the common people. But if we look at the historical context, this is not the first time this is happening. In 2007, there was a steep oil price increase. In post the Russia-Ukraine war, there was a steep increase in global oil prices. So it is a fact of life today. Luckily for India and for the world, there are alternatives now where we have ethanol blending, which has taken place in a big way in India. We have the alternatives in terms of the electric vehicles, which will hopefully pick up in demand. So this too shall pass. I don't think there's anything specific to worry about in the current context.
Mr. Thakkar, many of the hundreds and thousands of people who will be eventually listening to you, that this too shall pass. Many long-term market observers have actually being pointing out the fact that while earlier downturns were opportunities to buy because all that was dislocated was greed and fear, in this case there is this madness which people refuse to learn, especially in West Asia. They're destroying refining capacity, which is very hard to replace. So in effect, this bear market or whatever market we might call it is here to stay for a longer term. What is your view?
So it depends on what one's definition is long term. So if one goes by the income tax definition of long term, which is in 1 year your equity investments become long term, then probably people are right. It may continue for 6 months, 12 months, 18 months. I don't have a clear answer for that. But if it's a young person looking to invest to create wealth over decades, then this doesn't matter so much. So all these questions are largely around the immediate 6 months, 12-month kind of period. And these kind of things keep happening. So in fact, at the beginning of my career, 1992 to 2003, we had a 11-year period where markets went nowhere. This does not seem to be that kind of a thing. I would think it's a question of 12 to 18-month kind of thing based on what one can see right now. All said and done, the world has a lot of oil. So US, which was a big importer in the past, has a lot of oil in terms of their shale oil wells. Within the Middle East, there's a lot of oil. It's just that the strait is closed and ships are not able to pass through. Refining capacity, yes, it may take some time, but I don't think it will be as prolonged as a lot of people fear.
Okay, fair point. Now, let us try to look at all the problems that we are facing from the point of view of your flagship scheme, which you've so ably run over the last 13 years or so. Please tell us, in the month of March and April, what was the level of cash that you deployed at a market that was falling down, and what is it now as a percentage of AUM?
Yeah, so I'll talk about the April end data, which is in the public domain. At peak, we were at 25% cash, about 10% across the 2 months.
Okay. And this 10% deployment, what kind of sectors have you deployed this cash into?
So one big space has been the real estate investment trusts. Those now account for roughly 4.5% of the overall AUM in a sense. That has been a space. We have been buying in private sector banks. We have been buying in IT services. We would have bought some in the generic pharma space or in the utilities and in the coal company that we have a position.
Yes,
so these would be the kind of purchases.
Okay. Let's now drill it down within the purchases that you mentioned. What makes REITs so popular or so attractive to you at current levels? Is it safety that you seek?
So typically, people look at largely two asset classes, equity and fixed income. These are the two large asset classes. Then people have some allocation to physical real estate, and people sometimes choose precious metals like gold and silver. With REITs getting listed in the Indian equity markets, and these are recent introductions, so these have come within the last 5-6 years. Earlier, you did not have listed REITs. These offer a meaningful tradable instrument which have somewhat distinctive characteristics as compared to pure equity or pure bonds. So firstly, they have these quarterly payouts of income. So some of the REITs that we own have roughly a 6.5% annual payout in terms of the yield that is there. Further, typically you have the rent escalations coming in. The tenants pay a higher rent as years go by. These typically amount to roughly 5% per year. Plus, you have some of these things where over a period of time, the amount of office space that can be developed, the norms become liberal. So they pull down smaller, older buildings and create taller towers, have more space. When one tenant goes, it's let to someone else. They get some markup. Helps them get some capital appreciation, some increased earning over a period of time. So these are potentially things which can give double-digit kind of returns. At least that's been the kind of track record in the past. These have delivered anywhere between 13 to 15% kind of past returns. So they offer distinctive characteristics. Also, they are not as vulnerable to, let's say, what's happening to geopolitics, what's happening to the price of oil, or currency or things like that. So that way they offer a risk hedge as well.
Mr. Thakkar, at the moment your portfolio is extremely concentrated. You have 42 stocks spread over, let's say, maybe 1,20,000 crores. Do you feel constrained with the kind of rules and regulations that are on caps of overseas investments, which hasn't moved for the last 2 years or so? Even within the Indian universe, it is hard for you to find value at this point of time. As a fund manager at FlexiCap, are you feeling constrained?
So the foreign exchange limit has been there for roughly 4 years now, and most people have moved on. So given that the limit is not there, no point in talking about what could have been, or like we don't control the environment. We live in the environment that is given to us. Individuals, of course, have the option of investing abroad. So a lot of people have been directly investing in US domiciled stocks, Europe domiciled stocks, or even some Asian countries. People have been buying funds abroad, and most asset management companies in India have also set up operations in GIFT City.
Yes.
This is for inbound investment as well as outbound investment. So most of this cross-border thing is now happening through GIFT City rather than through the AMC structure. So leaving that aside, so people who want to invest globally should either directly invest or invest through GIFT City funds using their LRS limits. That's the lay of the land today. As far as our FlexiCap fund in India goes, incremental investments only are made in the Indian stocks. So foreign stocks, which used to be around 30% when the industry limit was hit, those are down to around 11-12% as of date. Given that more the new money only goes into the Indian stocks. In India, if we look at the situation, the lot of new large companies have gotten listed. So today the cutoff between large cap and mid cap would be somewhere around 1,08,000 crores or thereabouts, and cutoff between mid cap and small cap would be around 34,000 crores. So it's not that deploying money is a challenge. Lot of large liquid names are available, and even the larger small caps. So 25,000 crore company today would be classified as a small cap company, and one can obviously buy these kind of companies. What you mentioned is correct, that valuations were quite elevated. So for about 2 years now, we have been talking about elevated valuations. For about 2 years, we were holding large amounts of cash. Valuations have corrected for two reasons. One is prices at the index level, it's almost flat over a 20-24 month kind of period. So some time correction has happened and individual names have fallen in terms of price. So price correction also has happened in places. So that is giving us room to deploy money. And because of that, the cash levels have come down from 25 to 15.
One of the most striking features of Parag Parikh Flexi Cap Fund is the emphasis on technology investments. About sector-wise holdings, 21% is in technology, whereas the peer group is somewhere like 11%. Is this a contra call that you have in the market when you look at the kind of price decimation and destruction that has happened in maybe top 7, 8 IT names? How are you in your own mind thinking of this tech investment?
So firstly, if you split the what is called technology investment in our portfolio, a big portion of it will be the foreign tech companies. Now,
yes,
those are the companies everyone is liking. So no one has any second opinion on that. So let's say a company like Google, which is at the forefront of the AI revolution and which is at all-time highs and has been doing quite well in terms of growth numbers. So I don't think people have any objection to our investments in things like Google or Amazon or Microsoft or Meta. So that is one portion of the equation. The other portion of the equation, so if you remove that, then we would be more or less in line with the peer group. So if you exclude the foreign companies, then we are around what you said, 11-12%, marginal here and there. So firstly, it's not as stark as the headline would indicate. The second is, see, everyone keeps talking about this fact that, Nifty is whatever, 19 times 1 year forward or 18.5 times 1 year forward. Why are you not deploying? Now, you were always concerned about valuations. Valuations are cheap. But the irony is that no one wants to buy the things that are cheap. People say Nifty is 18.5 times earnings, and then they go and buy the retailing company trading at triple-digit multiples. They'll go and buy a defense stock at 70 multiple. They will go and buy something else. So this is where the valuations are at lower levels. Now, obviously, we are not living under a rock. We are monitoring what is happening with AI, with the reduced demand for people in the whole writing of code business. So whether a human writes a code or whether a AI tool writes a code, this thing that IT services will not be required at all seems to be somewhat pessimistic to my mind. And if the cost comes down of writing code, the IT services companies will be able to pass on that benefit to their end customers and still be profitable in that sense. So we'll see. And the simple point that I want to make is our exposure is not that stark. It looks high because of inclusion of things like Google, etc.
Absolutely. In fact, one of the biggest success stories of Parag Parikh FlexiCap Fund in the early part of 2021 was, I think, amongst the top 8 holdings, 5 were foreign, which was Facebook, Google, Amazon, 2 more, I forget immediately, but Microsoft, of course. And the success story started from there. When I look at the fresh investments that you've made and the existing ones to which you have added in the month of April, there is a preponderance of PSU stocks, whether it is on the gas distribution side or on the energy side. Is this size looking into buying fairly liquid stocks which are obviously cheaper and available at a much lower price? But generally PSUs is where a lot of existing cash has gone into.
So more than PSU or private, the gas distribution companies that you referred to, you would have seen the headlines where the government is aggressively nudging people to move away from LPG to piped natural gas. The shift from petrol diesel to CNG was anyway an imperative, and that is getting renewed emphasis given the increase in global energy prices. If you look at the sales numbers of auto companies, you will see that the not only for commercial operators like taxi, fleet, etc., even private sector buyers or even retail consumers have been buying CNG vehicles for their personal use. So this is a space which could see some amount of growth going down, and as you mentioned, the valuations are inexpensive. So yeah, it's been these companies or two of the existing names that we have in the grid and the coal company. So it's been mainly fundamental driven thing rather than looking at PSU or private.
And of course, the top cigarette maker also finds mention in the top 5 holdings. Is this again a value buy or a value trap?
So what happened was this company saw a steep sell-off after the rapid increase in taxes. Now, as you know, this sector has maybe 3 or 4 players and one player dominates overall. And it's a, for good or bad, it's an addictive product where despite price increases over a period of time, consumption comes back. So there will be this transitory impact. The whole entire price hike was not taken at one go. It has gradually been increased. There would be some fears of smuggling and illicit cigarettes, but that works its way through the system over time. I don't see a permanent impact. And plus, the company has been working towards shifting away from tobacco in terms of getting into new line of businesses. So today, when everyone is excited about, which has worked hard over maybe a decade and a half in terms of creating the probably the number 2 or number 3 biscuit brand or the number 1 atta brand or ready to eat meals, soaps and personal care and chocolates and fragrances and whatnot. So yeah, it's a fundamental investment call, and valuation obviously factors in, and it's been reasonably capital efficient in that sense.
Absolutely. Mr. Thakkar, if we look at the overall picture of the portfolio, there is 80% in equity, about 11% in debt, real estate accounts for 4%, and about 5% is cash. Within equity, you are intensely large cap focused, which is 94% of 80% is large cap. Yet the record highs are coming into mid cap and small cap indices. Is there a slightly longer game that you are playing with large caps, or is it safety that you seek?
So when we set out to invest, the starting point is not whether this company is a large cap company or a small cap company or a mid cap company. Starting point is, do we like the business? Do we like the people running the business? And is the valuation in our favor? The city gas distribution companies that you referred to, which we have recently bought, are classified as small caps, but that is besides the point. We would have bought them irrespective of which bucket they fell into. So I don't spend any significant amount of time thinking about large, mid and small allocation. That is just the end result of the companies that we buy.
Okay, fair point. 2 large opportunities in the market are, of course, the pharma space because of the semaglutide issue, and of course, because markets are the way they are, the defensive nature of pharma also helps. Is this a sector that finds fancy with you, or are the valuations above what PPFAS looks at?
So typically we have had around a 4 to 5% pharma allocation over long periods of time, and that continues. It one way or the other, it's not significantly different at this point in time as compared to, let's say, 12 months back or 2 years back.
Yes, at the moment, the healthcare allocation is 4.1 versus the sector average, the peer average of about 7.2. Okay, one interesting trade, Mr. Thakkar, is the absolute absence of industrials. In fact, it's just 0.3% of overall portfolio, whereas the peer, I mean, do valuations tickle you, how should I say, negatively in the industrial space, or no point running after momentum? How do you see it?
So broadly, I would say the auto names that are there are also manufacturing companies. So it's not that we have preference of one over the other. It's just that we purchase things that look attractive and then remain invested. So again, our approach largely has been sector agnostic or benchmark agnostic. So very interestingly, the numbers that you are reading out, this is our weightage and this is the peer group weightage, is something that I get to know when you read them out. I don't focus on that that intently.
Sir, how has, I mean, have you churned a lot in the last 8 odd months or so? Or how has the turnover of the fund been in relation to what it was maybe 2 years ago?
There's hardly any churn. So largely what we exited over last 1 odd year have been the capital market related stocks. We sold one AMC, one stock brokerage, wealth plus AMC business. We trimmed some positions in a commodity exchange, or we exited a commodity exchange. So largely it's been exiting some positions mainly on account of valuations and the cyclical highs that we have seen in that sector. But as such, churn has not been much. The reported turnover numbers will also include the arbitrage transactions. Now, these are largely as a replacement for cash deployment, depending on the opportunities. A little bit of churn would come from account of writing covered calls, but also these are at the margin, not something very core to what we do. So not much churn as such. It's been largely buy and hold.
Mr. Thakkar, I again come back to the big macro picture. Till about 6 to 12 months ago, India's macro was a beacon of hope for the rest of the world, including us as well. For 4 years, you know, we had done everything right, keep fiscal in control, keep capex, modest oil prices, and of course, gold and silver were running up, but nothing to be worried about. At this point of time, do you feel uncomfortable with the way the rupee has depreciated, with the way FIIs are pulling out money, and the way how bond yields have moved now 7.1?
So we were doing everything right. Maybe we were not doing enough in 1 or 2 areas, or we could have increased the pace. So one perennial problem for us has been the imported energy. We have been blessed with plenty of sunlight. We have been blessed with carbon reserves in the form of coal. Now that recognition is there, coal gasification, there's a big impetus. Maybe this increased shift from fossil fuels to electrification will pick up pace. But otherwise, we have been working on our big items of import. So electronics is something that we recognized early on, and we started encouraging the domestic manufacturing. Defense imports were a big item of expenditure. We have been doing quite a bit of work on getting local defense manufacturing up and running. And just like they say, every cloud has a silver lining. When you are looking at rupee weakening, what also needs to be seen is it improves our competitiveness in some area. So, for example, the entire GCC economics that is there, the rentals for them in dollar terms are becoming cheaper. The cost of people here is becoming cheaper. Given the problems around visas and immigration, maybe more work will shift here. All the sectors that we spoke about, let's say people who sell in dollars, whether it be our pharma companies or our IT services companies or our metals and mining companies which sell global commodities, all their revenue is in some form or the other linked to the rupee dollar rate. Maybe they will benefit because of the higher exchange rate that they get. So, yeah, one has to adapt to the environment. I don't see so much of a challenge, at least having lived through the early and mid 90s and having lived through 2008 and 2009. This one does not seem to be as severe.
Yes, 2008, 2009 was terrible. And of course, the sideways move that you referred to in the first, save the best for the last, Mr. Thakkar. You are now 13 years old, teenage starts. We'll just look at the returns which you have notched up. They've been phenomenal in every sense of the word. And on a 10-year period, out of 36 flexi cap funds, you are ranked first with an 18% CAGR. How do the next 13 look?
Difficult to say. So, I would think it will not be similar to the last 10 years, purely on account of the fact that India may be moving to a lower nominal return kind of thing, given that we have managed to bring inflation rate down. Of course, currently we are in a reverse trajectory given what is happening with the supply chain shocks and energy. But I hope that we play some role in terms of helping our customers reach their financial goals in a stable manner and without giving them too much anxiety.
On that very hopeful and somber note, Mr. Thakkar, thank you for your time. And here's wishing you all the best for the numerous decades ahead. And once again, happy 13th birthday.
Thank you so much. Thanks a lot.
That, ladies and gentlemen, was India's foremost fund manager, Mr. Thakkar, CIO and Director at Parag Parikh Flexi Cap Fund. Thank you for watching. Please continue to be with Business Today Television. Lots of interesting things are happening in the market today.
Hello and welcome. You're watching Business Today with me, Aishwarya Patil. We'll be speaking with Asia's largest copper mine operator right here in India, Hindustan Copper Limited. And joining us on this special conversation is the CMD, Sanjeev Kumar Singh. Thank you very much for joining us on Business Today, sir, first off.
Thank you, ma'am. Thank you for inviting me on this channel.
Sure. So you've recently reported your last quarter earnings and robust and what really led to this kind of trend and a year-on-year record growth for HCL?
Ma'am, if you see, my production of ore grew 6%. MIC, that is metal in concentrate, you know that concentrate, it grew about 9%. And the sales figure grew up to 12%. 6, 9 and 12. These are the three key parameters which has given thus Hindustan Copper a wonderful set of results. In fact, these are the historic results since inception 1967.
Right. But as far as targets are concerned, you know, Hindustan Copper back all the way back in 2024, I believe, when the last CMD was there, he did put out a target of 12 million tons, and that's the 2030 timeline that was given. That target has been there for since 2024, but consistently, if you see, the overall production for MIC and ore concentrate has anywhere been between 3.5 million tons or so, or that range. It hasn't peaked up or beyond 4 million tons. What is the reason for that, and when will we be able to see any significant increase or anywhere close to the 12 million ton target now that we're in 2026?
You have very well seen my Manajkhan mine, which was producing 2.7 million when you went there.
Yes.
That will be giving 3 million tons. Ghatshila mines were closed. They opened last year partially. So their full production will come only in 26-27.
Sure.
So they will be giving you 0.5 million tons. I'm just adding mathematically, just add on 3.5. Khetri has already produced 1 million tons this year, so they will produce 1.2 million tons. If you add all these three figures, it will be 4.7. Now you yourself can believe, because those mines were closed. So 0.5 was nowhere with you. That 0.5 you are getting with the running mines. So it will be 4.7. And Ghatshila will give you good quantity of MIC also. So there will be a growth in MIC also. So MIC will be in the range of 32 to 33,000 tons with this 4.7 million tons. So there is no question of that. Now all mines are open. The first statement is that. Then only you can expect something from that. That was the reason. Yeah.
So what plans do we have to ramp up and take the production forward from here? What is being done in order to increase the output and increase the production as of now?
Ma'am, this Manajkhan, as I mentioned you, this will go up to 5 million tons. K3 will go up to 2.9 million tons. And the ICC group of mines will go up to 4.3 million tons. So if you sum up all these three figures, you come to 12.2 million tons by 2031.
You've already told us about the capex plans, expansion plans, but capex front also, you will need to ramp up. So talk to us a little bit about what's happening there. And there was a board meeting, I believe, dividends were spoken of. Give us some highlights of what went behind as far as the board meeting is concerned.
As far as the capex is concerned, I'd like to tell you we have already awarded a contracts about 1,400 crores by 31st March. They've been awarded. The work has already started. So as far as this capex is now concerned, in this current year, that is 26-27, we'll be doing roughly 550 plus crores of capex, all up from internal accruals. 27-28, we'll be needing 1,000 plus crores. Most probably we'll be meeting with our internal accruals, majority. And thereafter only, we will be taking either loan or bonds. We have a provisioning has been done for bonds and QIP that you already have seen. So this is the way funding has been done. Interim dividend, we have already given 1 rupees per share. And as far as final dividend is concerned, definitely we'll be giving some, subject to the approval of the shareholders in the AGM meeting. So we are on a very positive note.
All right. I mean, investors will definitely be looking out for maybe another round of dividends as well. We'll wait on that as well, and to hear back from HCL. But sir, as far as
Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is on your screens. That's where you send me all the questions that you have about the stocks in your portfolio or onto your watch list. Of course, I'll be getting top market experts to guide you through all these stock queries that you send our way. Over the next 50 minutes, we're going to be taking all the queries that you send us on our WhatsApp, and you can also join in on our YouTube channel. In case you're watching us there on our Business Today YouTube channel, go to Daily Calls Live, use the comment section there to send me your questions, and I'll be happy to pick up those questions as well to address it with our top market experts who will be with us on the program shortly. Let's start off with the market coverage first. We're looking at a rally of about 100 odd points onto the Nifty right now. So this move has been largely backed by the kind of move that we are seeing on the IT stocks that continue to drive the momentum higher. Let's also look at, the momentum that we are facing on, yes, it's now 3.7% higher, a smart move, 29,449, over a 1,000 point rally coming in onto the IT stocks today, and that's the clear reason why we are seeing this entire pocket in flavor. Of course, apart from that, all the sectors are also moving up. Within the IT sector, you have these broader market names like Coforge, Persistent Systems, even the large caps, Infosys, Tech Mahindra, you have TCS, HCL Tech, all of them up and about in trade. So brilliant move that's coming in. But we have a lot of other pockets also that are in flavor. You have real estate that's up by 2.5%. You have the broader markets, both of them now up by 1.3, 1.4% each. FMCG, autos, those are the other pockets that are higher. Even the Nifty Bank has turned green, so the market breadth is also improving. Of course, on the gainers front, top 5 names will actually be comprising of IT names itself because of the kind of move we are seeing. On the downside, however, you have Coal India that's declining. You have Kotak Mahindra Bank, Ultratech Cement and Bharti Airtel as the stocks that are seeing some profit taking at this point in time. Within the PSU names, you have RVNL that's declining today. You Coal India also that's down in the session as well. So those are some of the pockets that are reeling under pressure. But let's welcome Kiran Jani on board to help our viewers understand as to what should you do in the current market setup. Thank you so much, Kiran, for joining in. First up, your view on the markets and how IT stocks have taken it upon themselves to drive this recovery in the markets. But IT stocks have been a pocket which has been a large underperforming pocket in the last 1.5 years odd. And suddenly the space is again coming back in flavor. The big question then comes in, will it be sustainable?
Good afternoon. So I will divide the whole question into 2 parts. First, let's understand the market, Nifty and Bank Nifty. If you look at the Nifty price chart, definitely prices are in uptrend only. It has a gap down opening. It has created a gap on daily price chart, which has been filled in this week. And now 23,200 is a very strong support, and it dips towards that. It is a buying opportunity. If prices is not breaking down below 23,200, then definitely we will expect 24,500, 800 kind of level in upcoming months. Coming to the Bank Nifty will be remain under pressure. There are 2 things, the crude oil inflations and USD INR. These are the concerns with the Bank Nifty. So we are not expecting Bank Nifty to outperform into this current situation. But we are not expecting also prices to correct from current level. So any dips toward 53,000, again, a very good support or accumulation zone. Keep a strict stop loss below 52,500, and if price is not breaking down below those levels, then we can expect 56, 57,000 kind of rally in upcoming time. Now, holistically, as you mentioned about the IT, so it's not only about the IT, but you can see FMC level. No doubt, pharma and healthcare are at 52-week high, but whereas Nifty IT and Nifty FMCG recovering from its all-time low, or I can say 52-week low, because they had a good tailwinds. We have already seen that government has taken a very good steps to support the retail and domestic demands. Somewhere in last 2 years, it is not encashed, but now at current market price, we can see there are some good amount of rally. It's already been placed in FMCG. So Nifty FMCG and Nifty IT, both are the interesting sector at current market price, and definitely stock specific bullishness or a teji will remain continuing.
Absolutely. Let's, in fact, before we go to our viewers who are joining in with their questions, there's a breaking news, viewers, coming in for cigarette prices particularly. There are cigarette giants like ITC and Godfrey Phillips that have hiked the prices yet again for, cigarettes across the board. We are seeing ITC is raising the gold flake premium price to about 13 to 14 rupees per stick in June from 11.5 rupees currently. There are also dealers information coming in on how ITC is likely to hike Will's Navy cut price to 15 to 16 rupees per stick from 14 rupees right now. Dealers are also suggesting how ITC is mulling raising the flake prices to 9.5 rupees per stick from 7.8 rupees right now. And the silk cut prices may also be increased to 8.8 rupees per stick in May and June. These are all the prices that could reflect next month onwards, viewers, from 5 to 6 rupees right now. And many consumers are now moving to lower priced variants on ITC price hikes is what dealers are suggesting at this point. In fact, what we are given to understand today itself that Godfrey Phillips and ITC both have raised the prices as well. Especially the King and the premium packs are the ones that have felt the maximum impact. This comes in as the second price hike that has come in just the last couple of months as well. These companies are in a way passing on the kind of impact that they had been facing of higher excise duty to the consumers now. Remember, GST is also at 40% right now for these companies. And what we are given to understand is that across the board, especially in the King and the premium packs is where consumers are likely to face an impact. The stock prices have not reacted too much on this. There's just about a 1% kind of a move on some of the stocks within the cigarette majors, ITC, Godfrey Phillips today, and they're trading muted for now. But let me take, Kiran, your view. Kiran, of course, we're seeing across the board what's happening because of the supply chain disruptions, the higher inflation. It's all getting passed on to consumers in various segments. It started off with, petrol, diesel. Before that, it was many FMCG companies that had already talked about that in the next quarter they are raising the prices of, personal care items like even soaps for that matter. We've also seen WPI inflation inch, point out to a 42-month high level for the month of April. So all of this is pointing out to how we are bracing for higher prices and inflationary scenario yet again after some cool off. Now the cigarette prices are also rising. What's your suggestion on these stocks of ITC, Godfrey Phillips, VST Tillers, these kind of stocks?
See, overall, if you look at first of all, I would like to comment on FMCG. In last 33 trading days, we have seen 14% kind of a rally on Nifty FMCG. It's been underperformed since while. I mean, even last 2 years, we never see green tick on FMCG. But in just 33 days, we have seen 14% kind of a rally on Nifty FMCG. Now, within this rally, you can see the high weightage stocks have not been moved, like HUL, ITC, it has not moved, but the Colgate, Nestle has given a very good return. So now there will be the shift, the higher high weightage stock definitely will move. Coming to the ITC, there is a clear-cut wedge pattern breakout after December 2025, if I'm not wrong. First time stock price is trading above its 20 and 50 days moving average. There is a clear-cut cup and handle pattern breakout is also there. So multiple pattern breakout is there on ITC, and now the prices is rising. Definitely all the FMCG will transfer the price shift, and that's the only reason we are expecting inflation to rise. But we already have a very good time during this last 2 years when there is a less amount of inflation over into the environment, and now the inflation is rising. So I don't think so that inflation will hurt immediately to the any price movement or any of the purchasing power. So people will digest this for definitely number one. Number two, the tax cut is supposed to be help this kind of inflationary pressure or this kind of a price shift also. So as of now, though, we are much into comfortable as a economy or a macro data point of view. So one can go long on ITC at current market price or any dip towards 310, 305. Keep a strict stop loss of 300. If price is not breaking below 300, then you can definitely will see ITC to retest 330, 335 level.
Okay, got that. Let's now start taking some questions with you, Kiran. We have our first query coming in from one of our viewers, Mr. Reddy. He says that I have 900 shares of Ascard Alcobev at 37.2 and right now it's trading at around 31.2. I have taken it as a swing trade, but I got caught up in this. Kiran sir, can you help me? If fundamentals are good, I am ready to hold on to this with my current capital, or do you, let's actually pull up the stock first. He is talking about Ascard Alcobev. Share price currently indicates that the stock is moving at 32.9. Today it's up by about 4.5%. But in the last 1 month, the stock has been rather sideways. Last 6 months, it's lost about 25%. Year to date, it's down by nearly 40%. and in the past year, the stock is down by 60 odd percent. It's been constantly dragging from last May price of around 81 odd per share to now down to about 32.9. This is a BSE listed stock, Kiran, Asgard Alco Bev, and our viewer is feeling stuck. He got this stock at 37.2 and feels that his capital is now getting stuck here.
See, overall, if you look at the price chart, I'm not tracking this particular stock fundamentally, but if you look at the price chart is not that much lucrative, number one. Number two, the volumes are also not doing well when the price is coming down from 30 to 33 level. So it is better you sell on rise with a preferred strategy. 35, 38 is a good level to exit and keep a strict stop loss somewhere around the price chart, or as per the price chart, as per somewhere around 31, 32. So don't hold if prices fall below 30 and wait prices to rise somewhere around 38, 39 and sell your position. And because there are so many blue chip companies in IT, in pharma, we already discussed. So there are a good mode and good risk reward ratio is available. So one should definitely shift over there.
Okay. I hope that this has also given you some understanding there. Let's look at the next query. This one is from Mr. Patini. He says, Kiran sir, can you review Magad Sugar and let me know how are you looking at this stock right now? Is there any opportunity to enter into this share, Magad Sugar?
Okay. If you look at the Magad sugar price chart, overall the stock price is very good, and even you can see the sugar sector is doing good. There are multiple sugar which is recovering from lower level to higher level. So definitely you can keep holding this particular stock price with the strict stop loss below 440. If price is not breaking down below 440, then you can definitely will see some good amount of rally towards 500. So definitely one can hold this particular stock price with the strict stop loss of 450.
Okay, let's move forward and take the next question. This one is from Prakash. He says, I need your view, Kiran sir, on Graphite India. I can hold on for the next 6 months. What's your suggestion on this stock? He's not shared his current purchase level on Graphite India, but he says he can hold on for the next 6 months.
See, graphite we already discussed, if I'm not wrong, 15, 20 days back when the stock price was trading somewhere around 600 level. Now from 600 level, 660 level, and from 660 level, stock price made a high of 800 and now it is back to 750. See, overall chart pattern looks very much promising. There is the stock price is trading into the rising channel, number one. Stock price has given a breakout of 650 or we can consider 700 after 2024 June month. So it's a long consolidation pattern, breakout, ascending triangle pattern is definitely intact. If you look at the weekly chart also, there is a clear cut double bottom pattern breakout became visible. So I believe one should hold viewers who are watching us, they can also go long at current market price, use this dip at current market price to go long, keep a strict stop loss below 650. If price is not breaking down below 650, then you will definitely see 1000 kind of a price.
Okay, let's take the next query. And this one is from Tapan from Kolkata. He says, hi, namaskar Sakshi, namaskar Kiran sir, namaskar आपको भी तपन. स्किपर इनके पास है 495 के लेवल पर. पूछना चाहते हैं आपसे किरण कि अभी और अक्यूमुलेट करें करंट लेवल्स पर या फिर अपनी करंट पोजीशन को होल्ड करके चले.
स्किपर का अब ओवरऑल चार्ट पैटर्न देखोगे तो 2 साल पहले इन्होंने 2025 में समवेयर अराउंड 650 के आसपास का हाई बनाया था. वहां से स्टॉक एक फॉलिंग चैनल के अंदर ट्रेड कर रहा था. रिसेंटली इसने 330 340 के आसपास का बॉटम बनाया एंड इट्स मैटर ऑफ 1 मंथ ओनली. It recovered from 350 to 450. Now the stock price is placed well above its all important moving averages like 200, 150. So one should definitely hold this particular stock price with the strict stop loss of 430, 35 kind of a stop loss. If price is not breaking down below those levels, then you can expect price to retest 600 kind of a level in short time. So yes, you can hold risk reward is favorable. Definitely with the strict stop loss of 430, you can hold this particular stock.
Okay, let's take the next query also. We have some questions coming in from our YouTube as well. A lot of people are joining in. So we'll take some questions from there too. We have this question from Maurya from Bengaluru. He says, I need an outlook on Apollo hospitals from you, Kiran sir. What would you advise on this one? Just about a couple of months ago, this stock was really in the thick of action. It's been some cool off after that, but how are you looking at the current price? 8,078 Apollo hospitals?
See, as I mentioned that pharma and healthcare are at 52-week high. So definitely there are a few stocks which again are trading at 52-week high only. So Apollo Hospital is one of them. There's a clear-cut pattern breakout we can see. Earlier also stock price tried to sustain about 8,000 but failed and made a low somewhere around 7,500. Now from that level stock recovered and now again consolidating somewhere around 8,000. So at current market price anyone is holding, they can keep hold. Anyone wants to go long fresh on Apollo Hospital, definitely they can go long at current market price. Keep a strict stop loss of 7,800 as a trading point of view. And if 7,800 is intact, then you can expect price to retest somewhere around 84, 8,500 in short time. So within the healthcare sector, Apollo Hospital looks very much promising.
Okay, let's take Maurya's. We have one more question. This is Devendra who is asking, is it the right time to buy heritage foods? I think in the previous elections that we had seen, that's when heritage foods really came as a stock to watch out for a lot of investors because of the political connection that this company has. Down in the south in Andhra Pradesh. Your sense on how are you looking at heritage foods right now?
See, heritage food overall, the stock price is trading very good at somewhere around above the 300 level. And if you look at the daily price chart, stock price was below its important moving average, and now it's start to regain above its important moving averages. After a big fall, stock price has created a very good support somewhere around 300 kind of a level, and from that level, it made a high of 370. It's not sustaining, but again 300, 320 is a very good support. So anyone is holding this particular stock, they can keep hold. Fresh buying is not available at current market price, but you can hold your investment with a strict stop loss of 320.
Okay, let's take the next question. This one is from one of our viewers. This is Rishikesh. He says, hi Sakshi, I have L&T and the stock is just not moving. So what should I do? Sell or hold?
Sorry, which stocks we are?
Larsen and Tubro, L&T.
Oh, okay. If you look at the L&T overall chart pattern, stock price was not able to sustain 4,000 level, and during this war time we have seen a sharp fall towards 3,300, and from 3,300 now stock price is again at 4,000 only. So definitely you can hold this particular stock with the strict stop loss below 3,800.
Okay, let's take the next question, and this one is from one of our viewers, Nancy. She says, hi, good afternoon to all of you. Good afternoon to you as well, Nancy. How are you doing? She has a question on ACE Equity and on Sangvi as well, which can be accumulated for 1 quarter is what her question is. Let me actually pull up these shares to really see Action Construction Equipment ACE, that's currently at 880 levels, and let's also pull up Sangvi Movers, and currently the share price is 323. Any suggestion on Action Construction as well as on Sangvi Movers?
First of all, let's discuss Action Constructions. Overall, the chart pattern looks very much deteriorate after making high of 1,500, 1,600 kind of level. Stock price continuously falling, trading into the falling channel, not able to sustain its 200 days moving average also. So if anyone holding this particular stock, hold with the strict stop loss of 800. Fresh buying is not advisable at current market price. And another is the Sangvi Movers.
Yeah. Sangvi Movers today, I think it's up by about 5% odd. Smart move today.
Okay. See, overall, Sangvi Movers fundamentally a very good stock price. It made a high of 700, 800 kind of a level during 2024. After that, it's continuously falling, and now it has made a very good support or a demand zone somewhere around 225 to 250. From that level, multiple time stock price tried to cross 300 level, but now it is sustaining about 300 level. Number one, number two, stock price is also trading about its all important moving averages. So definitely one can hold. A fresh buying is also advisable at current market price with the strict stop loss below 300. If price keep holding 300 level, then you can expect 400 kind of a target price in short term.
Okay. Let's take the next question. This one is from one of our viewers, Vinita Gupta. She says, good afternoon. Kiran sir, can you please suggest a view on Finolex cables? How do you view this stock?
See, overall, Finolex. Okay. See, overall Finolex cable on daily price side, if you see, there is a big rounding bottom pattern breakout at 1000 rupees, and now stock price again retesting those level. After breakout, stock price retested 1180, 1170 kind of level, not sustained, but again, as I mentioned, it is retesting its previous breakout level. So definitely, you can go long at current market price, keep a strict stop loss below 1000, and you can expect price target of 13-1400 in short time.
Okay, let's take the next query. This one is from again one of our viewers, Satya. He says, thank you so much for bringing this show every day. Thank you, dear Satya, for warm words for Daily Calls edition. Your question is on First Source Solutions. जैसे हम देख रहे हैं किरण जी, IT stocks में एक बार फिर से momentum आ रहा है. First Source Solutions, how are you looking at this stock?
ओवरऑल आईटी के अंदर जो मूवमेंट आ रहा है ना मैडम, उसमें अगेन कहीं ना कहीं मिड कैप एंड लार्ज कैप के अंदर डिवाइडेड परफॉर्मेंस है. मैडी मिड कैप stocks are doing well, and today even the heavy weighted shares is doing good. So within the sector, definitely there will be the high churn, and we will expect some high volatility within the sector only. Coming to the first solution, see, overall chart pattern is very much deteriorated. From 400 level to 250, 200 kind of a bottom it has made. No doubt 200 is a very good support. You can hold this particular stock with the strict stop loss of 200, but fresh buying is not advisable on first solution as of now.
Okay. Let's take some more questions that are coming in from our viewers today. Raju Tiwari asks the next question. He says, could you please advise on Blue Dart? If this is the stock that I should start investing in a staggered manner for the long term, and is it a long term portfolio stock as well? Do you consider this stock as a core portfolio stock?
Blue Star, right? Blue Dart.
Blue Dart.
Okay. See, if you want to buy Blue Dart as in staggered manner, see, overall, if you look at the weekly and monthly price chart, after a long time, stock price started correcting. Earlier, it happened during 2000, if I'm not wrong, somewhere around 2015 to 2020. Stock price deteriorated somewhere around 80%, 77-80% kind of a fall. After that, during COVID, it fall, but I will not consider that fall. But recently, stock price from 93, 9400 to 5000. It's almost a 50% kind of a downfall we are already witnessing. As history, it has already fallen by 80%. So be aware that stock price can fall that much, because as of now on daily price chart or weekly price chart, stock price is not making any reversal pattern. So it's little bit risky, but considering the monthly and the weekly price chart, the stock price in extreme oversold territory. So there are some dead cat bounce is already there. Fundamentally, company is very good, but so yeah, definitely you can consider as a SIP in these stocks and keep buying on every day.
Okay, let's take the next query. This one is from again one of our viewers who's joining in on our YouTube platform. This is Namish. He says, this is a very useful show. Thank you, dear Namish, for writing in such warm words. He says on Honasa Consumer, he has a question for you. Honasa, he's got at 344. And there is another stock also that he has, and that is Medi Assist at 376. Both these stocks, he says he can actually hold on for long term, but I want to know whether I should average or continue with the existing position. 344 is your purchase price for Honasa. It's up now at 353. You're holding on to profits. Let's also pull up Medi Assist. The price at which our viewer has got this is 376. And the question is, I can continue to hold on, but what's the idea here? This is also above your purchase price and you are in profits here as well. The stock is up by 4.5% today. First up, Honasa Consumer. Last couple of quarters, there's been a marked improvement in the earnings, and that's why the stock is also moving up substantially, Kiran. Your sense?
See, if you look at the Honasa Consumer, definitely stock price has given a breakout from ascending triangle pattern or a rounding bottom pattern. Stock price is also trading above its all important moving averages. So definitely one can hold this particular. one can hold this particular stock with the strict stop loss below 320. If prices is not breaking down below 320, then you can definitely expect 440, 450 kind of a level in upcoming time. So another consumer, one can go long also and hold also with the strict stop loss of 320. Coming to the Medi Assist, the overall chart pattern looks very much negative from 700 to prices made a low of 300, and from 300 it started into the high top high bottom pattern. Stock price is trading above its all important moving averages also, but still it's not convincing. So as of now, if you are holding this particular stock, you keep hold with the strict stop loss of 360. Fresh buying is not advisable at current price.
Okay, let's also see another query that's coming in from our viewers, and this one is from Vinod Chaudhary. He says, hi Sakshi and hello Kiran sir. I want to know where can I make a fresh entry in Tata Motors commercial vehicles. Do you see an opportunity if I have a 2 to 3 years time frame view? So Tata Motors commercial vehicles, particularly now that the two companies have got demerged and we have separate stocks for both passenger vehicles and commercial vehicles, he has a specific questions on the CV business and whether for the long term 2 to 3 years he can invest in this.
See, Tata Motor commercial vehicle, if you look at the price chart pattern, definitely the stock price is trading above its all resistance of 350, 360. So you can definitely hold this particular stock, but given the fact we have already seen a large pain and a long consolidation on both Tata Motor passenger and heavy vehicle. So considering the fact we are not expecting revival very soon, but as of now you can hold this particular stock with the strict stop loss of 350.
Okay, let's also take another question here. This one is from one of our viewers on our YouTube, and this is Ratna Prabha, who says, hi Sakshi, can you please tell me about precision wires? I'm holding 800 shares at an average level of 412. How would you look at precision wires, Kiran?
See, if you look at the precision wire, the overall price chart pattern and also the overall chart pattern is not that much lucrative. Recently, there was a buying came from lower level, but it is again not sustaining above 370, 380 kind of a level. So it is advisable if you are holding this particular stock, hold with the strict stop loss of 350. If price is not able to hold 350 level, then you can expect some further correction also, as we seen from overbought zone to now it is in neutral zone also. So as of now, 350 would be the strict stop loss. If price is not holding 350, then you can see some further downside.
Okay. Let's also look at the next query. This one is, again, we have a lot of our questions coming in from our WhatsApp as well. So we'll take some questions there. Anil Patil from Shirdi. ही राइट्स इन स्वागत है आपका अनिल, पहली बार आपका सवाल मैं देख रही हूँ डेली कॉल्स में। पटेल इंजीनियरिंग के ऊपर इनका है सवाल। 28,000 शेयर ये होल्ड करते हैं, एवरेज प्राइस इनका 43 का है। अभी आपसे जानना चाहते हैं कि क्यों ये शेयर एक बार फिर से डाउन ट्रेंड में आ रहा है और क्या इसमें थोड़ा सा इंक्रीज देखने को मिला है फॉरेन इन्वेस्टर्स और DII की होल्डिंग में, और अगर ऐसा हुआ है तो भी क्यों इस शेयर में लगातार डाउन ट्रेंड नज़र आ रहा है। फिलहाल तो आपके परचेज लेवल से अनिल जी ये काफ़ी नीचे आ चुका है, शेयर 26 रुपये पर ट्रेड कर रहा है, आपने 43 पर लिया था। इस शेयर के लॉन्ग टर्म चार्ट्स को भी पुल अप करते हैं जिससे सभी हमारे दर्शकों को पता चलेगा ये शेयर कैसे मूव किया है। पिछले 6 महीने में आपको 25% की गिरावट दिखी है। 1 साल का चार्ट निकालें, वहाँ पर भी देखते हैं कैसा आपको यहाँ पर इम्पैक्ट देखने को मिला है। 40% ये गिर चुका है और पिछले 1 साल से आप लगातार इस शेयर को देख रहे हैं। 2 साल में 59%, हर पैरामीटर पर आप देखेंगे तो एक लगातार गिरावट ही दिखी है पटेल इंजीनियरिंग के शेयर को। कैसे देख रहे हैं आप इस शेयर को किरण, क्या दिक्कत है इस शेयर में?
क्यों गिर रहा है ये तो मैं नहीं बता सकता हूँ, लेकिन अगर आपके पोर्टफोलियो में है ऑलरेडी, आप लॉस में ही हो, तो कहाँ तक होल्ड करना चाहिए, आई कैन डेफिनेटली हेल्प विद दैट। सो ओवरऑल स्टॉक प्राइस हैज स्टार्टेड इज फॉलिंग ट्रेंड व्हेन द प्राइस ब्रेक डाउन इज 50 लेवल। तो जब 50 लेवल ब्रेक किया था तभी सर हमें पहले एक सिग्नल मिल गया था कि स्टॉक प्राइस यहाँ से और भी कमजोर हो सकता है, क्योंकि 50 के आसपास मल्टीपल सपोर्ट थे, साथ ही साथ उसने अपनी लॉन्ग टर्म मूविंग एवरेज लाइक 200 ब्रेक कर दी थी। और जितने भी व्यूअर्स देख रहे हैं उन सबके लिए कि आप कोई भी स्टॉक लीजिए, चाहे फिर वो रिलायंस ही क्यों ना हो, या चाहे कोई ब्लू चिप कंपनी क्यों ना हो, या तो कोई स्मॉल कैप भी क्यों ना हो, या मिड कैप भी क्यों ना हो। 200 डेज मूविंग एवरेज हमेशा एक इन्वेस्टर्स मूविंग एवरेज है। जब भी आपका प्राइस 200 दिन मूविंग एवरेज के नीचे जाता है तो एक बार तो आप एग्जिट कर लीजिए, वेट एंड वॉच कीजिए, उसके फंडामेंटल समझिए, कंपनी के बारे में समझिए, मार्केट को समझिए, एंड देन उसमें इन्वेस्टमेंट कीजिए। कोई भी स्टॉक का प्राइस नीचे जाता है तो ऐसा जरूरी नहीं है कि वो आज नहीं तो कल रिवाइव हो ही जाएगा, क्योंकि कंपनी में हो सकता है या तो मार्केट में हो सकता है कि कुछ ऐसी चीजें हो जो हमें शायद ना पता हो। सो इट इज बेटर टू कीप अ स्ट्रिक्ट स्टॉप लॉस ऑफ 200 डेज मूविंग एवरेज एज एन इन्वेस्टर। नाउ एट पटेल इंजीनियरिंग करंट मार्केट प्राइस, अभी तो सर जो बॉटम बना है 23, उसी का एक मेजर सपोर्ट है, अगर वो ब्रेक करेगा तो फर्दर डाउन साइड भी हो सकती है, बट नई खरीदारी तो अवॉइडेबल है। तो आपके पास जो अगर स्टॉक है तो आप 23 का स्टिक स्टॉप लॉस के साथ होल्ड कर सकते हो।
ओके, उम्मीद करते हैं यहाँ पर आपको एक ओवरऑल स्ट्रैटेजी समझ में आई है। क्यों ये गिर रहा है शेयर, इसके ऊपर तो बहुत ज़्यादा आपको इनसाइट्स नहीं मिली हैं। हालांकि अब मैं आपको ये बता सकती हूँ कि 4 दिनों पहले इस शेयर में नंबर्स के ऊपर एक रिएक्शन ज़रूर आया था। प्रॉफिटेबिलिटी भी स्क्वीज़ होती हुई नज़र आ रही है, क्योंकि रेवेन्यू कंपनी का गिर रहा है। ये कारण हो सकता है कि इस कंपनी में गिरावट देखने को मिली है। हालांकि कई लोगों के जहन में ये स्टॉक तब आया जब विजय केडिया जी ने भी इसमें निवेश किया, और इस वजह से भी आपने इस स्टॉक में काफ़ी रिटेल निवेशकों का जो इंटरेस्ट है वो देखा है। बट डेफिनेटली आपने ये जो देखा है कि जो कहीं ना कहीं अर्निंग्स के ऊपर, टॉप लाइन के ऊपर कुछ वीकनेस नज़र आ रही है, जिसकी वजह से आपको इस शेयर में लगातार मोमेंटम नेगेटिव की तरफ देखने को मिला है। In fact, let's take a breaking news, viewers. This is with regards to the Indian rupee. Once again, we are looking at the rupee falling more. Yesterday, we had talked about 96.38. Today, it slipped to 96.4. This is a record low for the rupee, and the constant weakness that continues onto the Indian rupee. That is where the pressure is being seen. At this point in time, the rupee constantly falls. It's the IT stocks that are cheering 3.5% higher with this rupee fall coming in, because remember, a lot of these IT companies, they outsource, and they have their business, 40, 50, 60% of their business comes from the US, and stronger dollar would mean better earnings for them, and weaker rupee is actually beneficial for their businesses as well. But the rupee constantly keeps weakening at this point in time. Let's take the next question. We have some more questions coming in again from our viewers or who are watching us on our WhatsApp channel as well. Gunjan from Jaipur says Ashok Leyland sir खरीदा है 180 पर, ये शेयर आपको कैसा लगता है?
सी अशोक लेलैंड की अगर हम बात करें तो वो एक स्ट्रॉन्ग कैंडिडेट था हेवी व्हीकल के अंदर। हमने देखा था कि जो ब्रेकआउट पे आया था समवेयर अराउंड 130-125 रुपए के आसपास, उसके बाद स्ट्रेट फॉरवर्ड 200 रुपीज एंड 200 से अभी 150। स्टॉक ने अपनी 200 डेज मूविंग एवरेज भी ब्रेक कर ली है, तो कहीं ना कहीं चांसेस है कि स्टॉक में कंसोलिडेशन कंटिन्यू रहेगा। यहाँ से फ्रेश बाइंग आपने की है, मेरे हिसाब से करनी भी चाहिए। जो व्यूअर्स हमें देख रहे हैं उनको भी अगर फ्रेश ऑटो शेयर्स के अंदर लेना चाहिए तो अशोक लेलैंड वुड बी द गुड लेवल, गुड स्टॉक टू एंटर एट करंट लेवल। कीप अ स्ट्रिक्ट स्टॉप लॉस 140, अगर 140 का लेवल ब्रेक होगा तो इसमें वापस गिरावट आ सकती है, बट एज ऑफ नाउ 140 के स्टॉप लॉस के साथ डेफिनेटली अशोक लेलैंड इज अ बाइंग कैंडिडेट।
ओके, नेक्स्ट क्वेश्चन हमारे पास आया है सत्यन का। ये बिजनेस टुडे पर पूछना चाहते हैं सिजिलिटी के ऊपर, और इनका स्टॉक जो इन्होंने होल्ड किया है थोड़े हायर प्राइस पर है, यानी कि करंट प्राइस से थोड़ा 10-12% ऊपर इन्होंने खरीदा हुआ है। अब आपसे जानना चाहते हैं सिजिलिटी में आगे क्या कर सकते हैं?
सिक्योरिटी की अगर बात करें तो बीच में एक काफी अच्छा मूवमेंट हमने देखा था। नीचे के लेवल से जो बाइंग आया था कहीं ना कहीं 39 से ही ये रैली स्टार्ट हुई थी। 39 के बाद से हमने देखा स्टॉक ऊपर में, इफ आई एम नॉट रॉन्ग 60 तक गया था। 60 के बाद कंटिन्यूसली सिक्योरिटी इंडिया एक डाउनफॉल चैनल के अंदर थी, नीचे में 35 के आसपास का लो, और वहां से जो रिवाइवल हुआ है कल एक रिवर्सल कैंडलस्टिक्स पैटर्न भी बनी है, अपनी 50 डेज मूविंग एवरेज के ऊपर ट्रेड कर रहा है। तो कहीं ना कहीं आपके पास है तो आप होल्ड कर सकते हो विद स्टॉप लॉस ऑफ 39। अगर 39 का लेवल ब्रेक नहीं हुआ तो वापस ये 45 के आसपास आ सकता है शेयर, और जैसे ही 45 के ऊपर सस्टेन हो जाता है एक फ्रेश अप मूव 60-65 तक देख सकता है।
ठीक है, सुमेध लखर का ये सवाल आपसे लेंगे। किरण लिखते हैं, सर मैं एक फ्रेश निवेश करना चाहता हूँ और फ्रेश निवेश के लिए कौन से शेयर में निवेश करूँ जहाँ पर शॉर्ट टर्म में मुझे कुछ प्रॉफिटेबल ट्रेड्स मिल जाएं, टारगेट और स्टॉप लॉस के साथ। अगर आप अपनी पसंद से कोई शेयर बता सकें किरण इनको।
सी आईटीसी ऑलरेडी हमने डिस्कस किया है, सो आई बिलीव कि आईटीसी के साथ लीजिए, सेफ्टी भी है, लो बीटा काउंटर है, डिविडेंड यील्ड भी अच्छा है, तो आपको लॉन्ग टर्म इन्वेस्टमेंट करना है तो आईटीसी इज प्रिफरेबल चॉइस एट करंट मार्केट प्राइस। कीप अ स्ट्रिक्ट स्टॉप लॉस बिलो 300 एंड यू कैन एक्सपेक्ट अ स्मॉल टारगेट ऑफ 335। अगर 335 के ऊपर सस्टेन हो जाता है तो फिर एक अच्छी तेजी इसमें 400 तक की भी आपको देखने को मिल सकती है। अपार्ट फ्रॉम दैट आईटी के अंदर से मुझे लग रहा है कि इन्फोसिस के ऊपर आपको ध्यान देना चाहिए। आज की रिकवरी में आप इसमें लॉन्ग कर सकते हो। रिसेंट जो उसने लो बनाया था उसका स्टॉप लॉस या तो फिर 1100 का एक स्टॉप लॉस के साथ आप होल्ड रखिए। अगर ये रिकवरी यहाँ से पैन आउट होती है तो एक अच्छा खासा लेवल आपको देखने को मिलेगा। दूसरा एक विप्रो भी है जो काफी अच्छे लेवल के ऊपर अवेलेबल है। सो आईटी के अंदर अगर आपको डर लग रहा है कि कोई एक स्टॉक अच्छा करे नहीं करे तो इट इज बेटर कि आप निफ्टी ईटीएफ ले लीजिए आईटी का। एट करंट मार्केट प्राइस निफ्टी आईटी ईटीएफ आपको मिल जाएगा। आप करंट मार्केट प्राइस से उसको लीजिए, समवेयर अराउंड 32 रुपए। कोटक का आईटी ईटीएफ 32 रुपए के आसपास है, इसको आप लॉन्ग कीजिए। 30 रुपी का एक स्टॉप लॉस रखिए और जिस तरह के चार्ट पैटर्न है इमीडिएट लेवल पे 40 और 40 के ऊपर अगर सस्टेन होता है तो 35 तक के भी टारगेट आपको देखा, सॉरी 45 तक के भी टारगेट आपको देखने को मिल सकते हैं।
All right, Kiran, thank you so much for being with us on the program, for addressing all these questions of your viewers. Good to have you with us as always. So thank you for your time today. Viewers, we are shifting focus into the second segment now, and we have another top expert now with us to address all your questions. Jay Thakkar is now joining in, Head of Derivatives and Quant Research, Vice President, ICICI Securities. Welcome to you, Jay. Good to have you. Your sense on the markets, are you happy with this IT sector rebound? Are you confident of it coming out of the long drawn underperformance that the sector has displayed, or do you still see that this could be again periodic and we might still slip further? What's your overall understanding?
Very good afternoon to you, Swati, and all the viewers of Business Today, and thanks for having me again on your show. It's always a pleasure to address the queries and to discuss the view with you. And as far as the market outlook is concerned, I would say that in the near term, what I would say is that 23,000 to 23,100 range is very, very critical for the index. I don't think that in the May series we are going to head lower below those levels. We are not going to slide below those levels. The reason is, yes, one of which you mentioned is Nifty IT, which has seen a significant recovery in last 3 trading sessions, maybe because of the weakening of the rupee, but that was weakening earlier as well. Right, but then it was not bouncing back, so it could be one of the reason that the anti-AI trade could also help the Nifty IT. I mean, if in the global markets, if at all the IT stocks are taking a beat, because the AI stocks have gone up too much, and if at all they have become overvalued, so if there is some profit booking here, this could also lead some bounce back here. There could be good short covering here because we've already seen too much of shorts that has built up into Nifty IT. So that is one sector which can help, and along with that, I would say there could be a bounce back in the private sector banks as well. That overall sector has been beaten down quite a lot, and it has reversed from it has reversed from a level which is converging 3 major points. One is the 61% of the previous rise. That's one. If you join all the recent lows of Bank Nifty, is converging at the same level around 50 to 500. And the third thing would be that the gap area has been filled out there in Bank Nifty. So I think that till 52,500 levels are held, the Bank Nifty could also be another sector which is quite beaten down, which has been underperforming, can bounce back. So these 2 sectors can bounce back. 3 sectors which have been doing good, that is PPM, power, pharma and metals. We continue to be bullish out there. So there we have seen long build-up. They would continue to perform, and these are the 2 sectors which can bounce back. So the range for Nifty, because of these, could be 23,100, 23,200 on downside to 24,400 on upside. That's the range for Nifty.
Okay, Jay, we'll start taking some questions of our viewers now who are joining in on the program to ask away their queries with you. We have the first question for you coming in from one of our viewers, Lavisha from Jalandhar. She has a question on Vedanta, and she wants to know whether a fresh entry level is something that you would be able to guide her for a long-term perspective. Now remember, the current Vedanta stock only reflects silver and its copper business. The stock has been slowly and gradually inching higher right from the time of the demerger. Your sense on Vedanta?
Well, see, I would say that the near-term move would continue in the medium term unless 280 levels are not broken. Technically, if I have to say, 280 is a significant support for Vedanta, and until those levels are held, I think the overall medium-term trend is up. Right now, if I have to look at it from the short-term point of view, then I would say that the recent lows of around say 300 will act as a support. And it's 10% above those levels. If it comes to the levels of say 320, it would be a good buying opportunity. So buy on dips near 320, stop loss below 300. If you are a short-term trader, medium-term trader, positional trader, then 280 would be your stop loss targets. Definitely it would be high because see, Vedanta has come out of a very, very long consolidation. And I think, from a medium to long-term point of view, you can see good 30 to 40% kind of returns as well. So yeah, until these levels are held, you can continue to hold on to this stock or buy on dips.
Okay, taking the next question. This one is from Manoj Gupta. He lives in Delhi and he has a question on the recent price hikes on fuel that we have seen. So he says it's been a double fuel shock in a single week for consumers of the country, with petrol and diesel prices being raised again today. He asks you, therefore, is there an opportunity for investors to look at Reliance Industries as an investment at this point in time? Of course, see, remember that there is a difference, Manoj. Upstream companies are those which produce oil, and whenever there is the crude oil prices that are falling, that's where they see their margins get eroded. But when they are rising, they benefit. But today what's happening is the entire focus is on oil marketing companies, which are rallying in trade today because now they feel that because of the passing on of the price hikes, they can protect their margins. So Jay, help us understand, with the rising fuel prices, and there are expectations that this could continue. There are reports that are getting indicated from IOC and all these OMCs that probably there will be a continuous gradual hike till the time they are able to see comfortably that they are mitigating a large part of their losses. How would you look at it?
I'm with you on this. I believe that OMC stocks are likely to benefit from the current levels because of the rise in price, because they are burdened because of the lower fuel prices will definitely be lessened. So I would say that the stocks like BPCL can bounce back from the current levels. We can see the levels of around 300 to 320 in the near term. 320 is what I'm looking out for. In the near term, I think that 275 will act as a very critical support for BPCL. So that is one stock which can be looked at from the short covering point of view. And the second stock would be IOC. That too, which you also mentioned, I think that can too bounce back into the levels of 145, 150 until the recent lows of 130 levels are held. So in both these stocks, I would have also named HPCL, but then I think the chart structure as well as the wide positions clearly indicate these two stocks, BPCL and IOC, providing a better risk reward.
Okay, got that. I hope that this has also helped you out. We have a live caller with us joining on the program. Lavish from Indore is now with us on the show. Hi Lavish, good afternoon. Can you hear me?
Yeah. Hello Sakshi ma'am. Hello Jay sir. I have two queries for Jay sir.
Okay.
First one is Bharat Coking Coal. I have 500 Bharat Coking Coal at the rate of 38.5. And second one is Yatharth Hospital. I have 100 share of Yatharth Hospital at the rate of 855. So please guide me the SL and target for 1 year view.
Okay, wonderful Lavish. We'll take both your queries. BCCL is the subsidiary of Coal India that got recently listed. So the charts are limited for you here, Jay. But we've seen a substantial move onto the stock. There was a high anticipation about the IPO, and post listing also the stock really performed very well for investors. Currently, he has a position at 38.5, which means the stock has slipped below his purchase price. So he's bought it on the upward journey on the stock. But he has a 1-year time frame. Second is Yatharth Hospital, where his purchase price is 855. Both, he has a 1-year time frame, a target and stop loss for both.
See, both of these, first of all, I would say are non-F&O stocks, and very closely I look at derivatives and con. But then from the con perspective, I would say that, see, as I mentioned, that 3 sectors are going to be really benefiting and have been really quite resilient during the fall: power, metals, and pharma. Along with that, you can also add healthcare, pharma and healthcare, right? And I think that even in this recovery, pharma and healthcare has been outperforming the overall markets, and we are quite bullish out here. So as far as Yatharth is concerned, I think that from the con perspective, wherein we are expecting the healthcare sector to do well, Yatharth is also likely to do good, because if you look at Apollo Hospitals within the F&O basket, or may it be Max Healthcare, Fortis for that matter, these stocks are really doing good. And as far as I look at the data for Yatharth, I would say that until 770 levels are held, the overall trend remains positive out here, and we can see the stock getting into 4 digits as well, since our outlook on healthcare sector is positive. So you can keep holding the stock. If you want to manage your risk, 770 on a closing basis can be your stop loss. Now, as far as BCCL is concerned, that has definitely fallen quite a lot, and I would say that I don't track this much closely, but definitely you can still wait and watch until unless it bounces back, recovers, and thereafter you would be able to provide a clear view on it. Until unless it doesn't recover or bounce back, it would be difficult to form a view.
Okay, got that. I hope this has helped you out, dear Lavish. We'll take the next question now. We have a query coming in again from our viewer who's joining in on our WhatsApp number. We have a question from Lavish Shah from Jalandhar. Arfin is the question on. Okay, let's pull up the share price of Arfin India. Currently, the stock is at 87.2, and the query is that what should I be doing on this? Is there a fresh entry opportunity onto this stock that you spot?
I think one should be booking out profits out here, is what I can say. Although this is one of the stocks which again belongs to the non-F&O segment, but then I would say that the way stock has reversed sharply with an increase in volumes clearly indicates that overall rise probably might have ended. The one which started from 65 rupees and went until 105. So there is a good chance that it might go and revisit the levels of 70 going forward. So I would be saying at these levels the risk level is not favoring on the upside. Whether you can see some profit booking. So it's better to be staying away from this stock as of now in the short term.
Okay. Let's take the next query. This one is from one of our viewers, Jatin Dave. He says, Jay sir, good afternoon, Sakshi, good afternoon. I want to know about Tega shares. I have at 1583 about 500 shares in my portfolio, and I want to know about Tega Industries. What should I be doing currently? You bought at 1583 and you're in profits. Currently the stock is at 1608. 3 months is what he has a view on, Jay, and he wants to know a target and stop loss for the next 3 months on Tega Industries.
Well, as far as Tega is concerned, I would say Sakshi that this stock has been correcting since quite a long now, and there has yet not been any reversal in this stock. So I see more or less, this stock consolidating within a broader range of 1400 to say 1900. I mean, that's a huge range, 1400 to 1900. And it might spend some time out here. So it's better to be away from this stock and get into some better momentum stock if one can get into. I mean, this is not a stock which is into momentum as of now. It will go to get into momentum until it takes off 1900 levels,
Okay, I hope you've understood this strategy. Let's look at the next query. This one is from Jay Rami Reddy Guram. He says, thank you, ma'am, for this show. Thank you so much, Jay, for writing in. The question is on Sigma Advanced Systems. What exactly do you see here? Can it be held for the next 1 year? Holding at 343 levels. Let's pull up the share and see the current prices at 305. You bought at 343, which means it's cooled off. Last 1 month move has been pretty strong, of around 48%, and it has truly pulled up from the losses that we had been seeing of closer to levels of 205 odd. Let's also pull up the last 6 months charts. The stock has pulled up from last February of 187 odd levels to all the way up to 336 and thereafter. And let's also pull up more longer charts as well. Okay, actually that's where it had come in. Sigma Advanced Systems for you, Jay, again shorter time frame that you have, but the stock has cooled off.
Well, I would say Sakshi that it has gone up quite a lot. If you actually look at the way it took off the levels of 200 and then straight away it moved to 320 plus levels. So there can be some profit booking, but then I don't see this stock in fact even falling below the levels of say 270. So if at all there is any dip, one can accumulate this stock for sure. I think it would thereafter be ready for the levels of say 400 to 450 as well. So from the medium to long term perspective, this looks positive. It's just that if at all it connects more to the levels of 270, 80, it would be a good buying opportunity.
Okay, we'll take 2 last queries and we'll move to taking your own top choice of stock, our advice as well. Jay, Swati has asked you, says this is a great show for retail investors. Thank you, dear Swati. The question is on JK Tyre. I have this at 320. What is the average level that you could advise here or a strategy?
Well, see, this is one of the stocks which is definitely quite impacted with the rise in the crude oil prices, and I believe that these auto ancillaries, which are actually quite dependent on the rising crude oil prices, may remain under pressure for some more time. So it's not the right time to average it out. I mean, it has fallen quite a lot, so I understand that it's almost become half from the recent heights. So it would be a pain for you to exiting at these levels. So continue holding out until unless there is a clear view that the crude oil prices have topped out or peaked out from medium to long term perspective. Once that happens, you can average it out so slowly and gradually the stock also recover going forward. I mean, that's one of the major concern, I would say, near term, right? So I don't see any other technical levels would really help you out until unless those crude oil prices peak out. So rather we wait and watch at the crude oil prices rather than looking at its individual levels is what I would recommend as of now for JK Tyre.
Okay, all right. We'll take one more question. Manoj Bhai Kapadia asks you, Jay sir, MCX क्या इस भाव से buy कर सकते हैं?
See, MCX has given good returns, undoubtedly. I mean, whether it is within the capital markets, MCX or BSC, both have given very good returns. But now MCX, I think, is likely to enter into the MSCI by the end of this month. And generally we have seen when stocks get into that, we generally see some profit booking coming in. We also know that NSE IPO is also likely very in the very near term. Because of the NSE IPO, we have seen BSE and MCX stocks both rallying quite a lot. So we are very new to these events, both MSCI rebalancing and NSE IPO. So I would say that from that perspective, it would not offer you a better risk, or you may not see that kind of a good move from you now. So it's better to avoid now getting it quite an elevated or astronomical levels. We would see to it if it all post this event, if there is some more steel left into these names.
Okay, and Jay, what about your top choice of stocks now? Where are you focusing your attention?
Well, sure, Sakshi, as I said that I'm bullish on the pharma healthcare space, and I think within that DRL, that is Dr. Reddy's lab, I mean, I'm quite bullish on that. I think that the current levels of 1325 is still offering you a good risk reward with a stop loss of say 1250 on a positional basis. With 75 points, that's roughly around 6-7%. 5-6%. One can see the levels of say around 1500 to 1600 as well going forward in the June series. So if someone actually wants to get into the futures, then it would be prudent to buy June series futures, as one can buy in the cash segment as well. You see the risk reward is absolutely in favor of goods. It's 1:3, 1:4 kind of a risk reward, Sakshi. So that is one stock from the pharma name, which I like at these levels. Apart from that, if I have to really look at, that it would be from the ferrous metals name, and I do like JSW Steel. But I would say that one can buy that on dips near the levels of say 1250. One can buy near 1250. The stop loss can be placed below 1200. One can target 1350 to 1400 going forward. So buy on dips is JSW, and one can buy the Dr. Reddy at the current market price as well.
All right, okay, Jay. We'll thank you then on that note for being with us on this special edition, addressing so many
Thank you.
queries of our viewers. Pleasure to have you with
Pleasure.
us.
Pleasure is all
Thank
mine.
you so much.
Sakshi.
All right, viewers, we're at 75 points higher. We've somehow cooled off a bit from the day's high point, but we are still holding up. 80 points strong onto the Nifty, above 23,730 odd levels. IT stocks continue to hover higher, but there is also some profit taking right at the top level because the index had gone up to 3.7% higher. It's now at 3.2% up. You have real estate, broader markets also continuing to move up. Rest all of the pockets are higher. Keep an eye out on the metals. That's where there could be some profit taking being seen. Right now, the index is higher in trade. But let's see how the second half of the trading session pans out. Stay tuned with us onto Business Today Television as we continue to get you all the fascinating insights from the world of business, stock markets and finance. Stay tuned.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Hello and welcome. You're watching Tech here on Business Today Television, your favorite tech and auto show. I'm Sakshi Batra and this is where I bring to you Tech It Easy, your weekly dose of all things technology. First up, look at how Google has held its most anticipated Android show this week, and it has definitely given us the first ever look at Android 17 and Gemini Intelligence, among a lot more other features which will now soon arrive this summer. First up, of course, for the flagship phones of S series of Samsung as well as the Google series of Pixel as well. Remember, this is where you will get to see how users will be able to automate a lot of tasks, and a lot of AI's ability will be able to be used to understand visual context, and everything that you see now on your screens can get AI-fied. Google also wants to change the way how you use your laptops. Google has announced Google Book, a new category of laptops that's built around AI, in particular Gemini Intelligence, and a MacBook Neo competitor, a product that has already seen so much success. And with this new approach, Google aims to bring the best of Android apps from Google Play Store into a modern OS designed around AI and intelligence. The company also says the Google Book is all set to launch this fall. Next up, it's Uber, which is set to launch its first ever India data center with Adani Group. Uber CEO Dara Khosrowshahi has announced the company's first data center in India in collaboration with the Adani Group, which is set to launch later this year. And this facility will be instrumental in testing and deploying Uber's technology at scale. Well, are you someone who can't help but scroll for hours and hours on your phone, endlessly watching random stuff on your smartphones? Well, then Google may have a solution to that. Google has also launched its new digital well-being feature with Android 17 called Pause Point, which claims to reduce smartphone usage by adding a short delay before selected apps open. This places a 10-second pause between a tap and the access to the app.
Also in the world of largest music streaming platform Spotify, which has turned 20, it's also celebrating its anniversary by gifting users a fully personalized look at your entire music history. So you can go back in time on Spotify from the day first that you joined on the app. You'll be able to see what you listened to on the first day and the total number of unique songs you've listened to, the first ever song streamed, and your all-time most streamed artists as well. Well, up next, you can be getting ready for Aryan, and he's going to get you the Gadget Garage and a very unique keyboard at that. Stay tuned for that.
Hello all and welcome back to the Gadget Garage, the place where we talk about the latest gadgets and the latest garages. Actually, no, it's the place where we talk about the latest gadgets and the latest vehicles in the world of automobiles. You know, the things that go inside the garage? Yeah, that. We have a packed episode for you today. We have the OnePlus Nord CE6, we have the unboxing of the Oppo Find X9s, we have the Toyota Wellfire MPV, and to start it all, we have a product जो जैसा दिखता है वो वैसा है नहीं. यानी it may look like something simple, but it is something much more advanced. Okay, so innovative products straight from the future, and good luck explaining to your manager why you can't work on any other keyboard in the office because your files are on your keyboard at home. But I joke, obviously, this is a very, very advanced piece of technology that we can't wait to get our hands on. This is the HP EliteBoard G1A Next Gen AI PC, a computer inside the body of a keyboard. You get an AMD Ryzen 300 series processor inside with up to 64 GB of RAM and 2 TB of storage. For AI functions, there's a 50 TOPS neural processing unit inside as well. Essentially, this is a plug-and-play device which works with any USB-C display. Plug it into any monitor and it becomes your PC. It's the same basic concept as a Mac Mini or a Mac Studio, except that it's in the form of a keyboard, so you will only need to connect a mouse and an external display for this to work. This device is coming soon. Would you buy it? Would it make your setup less clutter-free as HP claims? What are your thoughts? Tell us in the comments and keep watching Tech Gear. But next up, something we did get our hands on last week and have been reviewing it for the last week or so, the OnePlus Nord CE6. How good is it? How bad is it? Is it your next phone to buy? Time to find out. The OnePlus Nord CE6. ये वो under 30,000 rupee phone है that Indians have been waiting for a long time. Well, we've had it with us for over a week, and now let me tell you what's good about it, what's bad about it, and whether you should buy this device or not. Now, this phone is a bit of a mixed bag. इसमें कुछ अच्छी बातें हैं, कुछ बुरी बातें हैं जो कि हर फोन में होती है. लेकिन this does something for this price point that no other phone is doing. The display, however, is a major highlight. It's a 6.78-inch 1.5K sunburst AMOLED panel with a 144Hz refresh rate. Scrolling through social feeds feels incredibly buttery and fluid. When it comes to watching content, it hits a peak brightness of 3600 nits. Now, while that sounds amazing, and for bright images and light-themed content, it is amazing, watching anything dark in direct sunlight is a bit of a task. In fact, I tried watching the latest episode of The Boys on this phone. I was sitting in a cab, the sunlight was directly on the screen, and I could not tell anything that was going on. What dark scenes the, I get that, but even then, the only thing I could clearly make out was my own reflection. So while this is a beautiful screen, and for the most part you will be able to make out what's going on, so if you are watching movies or TV shows जिनमें बहुत सारे night scenes हैं या dark scenes हैं, this phone might struggle. But if you're someone who uses light mode a lot and loves to read, even in direct sunlight, आपको ज़्यादा problem नहीं होनी चाहिए. It is only the media consumption that might be a problem, that too in direct sunlight. On the bright side, no pun intended, you get solid performance from the Nord CE6. Usually at this price point you expect a low to mid-range chip, but OnePlus tucked in the Qualcomm Snapdragon 7S Gen 4 with 8 GB of RAM. We tested it by playing 2 heavy games at once to see if it would falter. It did not. No lag, no crashing, no heating, performance is punchy and stays smooth.
But one solid reason to buy this phone is the 8000 mAh battery. ये genuinely 2 दिन तक चलता है, even with moderate to heavy usage. But to push it to the limit, I did something called a help test. Now the help test stands for high endurance, lasting and performance, where I push this phone to its limits.
I call it that because when your battery drops low, you tend to feel helpless and need help in the form of a charger, but you can't always get one. You have no other option but to hope that your phone lasts a while longer. Most phones start to feel the strain under 20%, but when I hit that mark and switched to light usage, the OnePlus Nord CE6 lasted for more than half a day. That kind of endurance is incredible, especially when you're in a pinch.
And like I said, it's not all perfect though. ColorOS still leaves some things to be desired for. I am a classic OnePlus fan. I still miss the Oxygen OS. I think OnePlus has never been able to match up to that original Oxygen OS vibe. So that is something you will have to deal with.
The cameras on this are usable but nothing to write home about. You get a 50 megapixel main sensor, the OmniVision OV50D40 with OIS paired with a 2 megapixel assistance lens. You'll get a decent shot for social media and good lighting, but it's definitely not a pro photography tool.
So what's the verdict? Well, if you're looking for a phone under 30,000 that is powered by a Snapdragon 7 series processor, has a massive battery that refuses to die and has a super smooth 144Hz refresh rate wala screen, then the OnePlus Nord CE6 is a phone that you can't go wrong with at all. However, if you are considering buying it, make sure you keep in mind the software and also this fingerprint magnet of a back. Moving from OnePlus to Oppo, let us show you what you get inside the box of the Oppo Find X9s in another one of our Dabba Khol videos. Fair warning, the phone might look familiar, but the color is simply breathtaking. This Hasselblad will have you down bad. And now it's time to open the garage, but this time instead of 2 wheels, we have 4. Take a look at the Toyota Wellfire Executive Lounge, an MPV that celebrities like Ranbir Kapoor own, but it's not just the actors. Let us tell you why even CXOs today are choosing the Wellfire over luxury sedans. It's a hot summer day. I'm sitting inside the Toyota Wellfire Executive Lounge. I'm getting my back massage from the seats. I have my beverage right here that only the rich and affluent can afford at the current given moment. और साथ ही मेरे सामने एक स्क्रीन भी है. मेरे पास एक detachable remote control है, which is as good as almost a smartphone right here. Everything inside this car is controlled by this remote control. We've got JBL speakers all around. We've got a sunroof, a big panel here for a lot of luxury amenities. And joining me in this leisure/work executive lounge is Mr. Karan Dhar, who is the associate editor for Business Today. Karan, so glad for you to join me.
Glad to be with you.
अब मेरे को एक बात बताइए कि बड़े-बड़े एक्टर्स तो ये गाड़ी यूज करते ही हैं. जो आजकल के बिजनेसमैन और CXO लेवल एग्जीक्यूटिव्स हैं, वो ये गाड़ी क्यों प्रेफर कर रहे हैं?
See, Aryan, a lot of these businessmen, promoters, startup founders, and CXO level executives, you know, they're preferring this car over sedans and SUVs because the ample amount of space that is in here and the Ottoman seats that I'm sitting on, you can recline them, you know, as much as you can.
Yeah.
And if you can just see, there is a folding tray table. You can just if you can open it like this, and you can put it like this, and you can work on your laptop. Keep your laptop here and work on this. Okay. So these are some of the features. And there is a reading light if you want to read something. So these are some features. There are some HDMI ports. There's one over there. If you just open this, you can connect your laptop with it, and you can cast whatever you want to see over here.
So essentially, from a work perspective, this is essentially an office on wheels for them. Like you said, you can connect your laptop. You can work on it. I'm sure you can eat on this as well. There's a lot of amenities in this car that make them, I mean, if we can even call it a car.
This is kind of a rolling boardroom.
Right.
So earlier boardrooms used to be in offices where you would have a oval shaped table surrounded by chairs. Now, the people spend a lot of their time in traffic, stuck in traffic. Cities in India have so much traffic now. Executives don't want to waste their time, and they want to work in the car while they are on the move. So this car is why this and other luxury MPVs are why why businessmen are choosing it is because of the the space as well as the comfort and the utility that is here in this car that they can use while they're here.
This car perhaps solves the one biggest problem that most 6-seaters and 7-seaters have, and that is third row comfort. Let me show you how easily you can get into the third row and how spacious it actually is. I'm seated back here, and there is no shortage of amenities here either. You've got a sunglass holder. This is, by the way, the third sunglass holder this car has. There are buttons and toggles for sunshades right here. There are coat hangers back here as well, along with the grab handles. You've got cup holders, 2 cup holders on each side. Along with that, the release handle for the seat is right here as well. Now, as you can see, this seat is reclined quite fairly back. I am still not uncomfortable. मेरे पास काफ़ी जगह है यहाँ बैठने की. I am about 6 feet in height. But if I want to move these seats ahead, all I need to do is simply press one button here, and these will start moving ahead. But that is not where the amenities stop for the rear third row seat. There is also a USB Type-C port here on each side for you to charge your phone, and there is a third set of AC vents right here, along with controls for the reading light as well. So that makes sure कि भले ही आप आगे बैठे हैं या पीछे बैठे हैं, your comfort does not have to take the second seat or the third seat either. You are sitting in prime locations all around this car with a lot of features and amenities ready to take you to a next level of comfort and supremacy. Now, after that super relaxing segment, time to fast forward into the AI future with Business Today's very own AI anchor, Sana.
Tech fans, the floodgates are officially open. Some big launches happened this week, with more yet to come in the coming one. First, the long-awaited Oppo Find X9 Ultra has finally arrived. It's officially their most ambitious camera flagship yet, featuring a massive 1-inch sensor and Hasselblad tuning. Next, OnePlus just expanded the Nord family. The Nord CE6 Lite is now live, packing a massive 7000 mAh battery and a 144Hz display. And in the premium segment, the Motorola Razr Fold is here. It's thinner, smarter, unfolds into a massive 8.1-inch screen and is powered by the Snapdragon 8 Gen 5 processor. Finally, mark your calendars for May 22nd. Realme is set to drop a double-header. The Watch S5 with 20-day battery life and the Buds Air 8 Pro with flagship-grade noise cancellation.
Okay, thanks for that update, Sana. Time for you to go delete some M dashes. और अभी time है to answer some burning questions in our final segment, which is of course the FAQ segment. Hello all. एक बार फिर आपका स्वागत है to the FAQ segment where we answer all your burning questions and I answer all her burning questions, and I am joined by none other than मेरी सवालों की सहेली साक्षात मानिता.
What is your problem with introductions यार? मेरा नाम मानिता रलन है guys, बाकी सब भूल जाओ तुम लोग, मानिता याद रखना, ठीक है?
Maiden of curiosity.
वो ठीक है.
सवालों की सहेली. Well, Manita, welcome back to the FAQ segment. Please tell us आज आपके क्या सवाल हैं? आपने पूरा एपिसोड देखा है, I'm sure. क्या सवाल है आपके?
मेरा ना फोन बहुत पुराना हो गया है, मतलब मैंने इसे इतनी बार गेट दिया तो I need to buy a new phone. तो कुछ 30,000 के अराउंड अंडर मुझे चाहिए, तो क्या मैं ये वाला ले सकती हूँ? OnePlus Nord C6 आपके पास आया, मैं ले लूँ ये?
मतलब ये वाला तो नहीं, ये तो वापस जाना होता है. This is a review unit.
Okay, well.
But yes and no. Not because आपको ये वापस देना पड़ेगा, but the problem is, yes, if you like good-looking phones, if you like phones with long battery, and you want a beautiful display, go for the OnePlus Nord 6 with your eyes closed. But if you want the best photos and you want to use this phone for content creation, maybe look somewhere else.
देखो इन्फ्लुएंसर तो मैं हूँ, मेरे लिए बहुत इंपॉर्टेंट है, और इन्फ्लुएंसर मैं नहीं भी होती तो फोटो और वीडियो ही मेरे को लगता है, कैमरा एक फ़ोन है मेरे लिए सबसे ज़्यादा इंपॉर्टेंट है, तो आई थिंक मैं आईफोन ही खरीदूंगी फिर. बट मैंने देखा है कि तुमने कोई कीबोर्ड भी इस बार किया है, जो तुम कह रहे हो कि वो कीबोर्ड नहीं है, उसके अंदर पीसी है, ये क्या मैटर है?
ओके, सो इन्फ्लुएंसर तो आप हो, मैं ये बिल्कुल अग्री करता हूँ. As far as the keyboard is considered, yes, it is the HP EliteBoard Gen 1A AI PC inside a keyboard. यानी it looks like a keyboard, it works like a keyboard, but it is also a PC. मतलब इसका ये है कि उसके अंदर ही प्रोसेसर लगा हुआ है, उसके अंदर ही रैम है, उसके अंदर ही स्पीकर्स भी हैं और उसके अंदर ही कनेक्टिविटी पोर्ट्स भी हैं. सो इट इज़ एसेंशियली योर ऑल इन वन सोल्यूशन. आपको बस कीबोर्ड लेके जाना है, एक डिस्प्ले या एक मॉनिटर से कनेक्ट करना है, एक माउस लगाना है जो कि HP कहता है, उसके साथ में प्रीपेड आता है, एंड दैट्स इट. No CPU, nothing. सारा कुछ is inside the keyboard itself. Very similar to the Mac Mini or the Mac Studio, except Mac Mini में क्या होता है, आपको कीबोर्ड लेना होता है, आपको माउस लेना होता है, you have to get another display. But with this,
one question, sir, क्या ये मैं iPad में लगा सकती हूँ?
Technically you can, because there is a USB Type-C port there. You can connect it to your iPad and use that iPad as a display, and entire data आपका सारा जो PC का है वो उस iPad के अंदर आपको डिस्प्ले होगा, just like a PC and a monitor.
Cool. और what is this Wellfire MPV, ऐसा ही कुछ था ना? ये तो मुझसे बोला, एक तो मुझ सवाल ऐसे आते हैं जो मुझसे बोले ही नहीं जाते हैं, मेरे को जवाब समझना तो सेकेंडरी हो गया है, पहले सवाल बोलना मेरे लिए इतना मुश्किल. क्या है Wellfire MPV? ते टेक्निकल टर्म्स टेक्नोलॉजी शो में, चलो ठीक है.
मानिता, नाम है उस गाड़ी का Wellfire.
मारुति होता है गाड़ी का नाम यार, सुजुकी होता है, i20 होता है, Wellfire क्या नाम होता है गाड़ी का?
So it is the Toyota Wellfire, and let me make this more relatable to you. रणबीर कपूर के पास ये गाड़ी है.
ओह वाओ यार, अभी लिए क्या?
नहीं हो गया, काफी टाइम के पास हो गया है, गाड़ी को लॉन्च हुए टाइम हो गया. बट व्हाट्स स्पेशल अबाउट दिस कार, इट्स एन MPV, यानी इट्स अ मल्टी पर्पस व्हीकल. एंड आसान भाषा में मैं तो बोलूंगा, इट इज अ लाउंज ऑन व्हील्स. It is a very long car. It has lots of room inside. It's got 6 seats. Of course, captain seats है दोनों मिडिल रो में और पीछे वाली रो में. मसाज फंक्शन है गाड़ी के अंदर.
फुट मसाज हो जाएगा?
नहीं, बैक मसाज हो जाएगी आपकी.
मेरे कमर में भी बहुत दर्द.
हाँ, so बैक उम्र हो गई वो वाली, अभी कमर
मेरी हो गई.
ठीक है, तो there'll be a back massage function.
Fridge?
No, but you have cup holders in it.
Okay.
There's a lot of storage. आप लगवा सकते हो, उसमें बहुत जगह है. फ्रिज वगैरह भी, you can get a mini fridge put inside that car, no problems.
TV?
Yes, there is 2 displays. एक आगे की तरफ, there is one TV display that comes in the rear end, in front of the middle row, and you can use that to play music, watch something on it. There is an HDMI port to connect a PS5 or an Xbox. मतलब gaming भी आप full on कर सकते हो. But that's not why you should use that. आज की डेट में I was joined by Karan Dhar. He is associate editor here at Business Today, and he told us that is a vehicle, the Toyota Wellfire is a vehicle that is being used by CXOs, by senior executives more than celebrities actually. You know, एक time हुआ करता था where CEO level people used to drive sedans, luxury sedans. They are all shifting to an MPV, and especially to the Toyota Wellfire, because उसमें एयरप्लेन की तरह आप डेस्क बाहर निकाल के यूज कर सकते हो. You can keep your laptops, you can do your meetings from inside the car. You have, like I said, massage functions.
अब इतना पैसा उनके पास है तो कहीं तो खर्चेंगे ना?
It is close to 1.5 crores to buy that car, but it is literally a palace on wheels. You will love sitting inside that car, and it is something that if you're a CXO level, you've achieved that much in life, you truly deserve.
एक दिन मैं भी लूंगी.
बिल्कुल बिल्कुल बिल्कुल. So that was all the questions that we have today in the FAQ segment. Thank you so much, Manita, once again for joining me.
मैंने आपकी हेल्प करी है इतने इसमें.
बिल्कुल.
ये जो फोन है, ये मैं लेके जा रही हूँ. Thank you.
But next week review करना है इसको. आप कर दोगे review?
हाँ मैं कर दूंगी.
ठीक है. Next week we'll be reviewing the Oppo Find X9s. Make sure you subscribe to Business Today Television and are watching and commenting on the Tech Gear Show. Thank you so much for joining once again.
You're building something that is as simple as a human problem.
This is one category where I seem to find no digital or even remotely digital solution. At that point in time, whether it's going to be Snabit or even a startup was not clear.
So you have 40,000 daily jobs?
Yeah, we're now scaling to like almost 50,000 daily jobs. At peak, we're now exceeding 50,000.
What has been the gap that you have been able to bridge?
I don't have an exact number, but I would say 100 startups have tried to organize this space and not been successful. I just realized that this is a fundamentally broken problem that is existing for decades. While if you look at our App Store complaints, the biggest complaint is that, why are you not available in my area?
Hello and welcome. You're watching the Business Today podcast. I'm Sakshi Batra. From waiting for days to get reliable household helps to finding trusted home services just in a matter of minutes, the urban lifestyle is changing fast. And right at the center of this shift is a company that is being seen as the fastest scaling homegrown company that is dealing with quick home services platform. And that company is Snabit. The company has already crossed 1 million plus orders, 40,000 plus daily jobs, a strong 15,000 plus workforce of women, and the company has also seen its valuation double in just the matter of last 6 months to over $400 million. Let's welcome the management of Snabit, India's first and the fastest scaling homegrown quick service home services platform, Snabit. And let's welcome our special guest on board. We have with us Ayush Agarwal, the founder of Snabit. Welcome to you, Ayush, and good to have you with us on this special edition. Well, I want to start off by saying that you are probably solving one of the most critical problems that every household in India has faced at least once in their lives, or many times in a year.
I would say once a month at least.
Once in a month at least. So first up, give me an understanding of how did the idea of founding Snabit come about? In a world when everything is changing from technology and AI-led disruptions, you're building something that is as simple as a human problem. So how are you building a Snabit, and what got into you to start this?
Yeah, so I think when I was starting up, more than whether it's AI or tech-led or consumer-led, the question was that are we solving a problem, and are we solving a real problem, and are we solving a real problem at scale? So I think that was the genesis of how I went about thinking about what I wanted to build in. And Snabit, or rather daily home services, was at the intersection of three things. Number one is I think what I identified as a big gap in the service in the consumer internet sector. The second thing was my understanding of what the urban consumer today looks for. So I had spent a couple of years in a quick commerce company and seen it grow. So I understood that, the urban consumer is looking for quick, convenient and reliable solutions to almost everything. And here was a category completely undisrupted, informal and unorganized. So that was point number two. And the third thing was a deep personal pain point that I always felt on a recurring basis, where I felt like I have 2 to 3 apps for almost everything I need to do and the way I want to function. But this is one category where I seem to find no digital or even remotely digital solution to my problems. So the intersection of these 3 points became Snabit, which is now what we're talking about as urban India's last offline habit, which is getting digitized.
Absolutely. This is incredible. So give me an understanding. You did say that you were a part of quick commerce space before you started, Snabit. What got into you to leave Zepto and start something of your own, instead scaling something within already, a buzzing space that you were in?
So I think I had a great run for a couple of years, but I think these two decisions were not connected. So I think as entrepreneurs, we should, like, one of the biggest decisions we have to take is to give up all the stability and comfort that one has while working for, like, an established organization. And I think that was decision number one. And it was like, at that point in time, whether it's going to be Snabit or even a startup was not clear.
Okay.
So I think it was a different decision to leave, and it was a different decision to now that I've left to start up. But yeah, I think it all worked out really well for everyone.
तो जो आपके पास entrepreneurial mindset था, किसी दिन एक दिन ऐसा हुआ आपको मेड नहीं मिल रही थी तो आपने सडनली बोला मैं ऐप ही बना देता हूँ, मैं बिजनेस बना देता हूँ.
I actually said कि कोई क्यों नहीं बना रहा है, and that stayed with me. So I almost said that, why is no one looking at this? This is the problem. And that incident stayed with me, and it compounded over, like, repeated occurrences. So when I decided that, let me start up, I said this was the only idea I could think of, and it actually took me just 24 hours to say that this is the category I want to build in.
Okay.
Because I think it was just at the back of my mind, it just had to become front and center when I was ready to actually start up.
But wasn't this thought already available with a lot of entrepreneurs before? Haven't already some companies tried their hands and struggled here before you came in? And if there have been some probably beta phase or early stage platforms that could not succeed to the scale that you have done, what has been the gap that you have been able to bridge?
So I think, like, I would say, I don't have an exact number, but I would say 100 startups have tried to organize this space and not been successful. And I genuinely give myself 0 marks for the idea, because I think I still meet so many people who pull out like a college project from 10 years back and say that this is what I was trying to build.
Yeah.
And that tells me that, actually there's like 0 points for, like, coming up with this idea. It was staring at us, all of us, at our face. I think the disruption happened with the experiments that we ran early on. So what others viewed as a challenging space to build in was viewed by me as an opportunity to build something really large and meaningful. And then it was just about making a couple of decisions and building the operating system in a different way than what had been built before. So when I decided to build in this space, I went and spoke to a lot of ex-founders and entrepreneurs who had done this, identified the gaps in what I felt was what could have been better, and actually started building and iterating very, very quickly. So one of the things that we did within the first month of launching operations was to pivot entirely out of subscriptions and move into on-demand. And I think that one decision changed how this category operates and why this category scaled.
Okay.
And at that point of time, when we made this pivot, 95% of our revenues were coming from subscription. Not that it was meaningful, but even at that scale, one of the toughest decisions is to give up like 95% of your revenue and try to expand the pie for the remaining 5%. But today, in hindsight, that was the one decision that resulted to us, like, unlocking what we think is the hyper-local quick services segment, which actually does not exist anywhere globally. India is the only country where services occupy such a large wallet share for every urban household. And it's the only country where the way in which people live, the density of the neighborhoods, actually make it possible for us to operate a consumer internet business which works within like 500 meters of radius, which has 100% all women workforce, 98% of which walk between two jobs. All of it is not possible anywhere else globally. So there was no global inspiration for us. It was all about being very close to the ground, iterating very quickly, and finding the operating system which will power millions of jobs. And when we found it, we stuck with it, and I think that's what caused this disruption.
Did you consult your mom before starting this business, and what piece of advice did she give you?
See, I think as I said, culturally in India, we're all used to taking help consistently from folks around us, and I've also grown up in a very similar environment. So I think what stayed with me was the fact that this was my mom's biggest problem. So on a given day, if her mood's not really good, one of the possible reasons is that the house help hasn't shown up. And I think again, growing up in those situations, I just realized that this is a fundamentally broken problem that is existing for decades, shows up twice or thrice every month, and messes with the entire harmony that a household operates with. And I think learning from those experiences, it gave me more conviction to build, operate, and actually find a solution in this category. Because as you said, it was not very intuitive. There were so many examples that it had not worked in the past. Correct. So it needed some irrational conviction to just go after it and say that, this is going to work. And this is a problem worth solving. And I think everything that I've seen at home growing up, whether it's with my mom or even when I was living alone as a bachelor, I think all of those things played an important role.
So in the first 18 months of your operation, what is the biggest surprise that's come your way, biggest learning that's come your way so far?
So I think obviously there have been a lot of learnings, right? I think every day we end up learning something. As I said, the pivot from subscription to on-demand was a very big one, and one that ended up defining how this category operated. Another key design choice we made was to make it more hour-based and not task-based, because we realized that households don't function based as tasks. They function on the objective unit of time, right? And that it's measurable and it's quantifiable, and that's how we will be able to scale the business. We also realized that we want to go ahead with an all-women workforce, because I think it actually solves for so many things on the side of our experts, but it's also something that our customers are by and large very comfortable with. So I think building in this category, from a category lens, there have been a lot of learnings like this, which have actually compounded to Snapbit getting to where it has. And I'm pretty sure there's a lot of learning still for us on the way. One of the most important things for us was, and this was more recent, was that in order to make this business profitable and in order to be a market leader in this business, one of the most important things is to crack density in a micro market, which is very difficult. As opposed to going broad and launching multiple micro markets. So while if you look at our app store complaints, the biggest complaint is that why are you not available in my area?
Yeah.
And I have so many friends and family which keep asking me
Not
about it.
available in my area too.
I know, guilty as charged. But see, the point is that when it comes for us to focus and understand that, if we have to allocate capital and resources, we'd rather densify existing micro markets as opposed to launch new ones, because densifying existing micro markets actually improves the experience for the customer, because we get faster, we get more reliable as a function of being denser. As a function of being denser, our transit times reduce. And experts travel less, which means that they're able to monetize more of the time that they put into work, which means that they can earn more.
Correct.
And and because we are able to be quicker and because we are able to guarantee more earnings, the marketplace benefits from solving for unit economics. So I think this was a very, very recent learning, and it actually defined the way in which we operated and built the business at a time when everyone was there was a lot of craziness and irrationality in the market. We stuck to just operating in few micro markets, but making sure that we're winning in each and every micro market that we're operating in. And that's why today we're doing the largest number of jobs in this category, while being in the least number of cities and micro markets, and spending the least number of rupees per order. So I think that's been a very, very recent learning, and I think there are many more to come.
So you have 40,000 daily jobs?
Yeah, we're now scaling to almost 50,000 daily jobs. At peak, we're now exceeding 50,000.
And overall 1 million orders is what you have already got, and 15,000 plus workforce is what you have currently, all women, and you would like to stay on course with that exact parameter of 15,000 or growing women on board. It's only going to be women?
See, I think every category is going to be different. The house help category for now we think is predominantly going to be an all-women workforce. It's similar to saying that when mobility apps got built, the workforce was predominantly male, because the offline industry was dominated by male drivers. Today, obviously, there's more diversity. So we think that there will be diversity, but with this category, house help will predominantly be driven by women, as it has been for as I think the ecosystem is comfortable with. For example, 90% of our end consumers are females, and they're more comfortable with another female helping them out as opposed to someone from the opposite gender.
Absolutely, reliability, trust, loyalty, those are all the factors. So how are you dealing with that? Because as you also pointed out, that a lot of things we've seen while we have been growing up in our household, and what are the needs that we've emerged from that. So I want to understand, in our households there's also been a trend that you groom a family or a set of people to be with you for many years, for decades, and they stay loyal to you, and you have a certain trust that is built up. So how is this new category breaking into those kind of spaces?
Yeah. So whenever technology disrupts a category, or whenever the way in which these categories have operated for decades, undergo some transformation, you will see the definition and the contours of trust and reliability getting rebuilt, not getting diluted. Let me give you an example. Like, when you own private vehicles, you also build the same relationship with drivers, right? People who help you, and like, it passes on generations as well. But today we are so comfortable with platforms, other mobility platforms, that actually are unknown strangers ferrying us around from one place to another, and doing so even, like, at late in late hours, right? So I think similarly in our category, the platform takes the responsibility of conducting very thorough verifications of the expert, something that's never happened in this category, even offline. So even in the offline we basically do very, very stringent KYC checks. We also check their court and criminal records and make sure there's no past instance of wrongdoing from the expert. Now all of this, which we've built with the help of technology and by integrating ourselves with third-party applications which do this for us, this does not exist in the offline world. So in a lot of ways, people entering your homes are digitally more verified than the ones who were entering in the past. It's just that the relationship that one has cultivated over time in the offline sector does not exist here. But that's where the brand comes in, steps in, and takes the responsibility of building that trust, conducting these verifications, and making sure that anything that deviates from normal is taken up very, very seriously.
When I talk about scaling this, you're currently in, certain 10 cities. You talked about 140 micro markets that you are in. But is this model successful only in metros? Can it also be successful in tier 2 and tier 3? Can it also be successful in independent households vis-a-vis, the high rises where the density is too much? So how are you looking at all of these aspects?
So I think the last 25 years of consumer internet India will answer this for me. If you look at mobility, e-commerce, food delivery, and even quick commerce now, I think we all questioned whether these categories will operate in tier 2, tier 3. Looks like for some of these categories, even tier 4s now become a market that they're going after. So I think we underestimate the potential and the wallet share and the purchasing power that these markets have. Having said that, I am very bullish on the fact that a platform like Snabit will eventually enter into tier 2 and tier 3 markets and follow the same route that a food delivery or a quick commerce or a mobility app did, because I know that the wallet share exists. It's just, again, operating offline. However, having said that, there will be some changes on the supply chain operating system that we will have to build. As you said, vertical housing versus horizontal housing. These require very different approaches on how we network design, how we manage supply, and how we move supply around. So, for example, in markets where vertical density is does not exist, maybe we'll have to go with a higher mobility share of experts who are in some way or form more mobile and can reach longer distances within a shorter period of time. So those are supply chain innovations that we'll have to come up with. As far as the consumer demand and as far as the propensity from the consumer to pay exists, you'd be surprised that more requests that come to us today are from tier 2 and tier 3 cities as opposed to the metro cities.
Okay. Since you're talking about, delivering instant help to people in just about 10 minutes, and that's something that caught the attention of many wherever you advertised Snabit. I want to understand how sustainable is that going to be? Because when we compare with quick commerce, the kind of FMCG products that we get delivered in 10 minutes is already stored in dark stores. But how do you ensure availability of human capital here?
So, see, let me give you some data around this. The average distance traveled, so in quick commerce, there are two parts. One is picking and packing, which happens in the dark stores, and the other part is the transit, which is the last mile delivery of the order. The average distance traveled in the last mile delivery is roughly around, I would say, 1.5 to 2 kilometers, and it's done through a vehicle. So typically, how it works is a couple of minutes are spent within the warehouse, and the remaining is spent in transit. If you talk about how our operating system works, there's actually zero time spent in packing, because there is no inventory, right? There's no third-party logistics either. So there's no picking, packing, there is no handshake, none of it. Basically, the expert has to just accept the job and just start out. And the average distance between two jobs, given today's density, is roughly around 247 meters, which means that, and today we're doing roughly 300 jobs per micro market per day. Imagine if this goes to 1,000 jobs per micro market per day, this 247 meters is actually going to come down to 100 meters. So we are actually going to get quicker, not because of anything else, but because of density. Now, if an expert is walking at the speed of 4 kilometers per hour as well, in order for them to travel 247 meters, it takes roughly 6 to 7 minutes. And if you actually make it 100 meters, that is less than 5 minutes. Yeah. So we will be reaching our customers quickly as a function of demand density, right? As opposed to anything else, which is something that, which is very fundamentally different from quick commerce, because 98% of our experts walk, right? And there is absolutely, like as I said, the way this works is that the same transit time is translated into monetized time, which actually helps them earn more. So actually, I would say that the faster we are able to reach consumers, the more sustainable it gets for us.
But the pricing strategy, you're also starting out at a discounted price at this point in time. So how long will it be sustainable? Will it quickly change to much higher pricing, and then will there be a shortfall in demand? How are you looking at all those aspects? Because in India, we do want convenience. We do want a lot of these services, but we hate paying high for such services as well.
See, so firstly, just to complete the question I was saying, there's a fundamental difference in supply chain for our business as opposed to, say, a quick commerce business. And the second thing is that what will power the decisions on the consumer side as for pricing, as well as on the expert side for reaching in time, will be a very, very strong layer of data intelligence that we build, where we are able to actually project at which lat long, at which hour of the day do we need how many experts in, and how do we get those experts at that point, right? Such that once they log in, they actually are able to cater to the demand that comes in. So think of the fact that, if this building, we have to project that this building has 1,000 people living, which means that we expect X number of jobs every day. And those jobs will be distributed in this form across the multiple hours. And not those hours, someone right outside the building is logging in, such that all they have to do is cross the road and just enter in.
Okay.
And that makes it quicker. So there's a supply chain innovation, which is all about demand density and driving demand density by acquiring, retaining, and increasing frequency of consumers. And the other part is a data-led intelligence layer, which actually empowers and in multiple ways powers this entire network of walking experts. To the part where you spoke about pricing, we look at pricing in two parts. Part one is, this is a category being built. The friction or the barriers to experiment and use within this category and to trust this category needs to be very low for consumers to actually get excited about it, which is why the first 1, 2, or 3 bookings are generally subsidized. These subsidies are borne by us, and the intent of these subsidies are to acclimatize and introduce the category to a consumer. Because as I said, there is no global comparable or even national comparable to this business. So it's like when the likes of Uber and Ola entered, they offered you a free ride.
Yeah.
The idea for that free ride was to actually experience what it feels like to book a cab online and have it show up in a couple of minutes, and then that whole ride experience. So that's one part of pricing, where we will continue to invest. And the way we look at it is that, if you're investing X over the course of the consumer life cycle, how much value are we deriving from it? So we're very, very focused on the LTV to CAC formula when it comes to investing in pricing for new consumers. After the initial bookings, once we've actually demonstrated to the consumer that here's the value we provide, we do increase our prices, and it typically operates between roughly 150 to 200 rupees an hour. And I think at that point, I'm very confident that we can build a sustainable business, provided we are able to drive the right density and operate at the right utilization levels.
Also, the question comes in on profitability. Where are you at in terms of profitability, and what's the roadmap going forward from here? Because often such services, lead to a lot of cash burn for companies. We've seen that happen with quick commerce firms already. We've seen that happen with Zomato, with Swiggy. How they have started off with Blinkit and Instamart, and how much losses they're incurring at this point in time. So how are you dealing with all of that, and what is the kind of outlook that you have on profitability?
So two things are fundamentally different from and these are very valid comparables, because every time we think of consumer internet disruption, we go back to, like as I said, food delivery, quick commerce, mobility. And it's true that in order for these platforms to become what they have, they had to spend sizable amount of capital. But two things are different about the time and the industry we're building in. Firstly, customers are very, they're very familiar with digital solutions to their real home problems, thanks to all the investments made over the last couple of decades. People today look for digital solutions. They trust digital solutions. So the amount of investment needed to basically get a customer to make a trial is much lesser. So that's number one, right? Times have changed, and people are way too familiar with using mobile apps, etc., to experiment and try new services and products. The second thing is that our category has the leanest profit, like P&L that exists. So, and you can compare it with any other consumer internet business. We don't have any warehousing. We don't have any third-party logistics.
Okay.
We don't own any inventory.
Yeah.
We have a negative cash conversion cycle. We don't make any working capital investment. We're basically just about demand-supply matching, right? And that manifests itself in the form of a single metric, which is utilization. How many experts do you have? How many hours do you have from those experts? And how many of those hours are you able to translate into monetizable hours? And if you're able to do it at 50%, this model won't work. But if you're able to make it 65, 70%, this model will work better than any other model. And the way to look at profitability for us is to start looking at mature micro markets, right, which have been around for some time. Because see, this category is operated at a point where we've gone from 10 micro markets to 100 plus micro markets in 12 months. So obviously the new micro markets are in their hyper growth phase and they require cash investments, which is why our overall profitability, our overall P&L is in the red. But having said that, what's really important is that the 10 micro markets that existed 12 months back, are they starting to show signs of profitability? Because if they are, the remaining 90 also will follow the same glide path. And that for us is happening. So we're very confident that, in the current quarter, we will be able to make sure that some of our earliest micro markets are now turning profitable. And as you move forward and as the new micro markets become mature, they'll follow the same glide path. So I think we're actually in a very, very fundamentally asset light and capital efficient business. We obviously have to execute well. We have to make sure we deliver value to both sides of the marketplace, the consumer and the expert. And the one way to do that is to drive utilization levels higher because it benefits everyone. And I think as far as we're doing that, as long as we keep doing that, mature micro markets are going to start giving us back capital, and we're going to keep investing it in new micro markets. And that's how we think about unit economics.
What's your average revenue per order right now, and where do you see it growing to?
See, roughly it's around so obviously, as I said, right, there are multiple ways of looking at it. If I don't talk about the discounts that we provide just from a consumer acquisition point of view, it's like roughly in the 160 to 170 rupees range per hour. But obviously, if you're acquiring a customer, then you take a platform decision to subsidize it a little bit. Having said that, pricing is prone to a lot of fluctuations around demand supply. So if you're oversupplied, you tend to reduce prices a little bit. If you're supply constrained, you tend to increase prices a little bit. At the end of the day, what you really need to solve for is, are you able to, if you're able to, for example, if you're able to get from 70% utilization to 75% utilization, you can actually reduce prices for the consumer at 10 rupees per hour and still deliver on the same margins. Okay. So, and that's the constant endeavor from our side. Like, can we improve efficiency of the platform and pass on the benefits that we have due to that efficiency in the form of lower prices? Okay. I think that's the thought process that we are working with.
आयुष, अभी जो आपकी प्राइमरी कैटेगरी है वो हाउस होल्ड चोर्स की है, जो कि आपके 15,000 वर्कफोर्स अभी सर्विस करते हैं, लेकिन क्या आगे जाते हुए आप स्नैबिट को एक फुल होम सर्विसेज कैटेगरी में भी बढ़ते हुए देख रहे हैं? क्या कुछ और कैटेगरीज आपके माइंड में है जो आप एंटर करने वाले हैं अब आगे जाते हुए?
देखिए, पूरा होम सर्विसेज जो सेक्टर है वो पूरा इनफॉर्मल एंड फ्रैगमेंटेड है. और अगर आप 6 करोड़ हाउस होल्ड्स ले लेंगे, 6-10 करोड़ हाउस होल्ड्स ले लेंगे, जो टॉप 6-10 करोड़ हाउस होल्ड्स लेंगे, सो उनके अक्रॉस लाइक द वॉलेट शेयर इज लाइक रियली हाई. इट्स द सेकंड हाईएस्ट वॉलेट शेयर कैटेगरी आफ्टर ग्रोसरी.
अच्छा.
हाउस हेल्प उसमें से एक सेक्टर है जिसको हमने टैप इन किया है. इट्स अ यूनिवर्सल प्रॉब्लम एंड इट्स अ प्रॉब्लम एवरी हाउस होल्ड फेसेस. इसके बाद होम कुक्स है जिसको हमने पायलट किया है. द पायलट हैज़ बीन सक्सेसफुल और हम स्लोली एंड स्टेडीली उस कैटेगरी में भी बिल्ड कर रहे हैं. इवेंचुअली लॉन्ग टर्म हमें लगता है कि वो हर चीज़ जो आपको घर में, जिसमें आपको एक इंसान की ज़रूरत पड़े, आपको मदद की ज़रूरत पड़े, वो सर्विस हम आपको जल्द से जल्द और रिलायबल वे में प्रोवाइड कर सकते हैं. बट कोर कैटेगरी पे फोकस रहेगा, बट न्यू कैटेगरीज विल बी बिल्ट अराउंड इट, एंड ओवर टाइम द न्यू कैटेगरीज विल ग्रो फास्टर देन द कोर कैटेगरी एंड मेक श्योर दैट over a longer period of time we're like an all-in-one solution for home services.
ऐसे में हमने देखा है कि बहुत सारी और भी कंपनी हैं जो कि सेम कैटेगरीज में काम कर रहे हैं। कुछ कंपनीज है जैसे अर्बन कंपनी जो कि ऑलरेडी काफ़ी पायनियर स्टेज से ग्रो हुई है और धीरे धीरे उन्होंने भी अपनी कैटेगरीज को ग्रो किया है। आपकी कोर कैटेगरी में भी बहुत सारे नई कंपनीज आ रहे हैं और कंपटीशन यहाँ पर बढ़ने वाला है। तो आप इसे ऑलरेडी कैसे देख रहे हैं, कैसे आप अपने कोर यूएसपी को बचा के रखेंगे, मार्केट शेयर को प्रोटेक्ट करके रखेंगे, येट एट द सेम टाइम अपनी मार्केट को ग्रो भी कर पाएंगे जब कंपटीशन इतना बढ़ता है? तो
हमारे लिए बहुत सिंपल है कि हमें दो टाइप के कैटेगरीज होते हैं। एक होता है हाई फ्रीक्वेंसी लो एओवी, मतलब
एवरेज ऑर्डर वॉल्यूम,
एवरेज ऑर्डर वैल्यू कम है बट आपको ज़रूरत बहुत ज़्यादा है, आपको महीने में 3-4 बार चाहिए। और एक होता है जिसकी एवरेज ऑर्डर वैल्यू बहुत ज़्यादा होती है पर आपको साल में 1-2 बार चाहिए। हमें सेकंड
एग्जांपल के तौर पे बताइए।
डेली क्लीनिंग इज़ हाई फ्रीक्वेंसी लो एओवी, राइट? आपको रोज़ की सफाई। डीप क्लीनिंग इज़ लो फ्रीक्वेंसी हाई एओवी। फेस्टिवल आया तो सफाई करवानी है, मूव इन किया घर में तो सफाई करवानी है, राइट? We don't have any plans to enter the latter. We want to keep our focus into high frequency and low AOV services because we think that number one, India में इस कैटेगरी के लिए TAM is 6-7x higher. आप सोचिए कि हम अपने घरों में रोज सफाई करवाते हैं
जी।
और हम शायद ऑफलाइन वर्ल्ड में 100 रुपये देते हैं, तो हम महीने में 35 से 40 हज़ार इस कैटेगरी पे खर्च करते हैं। पर अगर आप डीप क्लीनिंग की सोचेंगे तो शायद साल में 1 या 2 बार लोग करवाते हैं और वो भी 2-3 हज़ार से करवाते हैं। सो इसका वॉलेट शेयर 35-40 हज़ार है पर ईयर, इसका वॉलेट शेयर 3-4-5 हज़ार है पर ईयर। सो दिस कैटेगरी दैट वी आर बिल्डिंग, विच इज़ आर कोर, द ब्रेड एंड बटर लेयर ऑफ सर्विसेज, व्हाट आई कॉल इट, is basically 7 to 8x larger from a wallet share perspective. The other part is when you reduce your AOVs, you actually attract a larger TAM. You are able to penetrate more households, you are able to get more people to use it, and that's why we feel that this is the part we'll operate in. So we want to increase and add more services to the same concept of high frequencies home services. So home cooks, child care, elderly care, drivers, these are the kind of categories that we want to venture into in the future.
ठीक है। मैं आपसे ये भी जानना चाह रही थी कि अक्सर हमने देखा है जब भी अर्बन हाउस होल्ड्स को प्रॉब्लम आई है वो इस वजह से भी आई है। हाल फिलहाल में ही एग्जांपल्स आए थे कि एक स्टेट में इलेक्शंस हुए, सारे के सारे वर्कर्स वहाँ पर चले गए। किसी और पार्ट ऑफ द स्टेट में अभी हार्वेस्टिंग सीज़न है और इन सब के फैमिलीज़ में ज़रूरत पड़ती है ज़्यादा ह्यूमन कैपिटल की, तो वहाँ पर वो लोग चले जाते हैं। बहुत से लोग ऑलरेडी 1 महीने के लिए छुट्टी का उनका पैटर्न है कि 1 साल में 1 महीने के लिए हमें वापस गाँव जाना है, या फिर कहीं पर भी माइग्रेंट इशूज़ हो गए, जैसे LPG क्राइसिस आया तब भी इशूज़ क्रिएट हुए, बहुत सारे अर्बन हाउस होल्ड्स को प्रॉब्लम हुई। इस तरीके की इमर्जिंग जो बार बार प्रॉब्लम्स आती हैं, इनको आप कैसे केटर करेंगे?
So these are very real problems that exist across categories. Whenever you're working with whenever your business involves a large workforce in a country like India, right, where there's a lot of migration and there's like a lot of festivals, there are a lot of events, like as you said, the harvesting season comes about. These are cyclicalities within the calendar that one has to start understanding and start building towards. And I think that's also one of the benefits from organizing workforce. Like for example, the kind of initiatives that we can run with by virtue of having a central organized structure to it. Think about it, running incentive programs. Those don't exist in the offline world, right? And it's impossible to design such like an incentive structure to solve for something like this. But once you aggregate a category and once you digitize a category, those are possible. So I think that these are like very embedded nuances of this business as exist with other businesses, and that we'll have to find a workaround for this. I think that this is the first year, like just to give you context, same time last year we were doing less than 1,000 jobs. So we had very different problems to deal with, right? That time we were thinking, is this working? How will we add more supply, right? Are our playbooks strong enough? And today we've basically grown 100x. So our problems have changed, and I'm glad that it has happened, right? So now we're facing the issues of say elections, state elections, or harvesting season, or even any macroeconomic conditions which affect supply for us. But the way to look at it is that we've scaled to that level now. These are problems to deal with. So I'm very confident that we've obviously learned a lot from what we've seen over the last few months, and we will make sure that moving forward this is not an issue that happens again, and that we proactively work towards designing solutions for our consumers in a way that the reliability is not affected. Like, just to give you an example, maybe like, we have to really ramp up on supply onboarding right before such events at a city level, at a micro market level, and we have to build that intelligence within our platforms to be able to start working at the right time and with the right incentive structure. Now, that's not the foresight we had before this happened, but now having learned so much in the last couple of months, I think we will use everything that we've learned and do better next time.
आपके लिए अपने internal targets क्या हैं? You're already at 1 million plus orders, you're 50,000 jobs, you're at a valuation of $400 million. What's your own internal target on all of these parameters and even more going forward from here? Where do you see yourself growing over the next couple of years?
So I think this category is going to be one of the largest consumer categories that this country has ever seen, because of the fact that the offline to online story and the scale at which it's going to probably happen is unparalleled. It's a daily use case for almost every urban household with no digital solution in sight, right? Almost 98% of the spends in this category are offline. So I think we're still scratching the surface, right? Or we're still scratching the surface of the surface in some ways. So I think for us, like in the next couple of years, we want to scale 30x. We want to take this from 1 million jobs a month to 1 million jobs a day.
Okay.
And just one category. And obviously, like, build other categories as well. So we're very ambitious with in terms of like, the kind of milestones we want to set for ourselves, and hopefully we get to achieve them. We're going to work relentlessly to make sure we achieve those. But yeah, for now we're obsessing about like 1 million jobs a day.
तो आगे जाते हुए अगले 5 साल में where do we see Snabit? Will it be scalability? Will we see a pan-India presence? Is that on top of your radar? Is profitability going to be your first priority? Is it going to be launching an IPO? What exactly are you looking at over the next 5 years?
I think fundamentally building a healthy and sustainable business, which is large enough because of the opportunity. So like, a lot of these things that you mentioned actually go hand in hand. At the end of the day, we have to deliver value for our shareholders. So generating profits is not something that's not on the radar. But we do feel that there is a very, very clear way to grow and scale and to build sustainably. For example, investing in new micro markets while generating returns from existing mature micro markets is actually like a fundamentally good place to be in. Because if we want to if we're at 100 micro markets and if we suddenly launch 900 more, right? I'm just hypothetically saying it. We will take a hit on the overall P&L, but as long as the 100 are returning money to you, it's the right thing to invest in the next set of micro markets. We remained in one micro market for 1 year, perfected the business model before scaling it. So for me, it's all about capital allocation. As far as your question on where do we see this 5 years from now, I see two things. Number one, I think we'll build one of the largest consumer companies in the country that the country's ever seen, if we execute well. And I think the second thing is that the way it will manifest ourselves in real lives is that this will basically make households function better. This will provide dignified employment to thousands and thousands of experts. This will actually be one of those, I would say, we're building the rails for household to function more efficiently. And today, this is the way we talk about so many other consumer internet businesses as if they're embedded into our life. Snabit will be one of those.
All right. Well, wish you all the very best. Thank you so much, Ayush, for being with us and for sharing your incredible story. I wish you all the very best for all those dreams that you have to scale up Snabit, and we'll see how it fundamentally changes, organizes, formalizes home services in the country going forward. Thank you so much. It's been a pleasure.
Thank you so much, Sakshi. Lovely speaking to you.
Thank you.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Good afternoon, ladies and gentlemen. A very warm welcome to all of you on Business Today television. While we seem to have a light green shade of gains on Dalal Street as far as Tuesday is concerned, but the overhang of the energy markets is clearly visible on corporate India. You just have to look at the financials of BPCL, IOC and Indraprastha Gas to see the impact that the West Asian crisis has had upon India, and the pain that the entire corporate world is suffering, not only in our country but across the world, as far as rising crude oil prices and the crisis in the Straits of Hormuz is concerned. Where is oil headed? How will this situation solve itself out? If it doesn't, what should you be doing? For all these and many more questions, we are now joined by India's foremost energy expert, Mr. Narendra Taneja. Namaste Narendra ji, a very warm welcome to you.
Thanks for having me.
Yes. Oil is back on the boil, and the crisis that is there in the Straits of Hormuz refuses to solve itself amicably. Both parties, which is US and Israel on one side and Iran, are hell-bent to sort of create more global mayhem in boardrooms. How are you seeing this oil market at this point of time between supply and demand?
Well, I mean, first of all, the situation over there, the US wants to basically get out of that region, get out of that war. But then at the same time, America's alliance partners there, Saudi Arabia, United Arab Emirates, Qatar, Kuwait, and all these countries which are major exporters of, oil and gas, they don't want America to leave that area because they think that, Iran is stronger today than it was before the war. And at the same time, they think that if America quits the area, then probably life is going to be a bit difficult for them vis-a-vis their relationship with Iran. So my own sense is that, unless we find some kind of breakthrough there either through diplomacy or through war, the Strait of Hormuz is not going to get open. In such a situation, which means that 1,600 ships, mostly tankers, stuck there with 20,000 mariners on these ships, across the region, means that, there would be no free flow of oil and gas and fertilizer and petrochemicals via Strait of Hormuz. As it is, 15% of oil has practically disappeared from the global supply system thanks to the crisis in the Strait of Hormuz area. So in such a situation, first, what happens to the war? Because the war in a way is still going on. And then what happens to the Strait of Hormuz? On both of these fronts, the picture as we look at the horizon today is extremely pessimistic.
So, Mr. Taneja, let's take it one by one. We'll first look at where oil could possibly be headed. What's your gut feel? We've seen Brent now well above 110. Our own India basket is inching above $120, $125 per barrel. What is your prognosis for oil over the next 2 or 3 months?
Well, when I look at the oil landscape in the, let's say, couple of 2 or 3 months, I think the prices are going to move only in one direction, that's north. The picture, the price that you see on television screen or on traders' screen saying that oil Brent is $110 per barrel, $111 per barrel. But when you talk to big buyers like India, China, Korea, Japan, Pakistan, others, the price that they are paying is quite different. Most of the countries, including India, are paying $120 plus per barrel when they go out, reach out to the exporters, or when they approach the traders, or in the spot market. So that is the situation. So unless if the prices have not touched $130 per barrel, let's say on the screen, that's mainly because majority of the oil that is kind of in the flow in the supply system is coming from strategic petroleum reserves of a number of countries, including India. That means the flow is somehow maintained, so that it creates the impression there is no shortage of oil. Prices have gone up but no major disruption in terms of supply. But that's because oil is coming from these reserves. And these reserves have started actually going southward, depleting now. So which means that in 3-4 weeks from now, unless things begin to get normal and they start, countries like Saudi Arabia started pumping more oil, or Iraq or Kuwait and Abu Dhabi, they start pumping more oil, and that oil can flow into the global supply system. Then the prices are going to go up for sure in 3 to 4 weeks or in about 5 weeks from time. So when I look at the horizon, no diplomatic breakthrough. Iran only recently, just 2 days back, attacked nuclear power plant of United Arab Emirates, and America last night had issued new threat to Iran, which means that there is no major breakthrough on the horizon. At least that's not what that we can see. And at the same time, strategic reserves have got a limit except for China. China has, they've basically has been holding and putting oil in their strategic petroleum reserves. So except China, which is sitting on 1.6 billion barrels of 1.3 billion barrels of oil, except China, no other country is in that position. So therefore, the oil prices are in one direction, and that's going north.
Okay. We've had two minuscule price increases in India. One happened last week, one today. Are more in the offing now that Prime Minister Narendra Modi has made the criticality of situation known to the citizenry? What do you think is the GOI response? Muted? Should it be more aggressive? How do you see the end game?
Well, I understand the government's dilemma, because oil is extremely politically sensitive commodity, and oil is one commodity, whether you're poor or you're rich, you are very poor, you are a billionaire, it touches your life. And especially when it comes to vulnerable sections of society, about 80 crore people who are below energy poverty line, it's extremely sensitive, especially when it comes to amount of oil that they buy, maybe 2 liters per month, and LPG. So therefore, the government has been extremely careful. However, it has resulted into the government of India's own company, which are responsible for bringing oil from wherever possible in the world, refine it, process it, distribute it. Their financial health is in a very bad shape. And when they were allowed to increase the price, let's say earlier 3 rupees and now less than 1 rupee, it has helped a little bit, but not much. At the same time, these very companies are responsible for India's oil energy security and making sure oil is available for the Indian economy, Indian domestic consumer. And if these companies financially are not doing well, or they're in a bad shape, they would have tough time negotiating good deals with exporters around the world and bring that oil to India, and also to get good credit. For instance, credit is important when you're in this kind of business. So my own sense is that probably government is going to go middle path. Maybe petrol, diesel prices are definitely going to go up. Maybe gradually, not in one go, because that creates a shock that the government would like to avoid. But if you keep on increasing, let's say 60 paisa, 90 paisa, 50 paisa, but then take it to maybe a total of about 7 rupees or 9 rupees or something in that region, that probably would help the situation. And at the same time, if the war continues, I say war because this is still continuing, and Strait of Hormuz remains closed, then I think they will have to come out with some extra measures on the one hand to protect the most vulnerable, the poor section of society, maybe doing something for them, and at the same time, some kind of mechanism so that these companies can be protected. Like 15 years ago, oil bond or something of that kind of instrument, which will give them some kind of stability.
Did I hear it correctly that you expect a price hike, even though it could be gradual, of 7 to 9 rupees per litre?
Inevitable.
Okay. Let's look at the whole equation from the Iranian point. For about 30 odd days, guns on both sides are silent. One understands that Iran, for some reason, thinks that it has won the war and has therefore kept Hormuz blocked. But the fact on the ground remains even worse. Their own economy, Mr. Taneja, is on the ventilator, if not in an ICCU. do you think the regime is able to withstand all this pain even domestically?
Well, that's a very interesting question. You see, many of the narratives on what's happening on the ground in Iran are coming from the Western media. We don't hear much from, for instance, what's happening on the ground from, let's say, Iranian media or for that matter, independent media. So we really don't know what's happening on the ground. However, that said at the same time, the thing is their economy, their people, the overall, the country has been in a bad shape, call it ICU, call it whatever, for very, very long time. They're used to it. So people who were, let's say, 47-year-old, that's the time when the revolution happened there, they really they're not exposed to any other world except what they're into today. So for them, religion comes first, nationalism comes first. In fact, my own sense is that, Iran was more fragmented socially and economically and politically before the war than it is today. Because now the thing is that they say, oh, we have been attacked by Israel, we have been attacked by America. So if you're not all together, you are the entire nation. So that sentiments has basically, I wouldn't say united the people, but it has changed the picture. The society or the country as a whole is not as fragmented, as divided as it was. It's still divided, but not as divided as it was before the war. Therefore, the situation now is that, economically they're not doing well. Their exports have gone down, especially of, oil to China is hitting the economy hard. But at the same time, the thing is, they are the people who are used to hardship. And for America, the thing is that they have to, the perception globally now is that Iran has won the war. You talks with even with some other American thinkers, they say that, look, Iran has won the war. Why they have won the war? Because they have not been defeated. And America is now basically trying its level best to get out of the situation. The reason they are not able to do so because they are under pressure from Saudi Arabia, from their alliance partner in the Gulf region and even beyond Gulf. That look, you can't go like that. Who is going to trust you? All these major oil exporting countries of the Gulf, they have basically been dependent. They have outsourced their security to America. And now America says, we can't protect you. We have to leave. Then the question is that will create a huge geopolitical and military and security vacuum in that region, which America can't afford. If you create a vacuum, countries like China would move in. So they can't do that. So therefore, America is in a dilemma. Don't be surprised if you see second round of major military attacks from Israel and America against Iran. Unless Iran says, okay, agrees to something which, for instance, would be interpreted by many as a kind of surrender. And Iran at the moment doesn't seem to be in that kind of situation. So we really don't know. Very tricky situation. And Iran also does not want war, but at the same time, they can't be seen in the eyes of their own people that they have surrendered to the United States and Israel. So very tricky situation.
Mr. Taneja, we will leave this for historians to figure out who won and who lost. Please also analyze for our viewers the exit of UAE from OPEC and the importance of Fujairah for India.
That's a very, very interesting question. You see, if you see the history of OPEC the last 3 years, OPEC has been telling the United Arab Emirates that, look, we give you quota in terms of oil production and you are not basically honoring the diktat in terms of quota given by OPEC. And, Abu Dhabi in particular has been basically ignoring these kind of, diktats coming from OPEC in terms of quotas. And in the meantime, they have been investing heavily to boost their production capacity to 5 million barrels per day. And today, from about 3.6 million barrels per day to 5, and they in about a year and a half they'll be there. So they don't want to be kind of working under any kind of pressure from OPEC. They think they would be better off without OPEC, and that means that OPEC is a very divided house and is a much weaker house than it was before the war started. But is Fujairah and that situation is that a bad thing for us since we are a major importer of energy from that part of the world? No, it's actually good news. UAE out of OPEC and a weak OPEC is very good news for us. We would like OPEC to completely disappear. I mean, this whole idea of cartels in the modern age of AI, it doesn't make much sense. This is very, very medieval or old-fashioned thinking. But Fujairah is one area, for instance, where India is keenly looking at, and I think I'm among those people who are suggesting that we should actually build two pipelines from Fujairah to India and Oman, connecting Oman also along with it, subsea pipelines, one for oil, one for gas, from there to India, and which is basically could completely bypass Strait of Hormuz. At the same time, gives us the kind of energy security we need. For United Arab Emirates, they are looking for energy security. For them, energy security is securing demand. For us, energy security is securing supply. It works so well for us. And when our Prime Minister was there recently, this was one thing on the agenda. How do we work together that you take care of our energy security and we take care of your energy security? So I think we are in serious negotiation with the United Arab Emirates, and Fujairah is very much on the radar. And in coming months, hopefully you're going to see some major breakthrough in terms of new investment developments.
Mr. Taneja, I'd just like to request you to be a little concise in the next answer. Do you think Iran will let UAE exploit Fujairah to the fullest extent?
In the present situation, not. They are going to intervene. But however, if India is involved, if the recipient country is India, it won't be easy for Iran to target those kind of assets. If India is the destination, then I don't think Iran would be able to Iran just won't be able to afford it diplomatically.
Okay. And suppose everything goes right between the UAE and India and Iran as far as Fujairah is concerned, do you think we will be able to source predictable, decent quantity out of UAE on a daily basis as far as oil is concerned?
Yes, from medium to long term basis, not immediately, but medium to long term. Absolutely. I think it's a United Arab Emirates deepening energy ties with the United States Emirate is sustainable, economically viable, diplomatically affordable, and geopolitically fantastic.
Okay. And my final question to you, sir, is are you sleeping easy with this kind of turmoil in the oil market?
No, it's very bad. I mean, we were not prepared for it. The only country which was slightly better prepared than any other country on the planet is China. Even the United States was not prepared. It's extremely disturbing. Disruption is very serious. Strait of Hormuz being weaponized, completely weaponized, and effectively and powerfully weaponized by Iran. It's not a good development. Overall, for us, and I personally, who basically, keep a very close eye on global supply system and demand, energy security and so on. I think I've never seen, this kind of situation before. Extremely disturbing. And I think this is the time for us to learn a lot and actually prepare for the future in such a way where we talk about renewable green energy, but let's not forget one thing. We need more oil, we need more gas, and renewables are only going to supplement, not replace. Those who advocate, talk too much about green energy, they should be careful. Talk about it, but in the same breath, also talk about oil and gas.
Right. On this very somber note, Mr. Taneja, we'll call it time.
Thank you.
We look forward to interacting with you a little more closely and a little more frequently on this oil market. We hope you'll agree. Thank you for your time and for such wonderful explanation to a very, very peculiar and difficult situation that we find ourselves in.
Thank you very much. Thank you for having me.
That, ladies and gentlemen, was a very well-known energy expert, Mr. Narendra Taneja, discussing the oil market with us. We'll pause for a while and join you back very, very shortly to discuss the earnings of Paras Defence.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Ladies and gentlemen, quarterly earnings are coming by the droves, and we are trying to identify the ones that will create long-term wealth for your portfolio. In that connection, aerospace and defense company Paras Defense and Space Technologies Limited, the management led by Mr. Amit Mahajan, joins us on the show to discuss a very strong set of numbers as far as quarterly performance is concerned. The numbers are right there in front of you. A very, very sharp 59% rise in sales to 171 crore rupees year on year, and net profit surged 64% to almost 39 crore rupees. Mr. Mahajan, a very warm welcome to you, sir. You must be really thrilled with this kind of a growth and this kind of a trajectory that the company is showing.
Firstly, thank you for having me on this show. Really, really a pleasure always talking to you. We are thrilled. At the same time, a lot of responsibility lies on our shoulders because the amount of opportunities and the business that is in front of us, we have to keep the momentum going. We cannot relax. This is where we've achieved something which we have never achieved earlier. So that is one pat on the back. But at the same time, it also puts a lot of responsibility on a company like us. We are geared up for it, and the days look very, very bright in the future.
Right. Ladies and gentlemen, Paras Defense came out with an IPO price of 175 rupees in September of 2021, and the stock is a massive multi-bagger. Right is there in front of you. When you look at the profile of the company, it is into a lot of products and applications. They supply to ISRO in terms of rockets and missile programs. They are deeply into space research. A lot of lenses that go into Indian satellites are made by Mr. Mahajan's team. Paras Defense is getting into naval systems, battle tank and armored vehicles, electronic warfare and surveillance, and electromagnetic shielding. Mr. Mahajan, this kind of volatility and turmoil in the Mid East and every other part of the world is actually good news to management of Paras Defense.
I do not want to comment on anything that is happening on the geopolitical level. I would like to reinstate that the way Indian defense industry has shaped up in the last 1 decade. This all, whatever we can see and hear around the world, what is happening, it reinstates the certain reforms that our government has taken. That we need to be first made in India, so do maximum manufacturing here in the country, and also be self-reliant, so Atmanirbhar Bharat. So what happens is we are trying to build a wall of insulation between what the world is doing and our economy. With this, we are not only solidifying our domestic and our security requirements, but also are ready to look at global market as a manufacturing hub for critical technologies. Now, this is a larger picture that we are trying to paint, and I think we are somewhere becoming successful in that.
Okay. Now, let's analyze your earnings. We've had a broad background of what has happened and what you do. Tell us, how did this surge in sales happen? Are you selling to newer customers? Is this volume-led? Is this price-led?
So, if you look at the business of Paras Defense, we have started our businesses from very small components, and then we moved out to sub-assemblies and assemblies. And today we've been bestowed and given an opportunity to do products. This is a part of the strategy which we also mentioned when we went public, that we somewhere want to get into a product company, and which slowly but surely we're getting there. What you can see, the growth today is primarily driven by products that we have built, some unique products that we have built, something like a submarine periscope, where we feel we are amongst the only company in the whole of Asia Pacific. At the same time, we have done complete systems for space applications. We're doing good amount of systems for various platforms such as armored vehicles, UAVs, and things like that. So we have unique product line. We have a wide range of products which are intertwined when it comes to technologies. The primary technologies being mechanical, electronics, but the differentiating technology is the optics. So we are optics manufacturing company. And all of this, when you put it in perspective, what it gives you is a steady and very significant growth year on year. This is where the past business, the growth that you saw in the past couple of years and the years to come will come from these unique products that we have developed and now started delivering.
Okay. For the benefit of our viewers, in the last 5 years, Paras has posted a 27% CAGR rise in sales. In the last 3 years, the number is still better, 29%. When you look at compounded profit growth for the last 5 years, it's 41%. For the last 3 years, it's 34% CAGR. That's how it is. And the stock price for the last 3 years has appreciated by 42% CAGR. What next, Mr. Mahajan? Where are you headed in terms of newer products, newer geographies, and how should I say, better pricing?
Paras Defense always relies on its development and innovation capabilities. Puts a lot of responsibility on our R&D and design team, in-house R&D and design team, at the same time also with our partners. So when we are looking at what next from here, so we are looking at collaborating on various technologies such as quantum communication. We are looking at critical avionic technologies to be brought to the country. We are also have a mid-term to long-term strategy to get into semiconductors, to start with for defense, then for industrial, and then for masses. But what we can see right now, a paradigm shift that Paras is doing, is from components to electro-optic systems and laser-based air defense systems. Now, these are the two areas that the company is wanting to base its future on. And we find ourselves not only the only one to it, but also good amount of export potential is becoming more and more visible. So electro-optic systems for various platforms, including UAVs and drones, and laser-based air defense systems. These are the areas that we'll focus on. Our subsidiary will focus on anti-drone systems. So these are 3 areas that we want to ride ourselves on.
Mr. Mahajan, what is the percentage contribution from exports and how did it grow or slip over the year ago period, 3 months?
The export percentage currently will be hovering around 10%. But moving forward, we are expecting that in this coming financial year or the next, we'll go in excess of 15%, maybe close to 20% as well. The good amount of reliable, positioning of Indian manufacturer across the world will garner or will influence to a great extent this kind of exports that the company will do. But what I am looking at is the very, very potent domestic market. The reason why we are not going very aggressive on exports is because our positioning in Indian market as an IDDM company is very, very strong, and enough business is there in the domestic market to first to cater to and then look at export as your plan.
Okay. What's the order book as of now?
Order book is in excess of 1,000 crores.
Okay. How did it grow sequentially and year on year?
It's been growing. I think we've been getting visibility of 1.5 to 2.5 times. What in the next 3 to 4 months tell us is there is going to be a significant order inflow. And with that, we will still retain the 2x or 2.5x of the revenue. This is the kind of run rate we would like to maintain.
You have a decent amount of cash on the balance sheet, about 120 crores, and debt is minuscule, 30 crores. Any changes in these parameters that we should be expecting?
I think we are today, we do not have any debt, we do not have any bank exposures. We have financially good positioning when it comes to that. The working capital cycles keep nudging a little bit, but these are all within the cycle of manufacturing as we envisage. We are completely debt free, so there are no term loans whatsoever. And we are looking at the capex requirements also running very, very, very minimal, which we can cater through from our internal accruals itself. So we don't see any reason why we should not be financially ready for any amount of growth that we can see in the coming days.
Okay. When you look at the working capital cycle as also the margin of about 25%, I'm talking about the OPM, is this something that you'd like to maintain, or is it maintainable in the coming quarters?
See, the influence of being a value-added product supplier is slowly increasing year after year for the last 2 years. So what you can see and expect is these working capital cycles will improve. The cash flow turnaround will improve because we have started getting advances, we started getting milestone payments. The Indian government is not just making reforms, but at the ground level, they are also assisting domestic industry to make sure that they are not running dry of any cash, they are not running dry of any finances. So there is a nice integrated effort that the industry experiences today, that the reforms are percolating down to the ground at the payment cycle levels. And with this, the effect on our working capital cycle will only become positive in the years to come.
Okay. What was your capex utilization in the quarter gone by?
I don't think we did any capex utilization right now, because we currently have enough capex to not only sustain our current business, but also grow from here, because we are doing more and more value-added products.
My apologies. I should have asked capacity utilization.
Capacity utilization is pretty flexible. So if you ask me, we are very, very agile when it comes to catering to the demands of the market. And at any given point, there is enough capacity for taking, say, certain emergency procurement or certain SOS businesses that come our way. Otherwise, we are very, very good when it comes to utilization of our.
Right, Mr. Mahajan, what a pleasure, and we hope to interact again. And here's wishing that the fantastic sales and profit growth that you showed in the quarter gone by, as also annually, remains a feature that you will improve upon in the coming quarters and the coming years. Thank you for joining us.
Thank you so much.
That was Mr. Amit Mahajan, Director at Paras Defence. We'll pause for a while here, ladies and gentlemen. Markets in fairly decent shape on the weekly expiry of the Nifty. A mild green tick on the main index, but in top shape are the mid caps, the small caps, and of course the IT index. Thank you for watching.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Hello and welcome. You're watching Tech here on Business Today Television, your favorite tech and auto show. I'm Sakshi Batra, and this is where I bring to you Tech It Easy, your weekly dose of all things technology. First up, look at how Google has held its most anticipated Android show this week, and it has definitely given us the first ever look at Android 17 and Gemini Intelligence, among a lot more other features which will now soon arrive this summer. First up, of course, for the flagship phones of S series of Samsung as well as the Google series of Pixel as well. Remember, this is where you will get to see how users will be able to automate a lot of tasks, and a lot of AI's ability will be able to be used to understand visual context, and everything that you see now on your screens can get AI-fied. Google also wants to change the way how you use your laptops. Google has announced Google Book, a new category of laptops that's built around AI. In particular, Gemini Intelligence and a MacBook Neo competitor, a product that has already seen so much success. And with this new approach, Google aims to bring the best of Android apps from Google Play Store into a modern OS designed around AI and intelligence. The company also says the Google Book is all set to launch this fall. Next up, it's Uber, which is set to launch its first ever India data center with Adani Group. Uber CEO Dara Khosrowshahi has announced the company's first data center in India in collaboration with the Adani Group, which is set to launch later this year. And this facility will be instrumental in testing and deploying Uber's technology at scale. Well, are you someone who can't help but scroll for hours and hours on your phone, endlessly watching random stuff on your smartphones? Well, then Google may have a solution to that. Google has also launched its new digital well-being feature with Android 17 called Pause Point, which claims to reduce smartphone usage by adding a short delay before selected apps open. This places a 10-second pause between a tap and the access to the app. Also, in the world of largest music streaming platform Spotify, which has turned 20, it's also celebrating its anniversary by gifting users a fully personalized look at your entire music history. So you can go back in time on Spotify from the day first that you joined on the app. You'll be able to see what you listened to on the first day and the total number of unique songs you've listened to, the first ever song streamed, and your all-time most streamed artists as well. Well, up next, you can be getting ready for Aryan, and he's going to get you the Gadget Garage and a very unique keyboard at that. Stay tuned for that.
Hello all and welcome back to the Gadget Garage, the place where we talk about the latest gadgets and the latest garages. Actually, no, it's the place where we talk about the latest gadgets and the latest vehicles in the world of automobiles. You know, the things that go inside the garage? Yeah, that. We have a packed episode for you today. We have the OnePlus Nord CE6, we have the unboxing of the Oppo Find X9s, we have the Toyota Wellfire MPV, and to start it all, we have a product जो जैसा दिखता है वो वैसा है नहीं. यानी it may look like something simple, but it is something much more advanced. Okay, so innovative product straight from the future, and good luck explaining to your manager why you can't work on any other keyboard in the office because your files are on your keyboard at home. But I joke, obviously, this is a very, very advanced piece of technology that we can't wait to get our hands on. This is the HP EliteBook G1A Next Gen AI PC, a computer inside the body of a keyboard. You get an AMD Ryzen 300 series processor inside with up to 64 GB of RAM and 2 TB of storage. For AI functions, there's a 50 TOPS neural processing unit inside as well. Essentially, this is a plug-and-play device which works with any USB-C display. Plug it into any monitor and it becomes your PC. It's the same basic concept as a Mac Mini or a Mac Studio, except that it's in the form of a keyboard, so you will only need to connect a mouse and an external display for this to work. This device is coming soon. Would you buy it? Would it make your setup less clutter-free as HP claims? What are your thoughts? Tell us in the comments and keep watching Tech Gear. But next up, something we did get our hands on last week and have been reviewing it for the last week or so, the OnePlus Nord CE6. How good is it? How bad is it? Is it your next phone to buy? Time to find out. The OnePlus Nord CE6. ये वो under 30,000 rupee phone है that Indians have been waiting for a long time. Well, we've had it with us for over a week, and now let me tell you what's good about it, what's bad about it, and whether you should buy this device or not. Now, this phone is a bit of a mixed bag. इसमें कुछ अच्छी बातें हैं, कुछ बुरी बातें हैं जो कि हर फोन में होती हैं. लेकिन this does something for this price point that no other phone is doing. The display, however, is a major highlight. It's a 6.78-inch 1.5K sunburst AMOLED panel with a 144Hz refresh rate. Scrolling through social feeds feels incredibly buttery and fluid. When it comes to watching content, it hits a peak brightness of 3600 nits. Now, while that sounds amazing, and for bright images and light-themed content, it is amazing, watching anything dark in direct sunlight is a bit of a task.
In fact, I tried watching the latest episode of The Boys on this phone. I was sitting in a cab, the sunlight was directly on the screen and I could not tell anything that was going on. What dark scenes the, I get that, but even then the only thing I could clearly make out was my own reflection. So while this is a beautiful screen and for the most part you will be able to make out what's going on, so if you are watching movies or TV shows जिनमें बहुत सारे night scenes हैं या dark scenes हैं, this phone might struggle. But if you're someone who uses light mode a lot and loves to read, even in direct sunlight, आपको ज़्यादा problem नहीं होनी चाहिए. It is only the media consumption that might be a problem, that too in direct sunlight.
On the bright side, no pun intended, you get solid performance from the Nord CE6. Usually at this price point you expect a low to mid-range chip, but OnePlus tucked in the Qualcomm Snapdragon 7S Gen 4 with 8GB of RAM. We tested it by playing 2 heavy games at once to see if it would falter. It did not. No lag, no crashing, no heating. Performance is punchy and stays smooth.
But one solid reason to buy this phone is the 8000 mAh battery. ये genuinely 2 दिन तक चलता है, even with moderate to heavy usage. But to push it to the limit, I did something called a help test. Now the help test stands for high endurance, lasting and performance, where I push this phone to its limits.
I call it that because when your battery drops low, you tend to feel helpless and need help in the form of a charger, but you can't always get one. You have no other option but to hope that your phone lasts a while longer. Most phones start to feel the strain under 20%, but when I hit that mark and switched to light usage, the OnePlus Nord CE6 lasted for more than half a day. That kind of endurance is incredible, especially when you're in a pinch.
And like I said, it's not all perfect though. ColorOS still leaves some things to be desired for. I am a classic OnePlus fan. I still miss the Oxygen OS. I think OnePlus has never been able to match up to that original Oxygen OS vibe. So that is something you will have to deal with.
The cameras on this are usable but nothing to write home about. You get a 50 megapixel main sensor, the OmniVision OV50D40 with OIS paired with a 2 megapixel assistance lens. You'll get a decent shot for social media and good lighting, but it's definitely not a pro photography tool.
So what's the verdict? Well, if you're looking for a phone under 30,000 that is powered by a Snapdragon 7 series processor, has a massive battery that refuses to die and has a super smooth 144Hz refresh rate wala screen, then the OnePlus Nord CE6 is a phone that you can't go wrong with at all. However, if you are considering buying it, make sure you keep in mind the software and also this fingerprint magnet of a back. Moving from OnePlus to Oppo, let us show you what you get inside the box of the Oppo Find X9s in another one of our Dabba Khol videos. Fair warning, the phone might look familiar, but the color is simply breathtaking. This Hasselblad will have you down bad. And now it's time to open the garage, but this time instead of 2 wheels, we have 4. Take a look at the Toyota Wellfire Executive Lounge, an MPV that celebrities like Ranbir Kapoor own, but it's not just the actors. Let us tell you why even CXOs today are choosing the Wellfire over luxury sedans. It's a hot summer day. I'm sitting inside the Toyota Wellfire Executive Lounge. I'm getting my back massage from the seats. I have my beverage right here that only the rich and affluent can afford at the current given moment. और साथ ही मेरे सामने एक स्क्रीन भी है. मेरे पास एक detachable remote control है, which is as good as almost a smartphone right here. Everything inside this car is controlled by this remote control. We've got JBL speakers all around. We've got a sunroof, a big panel here for a lot of luxury amenities. And joining me in this leisure/work executive lounge is Mr. Karan Dhar, who is the associate editor for Business Today. Karan, so glad for you to join me.
Glad to be with you.
अब मेरे को एक बात बताइए कि बड़े-बड़े एक्टर्स तो ये गाड़ी यूज करते ही हैं. जो आजकल के बिजनेसमैन और CXO लेवल एग्जीक्यूटिव्स हैं, वो ये गाड़ी क्यों प्रेफर कर रहे हैं?
See, Aryan, a lot of these businessmen, promoters, startup founders, and CXO level executives, they're preferring this car over sedans and SUVs because the ample amount of space that is in here and the ottoman seats that I'm sitting on, you can recline them, as much as you can. Yeah. And if you can just see, there is a folding tray table. You can just if you can open it like this, and you can put it like this, and you can work on your laptop. Keep your laptop here and work on this. Okay. So these are some of the features, and there is a reading light if you want to read something. So these are some features. There are some HDMI ports. There's one over there. If you just open this, you can connect your laptop with it, and you can cast whatever you want to see over here.
So essentially, from a work perspective, this is essentially an office on wheels for them. Yeah. Like you said, you can connect your laptop. You can work on it. You can, I'm sure, you can eat on this as well. Yeah. There's a lot of amenities in this car that make them, I mean, if we can even call it a car.
This is kind of a rolling boardroom.
Right.
So earlier boardrooms used to be in offices where you would have a oval shaped table surrounded by chairs. Now, the people spend a lot of their time in traffic, stuck in traffic. Cities in India have so much traffic now. Executives don't want to waste their time, and they want to work in the car while they are in the car, while they are on the move. So this car is by this and other luxury MPVs are why why businessmen are choosing it is because of the the space as well as the comfort and the utility that is here in this car that they can use while they're here.
This car perhaps solves the one biggest problem that most 6-seaters and 7-seaters have, and that is third row comfort. Let me show you how easily you can get into the third row and how spacious it actually is. I'm seated back here, and there is no shortage of amenities here either. You've got a sunglass holder. This is, by the way, the third sunglass holder this car has. There are buttons and toggles for sunshades right here. There are coat hangers back here as well, along with the grab handles. You've got cup holders, 2 cup holders on each side. Along with that, the release handle for the seat is right here as well. Now, as you can see, this seat is reclined quite fairly back. I am still not uncomfortable. मेरे पास काफ़ी जगह है यहाँ बैठने की. I am about 6 feet in height. But if I want to move these seats ahead, all I need to do is simply press one button here, and these will start moving ahead. But that is not where the amenities stop for the rear third row seat. There is also a USB Type-C port here on each side for you to charge your phone, and there is a third set of AC vents right here, along with controls for the reading light as well. So that makes sure कि भले ही आप आगे बैठे हैं या पीछे बैठे हैं, your comfort does not have to take the second seat or the third seat either. You are sitting in prime locations all around this car with a lot of features and amenities ready to take you to a next level of comfort and supremacy. Now, after that super relaxing segment, time to fast forward into the AI future with Business Today's very own AI anchor, Sana.
Tech fans, the floodgates are officially open. Some big launches happened this week, with more yet to come in the coming one. First, the long-awaited Oppo Find X9 Ultra has finally arrived. It's officially their most ambitious camera flagship yet, featuring a massive 1-inch sensor and Hasselblad tuning. Next, OnePlus just expanded the Nord family. The Nord CE6 Lite is now live, packing a massive 7000 mAh battery and a 144Hz display. And in the premium segment, the Motorola Razr Fold is here. It's thinner, smarter, unfolds into a massive 8.1-inch screen and is powered by the Snapdragon 8 Gen 5 processor. Finally, mark your calendars for May 22nd. Realme is set to drop a double header. The Watch S5 with 20-day battery life and the Buds Air 8 Pro with flagship-grade noise cancellation.
Okay, thanks for that update, Sana. Time for you to go delete some M dashes. और अभी time है to answer some burning questions in our final segment, which is of course the FAQ segment. Hello all. एक बार फिर आपका स्वागत है to the FAQ segment where we answer all your burning questions and I answer all her burning questions and I am joined by none other than मेरी सवालों की सहेली साक्षात मानिता.
What is your problem with introductions यार? मेरा नाम मानिता रल्हन है guys, बाकी सब भूल जाओ तुम लोग, मानिता याद रखना, ठीक है?
Maiden of curiosity.
वो ठीक है.
सवालों की सहेली. Well, Manita, welcome back to the FAQ segment. Please tell us आज आपके क्या सवाल हैं? आपने पूरा एपिसोड देखा है, I'm sure. क्या सवाल है आपके?
मेरा ना फोन बहुत पुराना हो गया है, मतलब मैंने इसे इतनी बार गेट दिया तो I need to buy a new phone. तो कुछ 30,000 के अराउंड अंडर मुझे चाहिए, तो क्या मैं ये वाला ले सकती हूँ? OnePlus Nord C6 आपके पास आया, मैं ले लूँ ये?
मतलब ये वाला तो नहीं, ये तो वापस जाना होता है. This is a review unit.
Okay, well.
But yes and no. Not because आपको ये वापस देना पड़ेगा, but the problem is, yes, if you like good-looking phones, if you like phones with long battery, and you want a beautiful display, go for the OnePlus Nord 6 with your eyes closed. But if you want the best photos and you want to use this phone for content creation, maybe look somewhere else.
देखो इन्फ्लुएंसर तो मैं हूँ, मेरे लिए बहुत इंपॉर्टेंट है, और इन्फ्लुएंसर मैं नहीं भी होती तो फोटो और वीडियो ही मेरे को लगता है, कैमरा एक फ़ोन है मेरे लिए सबसे ज़्यादा इंपॉर्टेंट है, तो आई थिंक मैं आईफोन ही खरीदूंगी फिर. बट मैंने देखा है कि तुमने कोई कीबोर्ड भी इस बार किया है, जो तुम कह रहे हो कि वो कीबोर्ड नहीं है, उसके अंदर पीसी है, ये क्या मैटर है?
ओके, सो इन्फ्लुएंसर तो आप हो, मैं ये बिल्कुल अग्री करता हूँ. As far as the keyboard is considered, yes, it is the HP EliteBoard Gen 1A AI PC inside a keyboard. यानी it looks like a keyboard, it works like a keyboard, but it is also a PC. मतलब इसका ये है कि उसके अंदर ही प्रोसेसर लगा हुआ है, उसके अंदर ही रैम है, उसके अंदर ही स्पीकर्स भी हैं और उसके अंदर ही कनेक्टिविटी पोर्ट्स भी हैं. सो इट इज़ एसेंशियली योर ऑल इन वन सोल्यूशन. आपको बस कीबोर्ड लेके जाना है, एक डिस्प्ले या एक मॉनिटर से कनेक्ट करना है, एक माउस लगाना है जो कि HP कहता है, उसके साथ में प्रीपेड आता है, एंड दैट्स इट. No CPU, nothing. सारा कुछ is inside the keyboard itself. Very similar to the Mac Mini or the Mac Studio, except Mac Mini में क्या होता है, आपको कीबोर्ड लेना होता है, आपको माउस लेना होता है, you have to get another display. But with this,
one question, sir, क्या ये मैं iPad में लगा सकती हूँ?
Technically you can, because there is a USB Type C port there. You can connect it to your iPad and use that iPad as a display, and entire data आपका सारा जो PC का है वो उस iPad के अंदर आपको डिस्प्ले होगा, just like a PC and a monitor.
Cool. और what is this Wellfire MPV, ऐसा ही कुछ था ना? ये तो मुझसे बोला, एक तो मुझ सवाल ऐसे आते हैं जो मुझसे बोले ही नहीं जाते हैं, मेरे को जवाब समझना तो सेकेंडरी हो गया है, पहले सवाल बोलना मेरे लिए इतना मुश्किल. क्या है Wellfire MPV? तो टेक्निकल टर्म्स टेक्नोलॉजी शो में, चलो ठीक है.
मानिता, नाम है उस गाड़ी का Wellfire.
मारुति होता है गाड़ी का नाम यार, सुजुकी होता है, i20 होता है, Wellfire क्या नाम होता है गाड़ी का?
It is the Toyota Wellfire, and let me make this more relatable to you. रणबीर कपूर के पास ये गाड़ी है.
ओह वाओ यार, अभी लिए क्या?
नहीं हो गया, काफी टाइम के पास हो गया है, गाड़ी को लॉन्च हुए टाइम हो गया. But what's special about this car? It's an MPV, यानी it's a multi-purpose vehicle. And आसान भाषा में मैं तो बोलूँगा it is a lounge on wheels. Wow. It is a very long car. It has lots of room inside. It's got 6 seats, of course. Captain seats है दोनों मिडिल रो में और पीछे वाली रो में. मसाज फंक्शन है गाड़ी के अंदर.
फुट मसाज हो जाएगा?
नहीं, बैक मसाज हो जाएगी आपकी.
मेरे कमर में भी बहुत दर्द.
हाँ, सो बैक उम्र हो गई वो वाली, अभी कमर
मेरी हो गई.
ठीक है, तो there'll be a back massage function.
फ्रिज?
No, but you have cup holders in it. Okay. There's a lot of storage. आप लगवा सकते हो, उसमें बहुत जगह है. Fridge वगैरह भी, you can get a mini fridge put inside that car, no problems. TV? Yes, there is 2 displays. एक आगे की तरफ, there is one TV display that comes in the rear end, in front of the middle row, and you can use that to play music, watch something on it. There is an HDMI port to connect a PS5 or an Xbox. मतलब gaming भी आप full on कर सकते हो. But that's not why you should use that. आज की डेट में I was joined by Karan Dhar. Okay. He is associate editor here at Business Today, and he told us that is a vehicle, the Toyota Wellfire is a vehicle that is being used by CXOs, by senior executives more than celebrities actually. You know, एक time हुआ करता था where CEO level people used to drive sedans, luxury sedans. They are all shifting to an MPV and especially to the Toyota Wellfire because उसमें एयरप्लेन की तरह आप डेस्क बाहर निकाल के यूज कर सकते हो. You can keep your laptops, you can do your meetings from inside the car. You have, like I said, massage functions.
अब इतना पैसा उनके पास है तो कहीं तो खर्चेंगे ना.
It is close to 1.5 crores to buy that car, but it is literally a palace on wheels. You will love sitting inside that car, and it is something that if you're a CXO level, you've achieved that much in life, you truly deserve.
एक दिन मैं भी लूंगी.
बिल्कुल बिल्कुल बिल्कुल. So that was all the questions that we have today in the FAQ segment. Thank you so much, Manita, once again for joining me.
मैंने आपकी हेल्प करी है इतनी इसमें.
बिल्कुल.
ये जो फोन है, ये मैं लेके जा रही हूँ. Thank you.
But next week review करना है इसको. आप कर दोगे review?
हाँ मैं कर दूंगी.
ठीक है. Next week we'll be reviewing the Oppo Find X9s. Make sure you subscribe to Business Today Television and are watching and commenting on the Tech Gear Show. Thank you so much for joining once again.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Watching India Today.
Good afternoon and welcome. You're watching India Today and I'm Anisha Mathuram. We're starting this bulletin with some breaking news that's just coming in. Chief Minister Vijay likely to expand his cabinet later this week. List yet to reach the Lok Bhavan. Post the governor's nod, the ministers will be sworn in. This list is likely to include Congress ministers. 2 Congress MLAs likely to be inducted. That's the breaking news we're bringing you from Tamil Nadu. The list of ministers is yet to reach the Lok Bhavan as Chief Minister Vijay is likely to expand his cabinet later this week. And this comes in as newly inducted Chief Minister Vijay is still finalizing and formalizing his cabinet. Information coming in that the cabinet expansion may be taking place sometime this week. But at the moment, what we can tell you, viewers, is that the list of MLAs, the list of ministers is yet to reach the governor. So obviously, under the constitution, for any minister to take oath, the governor has to give a nod. The governor has to approve any ministers who may be inducted. Pramod Madhav joins me on this story. Pramod, the newly inducted Chief Minister likely to expand his cabinet. What kind of numbers are we looking at? What kind of division or when it comes to seats for each party are we looking at?
Anisha, one important aspect is that now the Chief Minister Vijay has shown that his now supporting number is not 120 but 144 with the rebel AIADMK release. 25 also extending their support. So there were talks initially even by EPS, the leader of the General Secretary of AIADMK, claiming that probably 6 members from the AIADMK could also get the seats, but that is not confirmed right now. Congress, on the other hand, even before TVK could go ahead and confirm it, Congress, on the other hand, has confirmed that of the 5 MLAs who are supporting TVK in the form of alliance, 2 members, especially one Rajesh and another person, those MLAs will get a seat. This was also confirmed by Manikam Tagore, and Congress has very clearly said that they are here for a long run. They will be a part of the governance. They will also have power sharing, and along with it, they will contest in local body elections and 2029 elections as well. So this is confirmed for now. We are last term, the ministers' numbers were 33. So now we have 9 ministers plus the Chief Minister. So we're expecting a major, expansion of the cabinet, Anisha.
All right. Thank you very much for that, Pramod Madhav. He will also be keeping a very close eye on every development from Tamil Nadu. But more news coming in. Let's move on to that. Notice has been served to TMC MP Abhishek Banerjee by the Kolkata Municipal Corporation. Notice pertains to Abhishek Banerjee's South Kolkata residence at Harish Mukherjee Road. The Municipal Corporation has alleged that Banerjee made unauthorized construction at the site, deviating from the original sanction plan. He has been served notice for demolition of the unauthorized part within 7 days, and he has been asked to explain why such construction had taken place. Abhishek Banerjee has also been asked to furnish the sketch of the original building plan that was approved. Now remember, viewers, KMC, that is the Kolkata Municipal Corporation, is still under the Trinamool Congress. It is still under the control of Trinamool Congress. And TMC MLA Firhad Hakim remains the Kolkata mayor. But this notice has now gone to Abhishek Mukherjee. Tapas is joining me live on this story. Tapas, the Trinamool Congress leaders still have control of the municipal corporation, even though they've had a very, very sharp loss in the Legislative Assembly. That despite that, now civic body issuing notice to the MP about illegal construction. What more can you tell us?
Well, see, this comes as a big setback for Trinamool Congress. The second in command of Trinamool Congress, Abhishek Banerjee, his leaps and bounds have been served with multiple notices at multiple addresses of leaps and bounds. We know that a few days back, Shubhendra Adhikari had raised questions that leaps and bounds had multiple properties in Kolkata, and he has the list. And following that, we had seen that yesterday this notice was served at 188A Harish Mukherjee Road, which is also known to be the residence of Abhishek Banerjee, and this notice clearly states that there have been multiple deviation from the sanction plan, and henceforth it has been brought to the notice of the leaps and bound to demolish the illegal part, and if they fail to do so, then the municipal corporation would take the initiative and do so. Now this comes at a time when Firhad Hakim, who remains to be the mayor of Kolkata, and Kolkata Municipal Corporation is run by the Trinamool Congress MLCs, or rather the councillors. What Firhad Hakim clearly stated that he doesn't know much about that, but since the entire notice that have been served was under the municipal commissioner, and we know that there have been multiple interactions between the chief minister and the chief secretary and the municipal commissioner of Kolkata Municipal Corporation. So it is assumed that that with the knowledge of municipal commissioner, the executive engineer have served this notice, and not only to one address but to multiple addresses. Now it remains to be seen that what response does Abhishek Banerjee or the leaps and bounds gives back to Kolkata Municipal Corporation. But if they do not comply as per the notice, then initiative would be taken to demolish the deviated portion of the part of the Kolkata
Thank you very much for that, Tapas Singh Gupta. Demolition notice to Abhishek Banerjee owned property as just days after Bengal CM Suvendu Adhikari had also made an announcement regarding knowledge of Abhishek Banerjee's properties. But we'll see what happens next in Bengal as this story develops. But more breaking news coming in. Let's move on. Police issues lookout notice against Samarth Singh in the Trisha Sharma death case. Just yesterday, the police had announced a reward of 10,000 rupees for information on Samarth Singh, and now a lookout notice has been issued as the manhunt is on for Trisha's husband Samarth, who has been absconding. 6 police teams are currently engaged in the search for Samarth. And remember, viewers, Trisha Sharma's suicide has raised a lot of questions about what really happened, how exactly this happened. Ravish Pal Singh is joining me on this story. Ravish, what more do we know about the hunt for Samarth Singh?
As of now, around 6 teams of police from Bhopal Zone 2 is searching for him in various locations. As per our sources, 2 teams from the police team have been sent to other states also for search of Samarth Singh, as they have some traces of call records of him and some technical evidences they have. And they doubt that Samarth has fled from the state, and he may be in currently other states right now. So there are 2 separate teams have been gone to other states also, and around 10,000 rewards have been already issued by the police yesterday itself, and now a lookout circular has been issued by the DCP Zone 2 for the arresting of Samarth Singh, and his anticipatory bail has also been rejected yesterday. So these are the latest developments for Trisha's death case.
Thank you very much for that, Ravish Pal Singh. Samarth Singh continues to be absconding, and now a lookout notice has been issued to ensure that he does not leave the country. But it's time now for the news from the markets. Let's go across to Sakshi Batra of Business Today, who joins us with all the updates of the market. Sakshi, over to you.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the stock market closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Stock markets erase early gains in volatile trade, with the Nifty now slipping back to around 23,650. The Sensex is now nearing 75,300. IT stocks continue in momentum as the rupee continues to hover near record lows against the US dollar, keeping export-linked sectors in focus. After fuel prices were hiked for the second time in a week, IOC has hinted at further increases that may continue as global crude oil prices remain elevated due to the ongoing West Asia conflict and disruptions around the Strait of Hormuz. The company says hikes will be gradual to limit the inflation impact. India's crude oil import bill has surged 52% year-on-year to now come in at $16.3 billion in April, despite lower import volumes, as elevated global crude oil prices have linked to the West Asia conflict and the disruptions around the Strait of Hormuz have kept the Indian crude oil basket above $114 per barrel. ITC and Godfrey Phillips shares are in focus after cigarette companies have raised prices of select pocket pack brands from June. Reports indicate ITC has hiked the prices of Gold Flake,
Navy cut and other cigarette variants following high excise duties announced earlier this year. Finance Ministry sources say that the government aims to protect FY27 capital expenditure despite the rising fiscal pressures. Non-urgent schemes may be deferred while spectrum auctions and asset sales and disinvestments are being explored to boost the revenues and to avoid higher market borrowing, especially in the first half of the fiscal year. Straight away looking at the big breaking as far as the Indian rupee is concerned, viewers, the rupee has now hit a fresh record low of 96.52 against the dollar. The rupee has slipped nearly 7% year to date and rupee has weakened about 17 paise in additional in the session today itself. Remember, we'd seen a record low of 96.39 yesterday with a sharp fall of 38 paisa in a single trading session. Another 17 paisa has been dropped as far as the rupee is concerned, and it's now gone past the 96.5 level against the dollar. And this is what is one of the biggest reasons why the IT stocks have been hovering higher for the last couple of trading sessions. The IT index continues to buck the otherwise volatile trend in the markets, 3.3% higher, even though the index has also cooled off from the day's high point, still about 945, 950 points higher as far as the IT stocks are concerned. The large cap names, the mid cap IT names all seem to be in favor. There is a gain anywhere between 3% to even 5-6% for many of the mid-cap IT names in the session today. But it's the banking space that has slipped in trade. You do see the Nifty Bank about 0.2% lower today, led by the losses in the financial services. Also, infra stocks and metals have seen some profit taking from the higher levels. The broader markets, however, continue to be in the green, over 1% gains for the small caps and the mid caps index at this point in time. As we are inching closer to the last 20 minutes of trade, look at how our top movers on the Nifty are trading. Infosys 4.8% higher. The top mover, Tech Mahindra, 2.7% higher. HCL Technologies 2.8% up in the session. You also have Eternal that's moving up. Tata Motors Passenger Vehicles is also another stock that's moving up, and TCS, Wipro, these are some of the other names that are hovering higher. Let me actually go across to our guest now. We have Mr. Gaurang Shah, Senior Vice President, Geojit Investments, joining in on the program with us. Gaurang, good afternoon, very good afternoon, and thank you so much for taking the time out for this conversation. Good to start off by understanding from you, how are you looking at this big IT stocks move? Is it going to be sustainable? Is it only led by this sharp move on the downside as far as the rupee is concerned? And whether the markets will continue to sustain higher on the back of such moves in the IT pack?
Thank you so much, Sakshi, for having me on your show. Good afternoon to all your viewers, and to you a small disclosure because we may go into stock-specific discussion as well.
Sure.
All recommendations that I'll be sharing this afternoon on your show, they are part of our fundamental research team recommendations. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, Sakshi, India has crude oil basket at $114 a barrel. Rupee at its lifetime low, fuel price hike, inflation inching up, and a likely possibility of no interest rate cuts, but possibly a interest rate hike in case if things don't come under control. More importantly, Sakshi, my sense is that whatever we are witnessing in form of fourth quarter last financial year, you're not going to see any meaningful impact of all these negativities. First quarter and second quarter of this new financial year is where my worry is in terms of earnings possibly coming below expectation and then downgrades. This is a little bit of futuristic thing I'm talking about. I hope the war comes to its logical conclusion so that economies around the world, including India, has some stability to look forward. Choppiness and volatility will be the order of the day. IT sector that you mentioned, I think IT is relatively insulated, Sakshi. IT, healthcare, pharma, from the external shocks of rising crude oil prices, etc. And IT and pharma are also beneficiaries of depreciating rupee vis-a-vis the dollar income that they get. So, and more importantly, one more thing is that IT has gone through and will go through a lot of innovation and technology changes that will come through. So it is good to see some positivities, but sustainability, I think, Sakshi, it will be company specific. Companies which are able to evolve and fit themselves into the new order, those companies will survive. Others may find it very difficult.
Okay, fair point. Let's also track the big story we've been focusing on since morning, and that's the second time in a week when we've seen fuel prices have been hiked, petrol and diesel prices have been upped as well, and the reports are indicating that there could be more pain ahead for consumers. IOC has now hinted that fuel prices and the increases that we are seeing may continue as crude oil prices continue to remain elevated due to the ongoing West Asia conflict. And the companies also said that any further hikes could be gradual to limit the impact of inflation. Let me go across to my colleague Aishwarya Patil, who's joining in with more details on the same as well. Aishwarya, what are you picking up from your sources? What are the companies really looking at this stage? Twice in a week is what we have seen the fuel prices surge, first by 3 rupees and then by another 90 paise. What's the suggestion going on from here? We do know that the oil marketing companies per litre are incurring losses in double digits, about 14 to 15 rupees per litre for petrol and about 40 rupees and more for diesel as well. So do we see these oil marketing companies covering the gap with the kind of price rise that we can expect going forward?
The markets had penciled in long ago as far as under recoveries and losses are concerned, and that translating into a price hike. We have been hearing that for a while now, but what our industry sources have suggested that there will be a gradual and in tranches probable price hike in terms of the retail pumps in petrol and diesel. Like you mentioned, we saw the second price hike and that totals to about 4 rupees or so hike depending on different states and different cities which have anywhere between 90 paise to 96 paise kind of a price hike in the second round. But multiple rounds are underway. In fact, OMCs in the last 75 days have been have mounting losses and under recoveries about 1,000 crores per day or so. And recently also, as we've seen, the Ministry of Petroleum and Natural Gas has been highlighting that. Even Oil Minister Hardeep Singh Puri has said that these have mounted to about 30,000 crore at least per month. So it would be unsustainable to go ahead without a price hike for all of these oil marketing companies, considering that international crude oil prices have been spiking.
Okay, so there is a likelihood that, you may continue to see a gradual upward momentum as far as the prices of petrol and diesel are concerned. That's what these companies are indicating. The price hike will be gradual, but there will be more price hikes. Brace for higher prices of fuel going forward from here. We also have seen some questions that are being raised over where the oil prices are headed next, so that we can understand how much more pain is it there for consumers. Energy expert Narendra Taneja also says that global crude markets are under severe stress with supply disruptions, falling reserves and a worsening outlook ahead. He's also warned that fuel prices are likely to rise gradually in the coming weeks. Let's listen into what he had to say as well.
Government is going to go middle path. Maybe petrol, diesel prices are definitely going to go up. Maybe gradually, not in one go, because that creates a shock that the government would like to avoid. But if you keep on increasing, let's say 60 paisa, 90 paisa, 50 paisa, but then take it to maybe a total of about 7 rupees or 9 rupees or something in that region, that probably would help the situation. And at the same time, if the war continues, I say war because this is still continuing, and Strait of Hormuz remains closed, then I think they will have to come out with some extra measures on the one hand to protect the most vulnerable, the poor section of society, maybe doing something for them, and at the same time, some kind of mechanism so that these companies can be protected.
Viewers, the West Asia tensions have also been hitting your kitchen and the car fuel bill. Now, IGL says LNG input costs have surged by 25% amid the global gas crisis, and so will the CNG and PNG prices continue to see more pressure ahead. Let's listen into what IGL MD Kamal Kishore Chatiwal had to say to Business Today.
How has the West Asian crisis impacted your quarterly performance in terms of rising costs of liquefied natural gas?
You see, you're right that it has impacted all the OMCs, and to the tune that our input gas cost has increased by roughly 25%. Now, one good thing about IGL is that we had 2/3 of our long-term contracts linked to Henry Hub. So they are now getting normalized. And as you know, Henry Hub has been a little stable during this crisis period, that it has ranged between $2.6 to $3. So that's a very, very comfortable range for us also. And now the things are getting normalized. Our Henry Hub contracts, they are, the force measure was invoked on them also, and they were reduced to around 60-65% levels. Now they are getting normalized, and 80-85% we are getting from there. So if the situation improves, then I think we will be beneficial, that in the sense that our majority of sourcing has been Henry Hub linked. And crude, as you know, the major impact we see in the new well gas price, because the Indian crude basket price has been very, very high. So there, since it is 12% of ICB is the formula, so there we see a major impact, that almost 45 to 50% increase in new well gas price.
Let me go across to Gaurang to understand the whole picture when it comes to the oil and gas stocks, and what should be investors' strategy around these stocks with these developments coming through. Gaurang, on the one hand, we do see that oil marketing companies are now looking at, they've got this free hand, they are going to be hiking the prices. Narendra Taneja penciled in 7 to 9 rupees per litre hike coming in, and therefore there could be some mitigating of the losses that they are incurring. But will it be enough is another question. And also the current quarter that has gone by, where we have seen some earnings come in for OMCs, that has probably not reflected the entire picture. The West Asia war concerns and the crude oil prices spike hit will actually come in into the next quarter. So how should investors go about their oil marketing company stocks in their portfolios, the natural gas stocks in their portfolios for the next couple of quarters?
So Sakshi, first of all, let us understand one thing. Not only are the crude oil prices and gas prices gone up, but the shipping cost has also gone up in terms of freight and insurance. The Strait of Hormuz, along with crude oil and natural gas, this passage is also used for a lot of other raw material commodities, as we call it, which goes into making a final product in India. All those sectors, all those companies are also suffering. So on one hand, you have slow supply coming in. On the other hand, you have higher freight and insurance cost and the landed cost going up. To answer your question, for the oil marketing companies and gas companies, well, we still maintain a positive view on all the three oil marketing companies, HPCL, BPCL, IOC. As far as gas companies are concerned, I think, I'm not too sure, but we used to have coverage on MGL and Petronet LNG. These are the two names that we used to cover. These price hikes will be the new normal, Sakshi, as we go into the future for a couple of months. And as Mr. Taneja was saying, I think smaller hikes will not be very negatively taken upon. But if you look at the quantum of the total price hike, that is going to put a lot of burden in the common man's pocket, So we maintain a positive view as of now. We will see how things shape up as far as the geopolitical tension is concerned.
Sure. Let's also focus on, viewers, how the government could be actually looking at some support coming in from the Reserve Bank of India now. The Reserve Bank of India could announce a bumper dividend payout for the government, potentially nearly 20% higher than the last year's record transfer. That's what's breaking in front of you, viewers, right now. Sources have told Business Today Television that the RBI board is likely to meet by the end of this week to finalize the surplus transfer for financial year 2027, with estimates now hovering around 3 lakh crores and possibly even higher. Last year, the central bank transferred 2.68 lakh crores to the center, and a bigger payout could actually give the government added fiscal space. Let me actually go across to my colleague Karishma Sudani to give us more details on the same. Karishma, what are you hearing from your sources when it comes to the large dividend payout? This has been a big support for the government's fiscal situation over the last couple of years, and more so at this point in time when the geopolitical crisis has further indicated the need for some or the other external help for the government's fiscal situation. Could it be the RBI to hold that hand right now?
Sakshi, good afternoon, and thank you for your question. A large RBI surplus will give the government immediate fiscal breathing room without having to, of course, raise taxes or borrow additionally from the market. And at a time when West Asia tensions are looming and the oil prices have had a major impact, if some intervention from RBI does not come in at the right time, then government, of course, will end up spending more on subsidies, be it food, fertilizer, fuel, or even welfare schemes, or spending more in order to manage inflationary pressures. Now, if we go back to the numbers and what government earlier this year was looking at for in terms of the RBI dividend, they were expecting about 3.16 lakh crore, including the PSU dividends. If we look at PSU dividends, currently we've accumulated about close to 78,000 crore. Now, with 3.16 lakh crore as a total one, sources are telling us that the central bank may actually consider more than that in order to cushion the current challenge that government is facing. And any day it's going to be good news for the government, because they'll be able to stick to their fiscal deficit target, because they'll have more of non-tax revenue, and their center may not increasingly or aggressively have to increase market borrowing. So this more comes in like the emergency RBI fund, and RBI has the appetite to do this because a challenge like this has kind of helped RBI gain more in terms of its foreign assets, and it's in a position to shell out more.
All right, Karishma, thanks a lot for those details. Well, this could definitely be a big breathing space for the government in case we see a much higher, almost 20% higher RBI payout to the government this time around. The 3 to 3.27 lakh crore rupees kind of a help coming in at this point would definitely ease out the tense fiscal situation. Gaurang, how do you view this at this point in time? At this point when the government is already helping out some of the industries, it was first the tariff-led subsidies that were going in for the exporters, and now the government is somehow aiding the oil marketing companies, the gold-related companies. There's so much happening on the import, excise duties front. This is the time when they needed that extra hand from the RBI.
Absolutely, Sakshi. Couldn't be better timing, right, for the government in terms of the highest ever dividend payout by the RBI to the government, cushions the uncertainty and also gives an added elbow room for managing the fiscal deficit. Yeah. And of course, the government has always been proactive. Let's give it to the government. Since the time this war in the West Asia started, whenever it is required, government has stepped up to the call and made changes, added new policies, amended certain policies to give that added comfort to the sectors which are having a direct impact of the negativity because of the geopolitical situation. And my sense tells me, Sakshi, that as we go into the future, till the time this is not sorted out, resolved, and a peace deal is signed, sealed, and delivered, there'll be more proactive steps from the government to cushion the negative impact on the Indian economy overall.
Absolutely. So there, viewers, the RBI may be looking at the highest ever payout to the government, and this comes in very timely. 3 to 3.27 lakh crore rupees of the dividend payout could be coming in for FY27. That's where we are going to be focusing on. Let's shift focus to another breaking news that's coming in on your screens, and this is as per the Reuters report now. And in the aviation space, Indian air safety officials are planning to travel to Seattle to observe Boeing's testing of a fuel control switch panel that was removed from an Air India 787 in February. The move actually comes after pilots on London-Bengaluru flight have actually flagged off a possible defect in the system. The testing described by Indian officials is sensitive, and that has once again brought Boeing Dreamliners against under scrutiny as well. And the switches that regulate the fuel flow to aircraft engines, and the development actually comes in as investigators are preparing a final report into the Air India 787 crash in Gujarat last year in June that had killed 260 people. Remember, for more on this, we also are joined by my colleague Richa Sharma to give us more details on the same. Richa, this seems to be a very important development, especially at a time when the memories, the horrific memories of the airline 787 Dreamliner is still very fresh in the minds of Indians. And, the worst ever aviation crash that we had seen last year. It seems like, some more investigations are happening, and this time as far as the switching system is concerned, that provides fuel to the aviation. Give us more sense as to what's really happening here. What do we expect?
So Sakshi, it's very important as you mentioned the timing because it's just coming. We're waiting for the final report because the crash happened June 12 last year, and within 1 year, as per the norm, the report has to be submitted. And very recently, the Civil Aviation Minister said that the report will be submitted within time frame. And this is a very critical because the whole question during that crash was also about the fuel switches. The initial report of the, the accident, aviation, AAIB, the accident authority, investigation authority said that it was related to the fuel switch. And now what we have learned in this report from Reuters, they're saying that another Boeing 787 Dreamliner, and it was as early as February this year, the pilots reported similar issues that when they tried to put the fuel switch on run, which provides fuel to engines, they did not stay there. And it was only the third attempt that the fuel switches remained at the run position. So it's kind of very sensitive and very important because the Air India crash, Ahmedabad-London crash is also based on the investigation around fuel switches. So now that DGCA officials want to travel to Seattle, it also holds importance right in time before the AIB report is coming, and what the officials have been saying that they want it to be a very thorough investigation and they want to understand exactly what was the reason when Boeing investigating it.
Absolutely, Richa. This seems to be important development, and we'll continue to come back to you for all the developments around the same as well. Thank you so much for being with us on the show and for giving us all those details. Let me quickly go across to the markets now and see how they have shut up. It's 3:30 viewers, 23,606. That's where we are ending at as far as the Nifty is concerned. About 44 points lower in trade. So we gave up most of the gains in the latter half of the trading session, and we're down by almost 0.2% at the low point of the session. The Nifty Bank has also dropped almost by a similar quantum to 0.2% lower for that one. But on the flip side, it's IT stocks that have bucked the trend in this otherwise very volatile setup. 3.2% higher for the index. It's a top moving sector, followed by real estate that was up by 1.4%. You also had the broader markets doing good, over 1% gains here. On the Nifty, again, you have names like Infosys, HCL Tech, Tech Mahindra and TCS among the top gainers. Laggards, you had Kotak Mahindra Bank. You also had Ultratech Cement, Titan Company, Tata Consumer Products and Bharti Airtel as the stocks that dragged in the session today. Some of the big F&O losers, you had Titan, Avenue Supermarts, Cochin Shipyard, Uno Minda as the stocks that have declined. Bharat Forge has also seen some pressure build up in the F&O space, but in the big movers from the broader markets, you had names like Dredging Corporation about 16% higher in the session today. Spark was up. You also had Kirloskar Industries, Somani Ceramics. These were the names that were higher in the session today. Far and few between names that I can really talk about. Apollo Microsystems, of course, about 9.5% higher. Purvankara, Hinge Rectifiers as well. Dhanuka Agritech, another one. Post earnings, it's gone up about 8 to 9% higher. So those are the big movers in the Nifty 500 basket. But let's go across to Gaurang and see some of your questions that are coming our way now. Gaurang, our first question from our viewers is from Durga from Jaipur. She says, sir, could you suggest a safe theme to invest during this volatile market?
That's a difficult one, Sakshi. There is nothing safe in the stock market, very honest. Markets are exposed to all kind of risk, internally, externally, locally, globally. So there is no guarantee, Sakshi, on principal or return on your principal. With this clear-cut advice, and even after that, if Durga ma'am is still looking for investing in the stock market, there are a couple of sectors that are looking relatively attractive, starting with the entire BFSI segment, banking and finance, followed up by defense, followed up by power generating companies, and of course some select cap goods manufacturing companies and capital market related themes. If I have to pick one investment idea, Sakshi, then we've been discussing this particular stock from the defense pack right from the time when it was at about 150 to 200 odd rupees. I'm talking about BEL, Bharat Electronics Limited. It's a good candidate, has got a very decent order book. Equally commendable is the execution run rate of the order book by BEL. So BEL could be an investment candidate, but with a clear-cut disclosure that there is no guarantee of principal or return on your principals. Investment in stock market is exposed to all kind of risks.
Absolutely. Aditya from Kolkata says IT stocks are back in focus. So should I look at investing now or still wait up?
So again, Sakshi, one clarification over here, 5-10 years back or beyond that, IT sector was the spotlight in the stock market when it came to investing or return on your investments. I think with the changing times, new technology, new tools coming in, companies are going to find difficult to cope up to the changes that are coming through. Having said that, we remain positive on all the three aspects of IT, small cap, mid cap and large cap. If I have to name one name from each, then frontline name from the large cap boy would be TCS. Coforge has been buzzing for the last 2-3 days. From the mid cap category, Coforge or Persistent Systems, you could choose either of them. And from the mid cap category, KPIT Tech or Sant Limited. So choice is yours.
Fantastic. So you have a list of names, viewers. I hope you've taken that down. Thank you so much, Gaurang. Always a pleasure to have you with us with those wonderful insights that you share with our India Today and Business Today viewers. And with that, viewers, it's a wrap on the Business Today show here on India Today. In case you too have any questions about your investments in mutual funds, your SIPs, stocks, or coal-related questions, you can definitely send them to us on the number that's flashing on your screens as well. But don't forget to tune in tomorrow morning again at 9:05 a.m. for all the opening action with Abha Bakaya.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.